righty. Ladies and gentlemen, boys and girls. I hope it's live right now. Hold on, wait for it. Oh, where is it? It's live. Hold on, wait. There it is. Good morning, ladies and gentlemen. I hope you are ready. Today is Jerome Powell Day. So, you're watching a 7-hour recap. You could check throughout. Hopefully, we see you here on live. But today is a very, very big deal, ladies and gentlemen. We got a bunch of news. We're going to go over it. But let me just tell you this right now. If you are under the age of 43, you did 3 years at university, and then you joined the financial markets, you would have never worked in an era of 50 basis point hikes. Okay, let that one sink in for a little bit. We got a bunch of other stuff. We got to hear from the Fed. We've already heard from the Treasury. That actually relates to bonds. We talked about it yesterday. We're probably going to do something with bonds. We're going to see how it plays out. Again, a lot of implications today, but that's big. You got the deficit, the United States deficit. That was actually really, really bad. So we're going to see how things play out there. And then you also had the EU talking about banning oil, my friend. So couple of big things. We're going to see how it plays out. I hope you guys are ready. It is a very, very historic day. And where we go from here, man, it's really about to set up the next couple of weeks, if not the next quarter. So, we're going to hear from Powell. A lot of people are talking about it. We got a breakdown. Again, there's a couple of things we're looking at, either balance sheet reduction all the way down to the signaling and what he says about the plan moving forward. So, it is very excited, Jordan. Oh, it's very exciting. So good morning. How you living, Jordano? What's up, Caribou? What's up, Andres? I see you too, Twitch. What's up, New Cat? How you living? Taco? Is that Taco? That's T-Con. I thought I said Taco. Vach, good morning, baby. Forever young. Arabella. Oh, how y'all living? Amin. Oh, it's here. It's here, baby, on Powell Day, bright and early. Bradley, Frizzle, and the Peach. Another perfect game, ladies and gentlemen. Oh, my gosh. I'm sorry. I didn't even give you the horn warning. Oh, that's just how we wake up, dog. I'm just saying. That's just how it is. How you feel? Tell me how you feel. Good morning. What's up, Big Trace? Oh, what's up, Sasha? How you living? Hambe, Casey Race, my man. My hallelujah man, baby. Hey, man. What's up, Carbon Dash? Third Eye Martian. Oh, okay. Third Eye Martian. What's up, Najee Wolf? Najee Wolf in the house. And Malone, Benny Silverio from the Bronx. Y'all got Usha showing love all day. Oh, I hope you guys are ready. I hope you're ready. Good morning. Good morning, Carissa. Good morning, Boomer. Good morning, Nepal. Oh, the Solomon Peck. Oh, I saw a huge peach. Will you email the pic? I would love to take a look at the huge peach, honestly. The peach culture here. Oh, Babinski. Are you guys ready, man? It's Powell, baby. So Powell's a big, big deal here at the Colt. And again, I wouldn't get you hyped up for no reason. I hope you guys know this one is historic. That's it. The only way to put it. We have not seen this one in a while. You're going to see something today. We're either going to break a 40-year precedent, which I highly doubt, but it looks like we are pretty much going to hit the other one, man. Okay? Oh, McPlayer, thank you for swinging back for the raid for Calvin. I hope it was awesome, man. I hope the chat was good. I had a lot of fun. Oh, wait. Why do I hear myself? I had a lot of fun there. I was listening it to the background, bro. He was getting on the Desperado. Bro, I was getting hyped. It was beautiful. So God bless you, man. Thank you. Thank all of you. It's good to see you guys in here. Let's see what we got. He was clean, bro. It was dope. It was dope. I almost pinned the, what's it called? If stream lags. There you go. There you go, baby. Another beautiful day with the Colt. Another beautiful day at the Colt. So get ready. Get ready. So, let's see what we got, ladies and gentlemen. Let's see what type of news that we have available. You know what I'm saying? That's what we got to find out. It's game time, baby. Okay? I hope you're ready. I hope you are ready. Are we tanking today? We're going to find out. The Fed is set to unleash its most aggressive action since 2008, but the main focus is whether even bigger moves lie ahead. FOMC will probably raise rates by 50 basis points and also detail plans to reduce its bloated $8.9 trillion balance sheet. Jerome Powell may give clues on whether a 75 basis point hike will come in June, as some traders predict. As for his views on the risk of a recession, Jamie Dimon warned this morning that there is a 33% chance of a severe recession in the United States as a result of Fed delays. He sees the same odds on a mild recession and on a soft landing. We're a little late, he told Bloomberg. The sooner they move, the better. The Treasury trimmed its quarterly sale of longer-dated debt for a third time in a row and unexpectedly advised that it may make further reductions, citing strong federal tax revenues. It will sell $103 billion of long-term securities, down $7 billion from February. This marks the longest string of quarterly cuts since 2014 and 2015. In a surprise for some dealers, it is also trimming sales of 2-year, 3-year, and 5-year auctions in coming months. So, ladies and gentlemen, if you guys do not know about this one is actually very important. You have to ask yourself, why does the Treasury lowering their debt matter? Because right now, if the Fed is tapering and the Fed is lowering the amount that they are buying, if the Treasury is lowering the amount that they are selling, anybody? What's going on? Does anybody know what's happening? Does that make sense to you? That means something specific is going on. Do you know? Do you get it or no? Are you following with me? I hope you're following with me, man. Equilibrium, supply and demand. That's it. So think about it now. Fed is cutting the amount of demand and how much they are buying. So if the Treasury lowers the amount of bonds that they need to sell, you are lowering the supply of debt while lowering demand at the same time. So the idea is this should somewhat balance, everything else, or at least some of the Fed leaving, if that makes sense. So keep that one in mind. But markets struggled for direction before the Fed. Futures rose while global stocks fell. Benchmark treasuries gained, but European equivalents trended lower. India's 10-year yield jumped to the highest since 2019 after a surprise rate hike by the RBI. Dollar weakened and oil and Bitcoin rose. The EU, this was another update. 25 months alert, baby. DeQuavid. It's David, but I'm going to call you DeQuavo. DeQuavo, my man. God bless you, baby. The EU ratcheted up sanctions on Russia. It will ban oil imports over the next 6 months and refined fuels by year-end, confirming media reports. The proposal also bans European vessels and companies from providing services, including insurance, linked to transportation of Russian oil and products globally. The EU is also proposing the cutoff of Sberbank from international SWIFT payment system. Member states meet today to discuss the proposals. In Ukraine, Russia wants full annexation of territories it occupies, ordering locals to use rubles and planning referendums to cement its control, people familiar said. President Zelensky said 156 people evacuated from Mariupol steel plant arrived in Zaporizhzhia, but 200 civilians remain trapped. This one's awful. Lyft plunged 26% pre-market after outlook missed, sparking concerns that planned increase to driver incentives may outweigh profit. Uber, by contrast, beat on sales and gave an upbeat forecast. Wait, what? Uber has not reported yet. Did they? That makes no sense. I thought Uber was after hours. It says Uber is already beat on sales and gave an upbeat forecast. They reported earlier? What? Oh, scammers. Why would they do that? They're like, fuck it, just get it out the way for the Fed. They're like, we got Powell today. That's it. They said, just let it happen. They said, it don't matter, just go. Just get it, run it through. You know what I'm saying? Run it through. Yeah, they said Lyft is there. Just run it. Just it's fine. Pat, just get it in the morning. Nah, we good. I woke up early today. Just play it in the morning. Nah, it's fine. Moderna was up as revenue blew past expectations. AMD jumped after a strong sales forecast allayed concerns about the chip market. Marriott beat amid vacation bidding up room for rates. Maersk said it lost more than $700 million first quarter from exiting Russia. Didi slumped 7% after saying it's coordinating with the SEC probe into its chaotic 2021 debut. Elon Musk may take Twitter public again in 3 years, the Wall Street Journal reported. Our market's rigged. Bill Hwang case is just the first in an upswing of federal probe. probes into a slew of suspected trading abuses. Other sprawling inquiries have emerged recently examining block trades, short sales, and well-timed wagers. U.S. distillate stockpiles are flashing distress signals. Inventories fell below 4.5 million barrels last week, API said to have reported. That would bring the total inventory to the lowest since 2003 as high exports and summer demand continues to deplete. Milken, the Fed is not out of bullets to fight inflation, said Oak Hill's Glenn August. It hasn't even started to shoot. It would take more than a couple 100 basis point hikes for a deep recession. Europe may be sliding into a distressed investment cycle, but Canyon's Josh Friedman said investors are rushing to take risks, but distressed investing gurus agree to steer clear of Russian debt. Upward momentum in the dollar looks fairly extreme before the FOMC. The dollar has been effectively overbought against virtually all G10 currencies, and the yuan is looking at the 14-day RSI of each pair. If Jerome Powell largely sticks to the script and doesn't tilt even more hawkish, current positioning may bode ill for the greenback over the short term, and that is a big if, though. Okay, big if, though. 9:45 U.S. April services composite, 10 a.m. April ISM services, 10:30 EIA U.S. oil inventory report, 2 p.m. you're going to get the Fed rate decision, 2:30 for the press conference, and then 5:30 for Brazil rate decision. And then are you ready for this one? I got a better one for you. Jerome Powell, he has his scheduled meeting at 2:30, and in between that meeting, Joe Biden is set to speak. So it's a very interesting one. I don't think we have had that where the president has scheduled a meeting or a speech while the Federal Reserve is talking. So fun fact, that is happening today. So on top of all of the history, yes, on top of it, earnings include Barrick Gold, Berg, Warner, Amherst, Virgin, Yum Brands, New Source, Allstate, Sunrun, CF Industries, MetLife, Marathon Oil, iRobot, Etsy, TripAdvisor, eBay, and Core Civic. House prices can endure an even bigger Fed hiking cycle. Midterm elections may be decided by suburban women after a leaked draft opinion indicated the Supreme Court was posed to overturn Roe v. Wade. Their votes helped determine the winner in the last two presidential contests. VP Kamala Harris has argued the court's decision would open the door to justices stripping away other rights, including same-sex marriage. Donald Trump backed venture capitalist J.D. Vance. He won the Republican Senate primary in Ohio. AP reported Madison Giuseppio Gilbert also backed Trump, won the primary for the state's 13th district. And the Democratic Party for the 11th, incumbent Chantel Brown once again defeated progressive activist Nina Turner. Pray for finance workers in the UK. They surged at double the pace of the rest of the economy. Oh, pay for finance. I thought I said pray. I thought I said they may double their money. Pray for them. I'm like, what? I don't get it. European job market is stalled since Russia invaded Ukraine. A survey showed there are fewer help-wanted ads on job search websites. Indeed, in the week of April 22nd, there would have been if there was a pre-war growth trend continued. Shop price inflation accelerated to 2.7 in Europe in April, most since 2011. Manufacturer confidence posted the sharpest drop since the onset of the pandemic. In the last 3 months of April, the CBI said credit card borrowing is set to jump almost 8% to a 5-year high, and the cost of mortgage borrowing has jumped the most in 6 years. In March, the effective rate on loans is 1.73 in England. Very low still, very low. We'll talk about that. That relates to the low rates and negative rates in the UK. Asia Pacific, the RBI hiked its repo rate 40 basis points to 4.4 in the reverse repo by the same amount in a surprise move, sending bonds and stocks crashing. Persistent inflation pressures are becoming more acute, Governor Shakitanka Das said, adding there is a risk expectations become unanchored. That's what you're going to hear. The RBI has probably front-loaded its hikes, RBL has said. BOCOM China strategist leaves. Australia retail surges. Jamie Dimon, more from him. He warned that the turmoil in commodity markets caused by Russia's invasion may get much worse. The war is causing complete turmoil, he told the Irish Times. Wheat futures spiked in Chicago. If you don't know, wheat is up 4% right now after a report that India may restrict exports as severe heat waves damage crops. Soybeans and corn also advanced. The number of people going hungry is set to surge after already jumping 25% last year as the war in Ukraine sends food prices even higher. Oil climbed as the EU proposed to ban Russian crude. Copper and aluminum rose. Another peach, baby. We got a peach and a coffee. A red coffee. It looked like communion, baby. Amen. Amen. No credit card companies are looking to offer deals. Just Eat launched an investigation into COO George Gerbig after a complaint over personal misconduct at a company event. So he might leave the board immediately. Airbnb gained with its forecast beating, and the company saying it sees substantial demand for travel heading into the summer. Starbucks rose with U.S. sales offsetting inflation. Still, comparable global sales missed as they dropped 23% in China. But Starbucks is up 6% and Airbnb is barely up. Aston Martin, they gained after reporting earnings beat. CEO Tobias Morris will step down with immediate effect to be replaced by former Ferrari boss Emilio Felisa. Equinor beats estimates as energy prices boost cash flow. Honda launches 25,000 hybrid electric sedan in India. UK warehouse stocks sink and Amazon bemoans too much space. Glencore has the worst human rights record among miners and metals. Cash flowing into ESG. JP Morgan rehires Aviva Singh to help oversee ESG FIG deals. Watch Asian chip stocks after AMD's upbeat forecast. Washington is wild. A fox from nearby Rock City killed 25 flamingos after it got into an enclosure at the National Zoo in D.C. A northern pintail duck was also dead. Jeez, that sounds aggressive. There was a zoo massacre, bro. Shit. Travel hacks for the super rich. Christine Chu, one of the stars of reality series Bling Empire on Netflix, has some tips. Avoid visiting a city during Fashion Week. Make friends with the hotel concierge. And if you want a private tour, consider donating to the relevant foundation or a restoration program to see what's possible. There you go. New Jersey will become the first state to ban both plastic and paper bags on Wednesday, leaving companies and shoppers to find creative workarounds. It will charge $150 for reusable bags, and even Instacart will charge a fee. Everything is getting more expensive, even facelifts. New York Times report, one woman traveled from Texas to New York for surgery, shelled out $230,000 for a nip tuck. Wow, that's crazy. Look at that. It's so much. It's so expensive. So expensive. On this day in history, are you ready? This one's kind of weird. Why do they get so dark sometimes? On this day in history, the Haymarket bombing took place in 1886. I don't know what it was, but I just looked at the time, baby. Oh, we got to get the American flag in here. Oh my gosh, I thought we were early. Why did I think we were early, baby? Oh my gosh, ladies and gentlemen, boys and girls, it's game time. It's history in the making. I hope you're ready. But before we do anything, we must pay homage to those people, man. The ones who have sacrificed more than most of us ever have and ever will, baby. And that is the veterans of the United States of America. So on behalf of the cult, the people here, the people not here, we want to give a huge special shout out all the veterans, active servicemen, past servicemen, anybody who has served this country. God bless you and thank you for doing what you have done. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Silence! Oh, it's game time, baby. Or nah. Oh, let's go, Chad. Let's go. You still got time. You got 1 minute until the bell. The Jets have been sent. Are you ready? Are you ready? Are you prepared? We got a couple of plays to watch. Again, post-earnings, even TLT. Even the bank stocks, don't forget about that. AMD, Airbnb, Starbucks, they are up. Lyft got clapped. Uber, I guess they came out with earnings. Conoco and oil, again, EU ban news, and anything with commodities is pretty important. We'll see how Powell gets in the way. And then TLT, Wells Fargo, and then lithium, LTHM, hype earnings play. They doubled up on guidance plus hype of lithium. So here it is, baby. 2, 1. Round 1. Fight. Ba-da-ba-ba-ba. Let's go, baby. So call out any plays. Let's see what we got. Uber. I can't believe Uber already came down. Hopefully Airbnb. 5%. Hopefully that thing rockets. TLT is going negative. That one's interesting. Yeah, gas is going to be up. Again, that EU ban there with The EU and Russia, that's going to be big. Again, wheat and commodities are already going up. Oil should stay up for a little bit. Let's go. Shout out to the vets, baby. Lyft opens 28, biggest decline on record. Ford April sales dropped 10.5. Could be worse. I think Tesla was the only one that did good. And again, AMD, if those keep killing, that one could be very, very good. It sucks, though, because with any of these continuations, Powell could get in the way. That is the only issue. Let's see. Lyft drops 29, biggest decline on record. Lots of verde, lots of green. Trying to see. Man, some of these plays are crazy. AMD, UNG's up 8. Oh, man, that weekly would have been great. We still got one more on there, but yeah. Again, just a lot of oil commodity news overseas. Again, what the EU did was big. Uber falls lowest since May 2020. HLF down. No, that's far, man. That's far. I'm looking at different plays. Chewy, Uber, QQQ, Nat, some big ones. Oil tankers. UNG still going up. Let me get AMD. Airbnb is not doing anything crazy. SPY's about to go red right now. NASDAQ is already down, and Dow's dancing with the SPY. And then TLT is dropping. It sucks. There's a couple of TLTs, but TLTs are still kind of expensive. Let me check TBT. SPY's coming down. Starbucks, I don't know. I mean, their U.S. growth offset inflation. That's the only thing I could think of. Let's see. You shopping TLT? I'm shopping a lot of TLT. There's already been a move here now, so we're going to see how we're going to do it. It's still early, and I think even right before the meeting, the hard part is time right now. Applebeam, we just honestly just sold straight off from here. Let's see, Lyft, mega clap. I mean, worst in history. Even AMD's coming down here too. I got TBT and bonds. Airbnb doing nothing. Bro, Airbnb, I mean, we haven't even got any, what's it called back. You haven't even got any, like, updates on the analysts. I need to double check that. Okay, I made one play right now. And this one, we're going to talk about it. This is based off the video, but I very well might go both ways. Let's see. PLL up another 4. You could do TLT butterfly, but you better know where exactly the rates are going to end up. That is the only risk, my friend. That is the only risk. So don't trade this. Not a recommendation. You will lose money. I did a TBT call for June. And then I have an idea. Let's see if that keeps going. Okay, then I have another play. Gonna wait a little bit. Airbnb did wake up. It's up 7% now. That's at least good, but I mean, it sucks that they dropped 7% yesterday. You know what I'm saying? They put us in a weird opportunity. SPY bouncing a little bit. Okay, I made this second play now, and you guys are gonna see how we set this up. This one is gonna be risky though, because pretty much I did 2 different dates, and we're going both ways. You're gonna see what I'm talking about. I know the Uber, bro. I can't believe they moved up their earnings and then even Lyft, but I guess they kind of dealt with the same thing. So we're gonna see Lyft is just higher costs. They're about to clap them. That's what they say. And then they missed on the amount of drivers and riders and all of that stuff. So we'll see. But don't trade this. Not a recommendation. You will lose money. I just grabbed a TBT. I grabbed a TBT put. Yeah, we did puts and calls. So pretty much playing TBT both ways. It's very risky simply because the break evens. We need to make a certain amount on the Junes, but this time I grabbed a May put a little closer to the money. So this is what I was talking about yesterday. I think there's a chance that it could play out like a couple scenarios. It looks like we might get some level of rates going up a little bit, but depending on what Powell says, it could either put in the top on rates and we could see rates turn around, or that's it and we get a little bit more of the rates going down. So that's kind of what I'm keeping in mind right there. It's going to be good. Newegg on watch, Airbnb on the low, Lyft, Airbnb on the high, Lyft on the low. Where's AMD? They're still chilling. Powell's going to come on at like 2:30. We are going to see. Ba-da-ba-ba-ba. NTR is up. You buy 50. I pretty much spent $400 both ways. I think you could play it a lot smaller too. It doesn't matter, but the break even is going to be difficult when you're playing both ways with the bonds. And I think I'm going to be able to go. I did 400 calls, 400 puts. So I think I'll be able to find another even opportunity with this one. By the end of the day, we'll see even before Powell speaks. AMD selling off, Airbnb's going up, NTR pop in. Watch the banks too. Again, those ones could be in play. Yalla, BNB. Yeah, the NTRs from yesterday, they're up 70%. They're actually looking nice. XOM. You write out the May 20th. Yeah, they're dead. I mean, unless we get Europe coming down. I mean, we've already seen the stock drop 10%, but it's just not quite there. If we get any like crazy volatility, they could come back. Otherwise, they're dead. I'm still waiting to average on the EWGs for more time, actually. SPY's coming up. I put 400 on calls, 400 on puts for TBT. Pretty much it's a volatile TLT. But very, very difficult, again, because pretty much the put and calls both have their own break even. So I'm pretty much betting on a bigger move between May and June. So the puts have shorter term. The calls are a little bit longer. So it really just depends on what the rates do from here. But they're at a breaking point. I mean, you could even see it. It's just one thing. That's one thing I'll show you guys here today is like when we look at TLT, in a weird way, volatility has not emerged like you saw it. That's the crazy part. So I know you see it going down, but if I go back and show you the past TLTs, you'll see what I'm talking about, where this thing hasn't moved in the sense that you haven't had a bond market you haven't had TLT freak out yet. Essentially, the volatility has not actually picked up to a crazy degree. So we're going to see, but again, a lot rides on today. I think today is historic, the first time in 20 years, but we'll even see. I do believe, I'll tell you this right now with the TBT, I think even after the Fed meeting leading into tomorrow, I think you will have an opportunity to play it. Meaning that you don't, even if you don't make a play today, I don't think it's going to be like crazy. Like, I don't think it has to go up today. If it does, it'd be nice, but I don't think that has to be in the cards. High and lows. Not stop moving, and we're just barely staying green here. NASDAQ is now the one that's down. Dow barely up, and then SPY just right there in the middle. Meetings are frequent. We actually haven't had a meeting in 2 months. So last time you had a Fed meeting was March 16th, and then now we're about to, the next meeting is in a month from now, which is shorter, but we've actually waited like 2 months for this one. XOM coming down. I'm surprised AMD selling. Even Airbnb, I mean, they're up, but they're holding up a little bit, but we will just see how everybody trades this. Expedia is still down. Uber crushing Soul. So that's at 28 now. Airbnb is up. Where's JP Morgan? And then when's Roblox's earnings? Because now it's either banks or Uber. We're expecting new info, not today except for the Fed. It's up to Powell. If Powell wants to give more guidance over the next couple months, if he wants to explain the balance sheet in depth, then yeah, we're going to have more info. If not, he's just going to do the double rate hike, and we'll see the extent to which he touches upon the economy and any future plans, if they're even thinking about it. Banks just skyrocketed, or at least JP Morgan did. Wells Fargo, 1% at the top. They keep going up now. UUP is very similar to the dollar. It's an ETF of the dollar, but it's not necessarily the dollar. I can't type that in. UUP is down right now, which is interesting. Let's see how TLT plays out. Where's the wheat? The wheat came down a little bit. Again, corn and wheat, but especially wheat. Big news there. Airbnb new high. SPY is just right at VWAP, slightly below where we opened. Airbnb killer earnings just to be where we were on Monday. I'm playing TBT. I heard about the silver raid affecting silver market. I don't know. Maybe this time around it may have an effect with some of the more supply chain shortages, but usually any sort of like silver raid or trying to like go after silver's rigged is the best way. And then, and how it's designed and set up. It's not really something that squeezes off of supply demand as you would think. These widespread TLT 100 June 22 150 calls worth the hold until dead. How much are they worth now? I mean, if this plays out like 2000, so I don't know if you guys got the watch list yesterday. Pretty much, if the rate hikes today play out like 2000, TLT is going to skyrocket up, believe it or not. So if this plays out how 2000 in, rates go up. The difference was in 2000, we already had like 4 or 5 rate hikes before the double cut that led into it. If it's going to play out like 1984, or if it's going to play, or 1987 or 1994,
it pretty much rates TLT is going to go down a little bit, and depending on the level of volatility, TLT will start going back up once the volatility is dissipated, or if it leads to the Fed changing policy or something of that nature. So 2 out of 3 times TLT went down. 1 out of 3 times in the most recent time, TLT went up. And it's understanding the differences and understanding the time frame. Both of them had a run up into it, and both of them allowed a little bit more rate pressure, but it's, again, the situation depends. So hopefully you guys picked up on that yesterday, but that's pretty much the big thing we're talking about today, is how this is going to play out, just because this is an event that has not occurred in 20 years. Just simple as that. And every single time there was, it had a different, it played out very, very differently. And ironically, 2 out of 3 times, I think 2 out of 3 times, all paralleled with massive volatility in the market. So why do you play TBT? TBT is levered. I'm hoping it could go a little bit crazy, and then that's it. It's a lotto play for now until we get more clarity. That's why I'm saying you could wait until Powell speaks, and depending on what he speaks, that may very well just give us an easy ticket. So we'll see what happens. I bought a call and a put. Less time on the put, more time on the call. But we're going to find out. Is the gas different now at the gas stations? I don't know. $75 minimum. So you still think Europe is going to go down the timeline? Yeah. I still, it could take anywhere in the next coming months. It could happen sooner. It could happen faster, but that train is not departed course. You know what I'm saying? Like, all that's gone by has been a lot of time, and it may not have seemed like things are happening, but everything is still moving in that same exact direction. So I'm still worried about it. Even today, we got to hear about it. We got to hear about the EU and what they're doing. But now let's get around earnings. Let's see what Powell says, because whatever Powell says today, this could very well set up the next quarter, or this is at least going to give us guidance for the next month until we hear him again. How do you think India and wheat? It's already reacting. I think it could last for a little bit, but I think it'll slowly increase the price until, the cosmic cycle and whatever news we get. And then by the time we see any of the hard data, just the fundamentals of, do we get people planting? How much? What's the data? What's the harvest? And then simply just go from there. So Wells Fargo coming up. Bless you. You get to continue the rental. Let's go, baby. Enjoy it. Airbnb clapped. I know. Sad. Very, very sad. Good earnings. Very good earnings. I'm happy about the fundamentals. Disappointed in the market reaction, but at the end of the day, that's all I need. All I need. After yesterday's earnings with Airbnb, I mean, it solidifies my beliefs even more on the fact that it's a good company. It's getting where it needs to. But, in this volatility, before this earnings, we were at 170 with people not even knowing some of the numbers on the background here. They're up 8%. They're up 8%, but they dropped 6% yesterday. So you're literally $2 above where we opened in the first hour of yesterday. And that's after 81% profit beat and growing over 100% year over year. They're doing double the revenue that they did in 2021. So if you compare it to like this quarter, I think, where would it be? Like around this quarter, and they were at like 220, they're doing double. So keep that in mind. Double revenue, even their profit. They beat EPS by 10 times. They were expected to report negative 30 cents a share. They reported negative 3 cents a share. So it is what it is, but it's good. They'll pop eventually, I think, with that. But either way, like I said, no matter what, my fundamental view of it, the company got better fundamentally, quarter over quarter. So I could at least accept that. Apple, SPY coming down. Banks are going up. AMD's at the bottom. They're still only up 4%. Still up a decent amount. Apple's up 0.9. Mexico to boost production at southern border. Amazon down 1.3, about to fall through the bottom. Netflix down 2. I think Apple's the only one that's up, and so is Microsoft. Apple and Microsoft are the only ones that are up. When is Amazon bottoming out? Tell that to the stock market, man. That's crazy. They going crazy. Micron new high. Oh, that's good. I forgot. Check Intel too. Micron's up 1.5. Intel 0.18. Nvidia is surprisingly down. Qualcomm's coming up. Uber a little bit, but still down a lot. SPY's even about to come down. Bonds are about to follow along with it. Well, that old Qualcomm earnings break even. Myrna had good earnings. I don't know if they ended up coming down. I don't know why. Their guidance is so strong. All the vaccine companies, their guidance has been very good. They sold off, though, now. So they're red. Expedia. Boeing's positive. They were down in the morning. UAL is up. Any long-term picks? Yeah, either JP Morgan or Uber. I would like Airbnb, but it's a little higher maybe if it comes down after Powell. Hold on. HSBC DR spinoff. Circulate Deer Reporter. Keep an eye on that one. Spinoff chatter. It's coming from Benzinga, so just be careful. Early repurchase. Oh, that was Reuters in the morning, though. There was something early in the morning. That could be a recycling of HSBC news. So HSBC to meet with largest shareholder Ping An to discuss spinoff. So that was at 7:30. TLT coming down. Jake from State Farm. What's up, baby? God bless you. God bless you. My out the money Airbnb calls about yesterday be down. They expire this Friday. Because if it's out of the money, so by Friday, today's what, Wednesday? You have 2 days to get in the money and what's your break even. So whatever you paid for it, you got to get to that strike price plus that much in the money to pay for it. Any thoughts on the LGIH? Home sales down. Doesn't be good for them and the competitors. Foreshadowing. Not really. I mean, it's something we've seen in a lot of the companies. Related, even just anything, real estate, building, materials. Again, check relative to guidance, check year over year. But, I mean, if anything, I would just watch interest rates. Just watch if interest rates make things, invest pretty much sensitive. You roll in NTR till June. I think I have one till June, right? We have a June one that we bought yesterday. We have another old June one or July one that came back to life. And now the short terms for May, those are the only ones that are down. Analyst, Airbnb. Most reliable, stable opening in a while. Let me check the, what's it called? I want to check Airbnb. What did them analysts say? Airbnb at levels. SPY coming down. So we'll see. Yeah, this morning, Airbnb, bro, it got price targets all across the board. Same thing as yesterday. Airbnb cut 210 from 235, so still a high price at D.A. Davidson. 145 from 175 at Morgan Stanley. 180 from 205 at Stifel. 175 to 205 at Mizuho. Bro, it just got downgrade after downgrade on that one. But all of them are still like 45% higher on the year, if that makes sense. JPM raised it. That one I don't see. The first ones I'm seeing, I'll say downgrades, or at least they just cut the price target, but then kept the weighting. So they're maintaining the same amount that they have. Let me see. Spot double bottom. Well, again, I mean, we're only going to move so much. Just keep that in mind. You got Powell here in not too long. We reacted to a decent amount of earnings, but we're going to see. Yeah, everyone, I guess, this morning, D.A. Davidson, they gave them a buy rating. Jeffries gave them a buy rating. Today's May the 4th. It actually wasn't that. It's weird. People cut the price targets, but there's a lot of buys, pretty much. So there's one out of what? 5, 6, 7, 8, 9, 10, 11, down there. Out of like 28, there's 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13. 13 out of 28 are buys. And then, but so pretty much only one is a sell, Morningstar. So it's an interesting one. I guess they just didn't raise the price targets, but it's not as if like people cut the stock. Chads, may the 4th be with you. Indeed. What a day for Powell. What a day. May the 4th. My goodness. Amazon down 2.3. See if Apple turns around. Again, that thing is still holding. 810 Networks gains analyst positive report. Today's my birthday. Happy birthday, Hambe. Oh, my gosh. May the 4th. Happy birthday. Or nah. Spy coming at lows. I have to wake you up. Spy's coming down. Let's see. Not too crazy. Back to 416. Again, to give you context for the last 3 days. I mean, you're kind of right below that first high of Monday before we hit that new low. But see how this one plays out. Again, I think we got a lot of cushion coming into power. I don't think we'll see anything too crazy, but you never know. Happy birthday. It's a good time. Good time for a birthday. Good time for a birthday. You made it, man. You made it. Growth stocks didn't make it this year, but you made it. That's it. You know what I'm saying? About Affirm. I think it's a decent company. I mean, we flipped it. It's something I don't use Affirm. I feel like it would be here for a while, but it's not something that you have to go crazy for. And let me give you a tip of advice. If you guys ever buy something and it's like you liked it at one point and let's just say it's not performing right now, you don't have to be so dramatic about it in the sense where just start buying other stuff in the meantime. You know what I'm saying? So like if you really want and you're kind of on the fence, just let it do its thing. Hold what you got. You don't need to average down. You don't need to sell it, but you could use that time and just start building out other positions while you give it some time. Sleep on it for a little bit and let it do its thing. And that sometimes could be the best way to go about it. You like China? Not the biggest fan of some of them right now. A lot of people are worried, but I think it all really depends. Airbnb. They're coming down now, low of the day. Again, Apple is still up. So is Microsoft, but Microsoft flipped now. Facebook is positive, or was earlier, but not anymore. So we're going to see. Datadog down 8. They report tomorrow. Real estate ETFs, I think if they keep getting beat down, I think there might be a good point to get it at. A lot of things are starting to sell off. Wheat's at the bottom. Oh, Amazon. Oh, Uber. Oh, bro, I can't believe they moved up their earnings. What asshole. Ultra is going up. SPY, new low. TLT bouncing a little bit. Tesla's even now 1.1. We bought TBT. Real estate is going down 40%. Didn't you say you're like a real estate person? And like you have like a really big real estate team? Shouldn't you be helping your clients and telling them this and not betting people that the market's going to crash 40% for $1,000? You know what I'm saying? I feel you, Bob, and we need to finalize the bet, but I don't know. I don't know. It's so weird. It's so weird to be like, I bet with this guy. I bet with the real estate agent. It's a long story. It's a long story. How many hours for Powell? Like 3, I guess 10, 11, 12. No, he comes on at 11. 11:30 is when you hear him. 11 is when everything comes out. SPY coming down. Oh, man. This one's crazy, man. This one is crazy. Let's see. It's like 2. I think tech is the weird one. Bro, tech is the one that's down 1% right now. Real estate is going to crash 60. Well, y'all should prepare for it if that's what you believe. You know what I'm saying? I hope you guys make money for it. I hope you pray for me that I don't lose my money. But either way, opportunity. If you see something that nobody else sees, or if you see it, I would find your way to profit off of it. Is the best advice I could give. As simple as it. It's weird. It's weird because tech, I don't think it's weird. I think it kind of makes sense with the rates, but things just aren't moving that much today. And then all of a sudden, you got tech down like 1%. BTTX, Amazon at the low. B&B fighting with the low of the day, still up. BTTX, Better Therapeutics, $1.95. It's up 5% on the high. Roblox GLD, we did not look just yet, but again, what I told you the first time, I really think this has to do with China. I know it may sound weird, but again, like any sort of metals, commodities, pretty much, even though gold is a protection asset, there is a little bit of that feeding in, so I'm kind of looking at them side by side. Yeah, I grabbed TBT both ways, not TLT. The 40-year will be the new standard and will fuel a real estate bubble. All it sounds like to me is that you've been watching this channel. You know what I'm saying? I think you know the next steps. You know, I think you understand. It ain't going to go just from, oh my gosh, record high real estate to crash. At first, it got to slow down first. And then we've seen what they'll do in this economy. If they will hand out free economic checks, I don't think they're going to purposefully crash real estate. I think they were, what's her name was talking about that today? Barbara Corcoran. What's her name? The lady, the real estate lady from Shark Tank. They were talking about, how the Fed really doesn't want to crash real estate. I mean, this has been a bright spot for them. So it's not really something that they're looking to do. Where it would have a lot of implications and again, essentially just respond to the real estate or the interest rates. But what she was saying is that, even then she's not really worried, given the fact that the leverage, just like last time, it's not high. TBT is like the UVXY of TLT. It's just a levered index of TLT. Biden moved conference to 11. I know I said that today, but it's 30 minutes before, but pretty much this is the first time ever Biden has scheduled a conference or to speak while the Fed is speaking. It's very weird. I mean, we've never seen that. You've never had a day where we're like, oh, Jerome Powell and Joe Biden are on the same day right now. What are you supposed to talk about? I don't know, man. Yesterday I looked at the title. Like yesterday I was just looking at the title because I didn't even know what he was saying. Does that make sense? I had to go and look back at the title to get a better idea. That means he's worried. Could be, but we'll find out. Economic growth, jobs, and deficit reduction. So weird. Just let Powell talk about that. Like, you know what I'm saying? Like, I respect the president, but just like let Powell talk about the same. Just change the title, keep the same title, and just change the speaker, and that's it. And boom. Yeah, Abbey Vice going up. It's still negative, believe it or not. It's no good, but we'll find out. Again, at the end of the day, what I could tell you is that this is still going to be a multi-day reaction. That's it. This is going to be big. This is history. You have not seen this in 2 decades. Again, let me read this to you one more time. Are you ready? I know we got everybody here, so can you like the video for me now that I know you're here? It's not a positive message, but if you hear my voice, let's just break. I know you're here. I know you guys are here right now, so just help me out. Like the video because I'm going to give you a crazy fact about today. I'm going to give you a crazy fact. It's a crazy quote, and it makes a lot of sense. I don't know if they're going to feel me on this. There you look at least 100 people, baby. So what happens 2 decades ago? Did the market drop massive? Man, all I know is in the last 24 hours ago, you didn't watch the watch list, though. But that's what I made the watch list on. So yesterday's watch list, if you go and look at it, we covered every single double rate hike, pretty much going back to 1987. I think I ignored 2006, but there was like a mix of a lot of things. So, but I would go look at that. But, you know, like the video if you hear me. I love you. God bless you. Shout out to, we did break the like resistance. So this one is not a positive message, okay? But let me just explain this to you. Here's to let you know about the historicness and what's about to happen. Jerome Powell today is about to do a double rate hike, a rate hike of 50 basis points. And what a lot of people don't realize, this is very uncommon, and most of you have never dealt with this type of environment with a double rate hike, pretty much 50 basis point rate hikes and double hiking and all of that. Most of you have never dealt with an economy like this, okay? It's very simple. If you are under the age of 43 and did 3 years at university and then got a job on Wall Street, you would have still not have worked in an era of 50 basis points. So everybody under 43 who went to college and then went to a financial job has never even experienced this type of environment from the Fed and what they have done. So that's why we're bringing this up. That's why we went over everything. So some of you are 23, so roughly double your lifespan. This has not occurred. Simple as that. And so this one's going to be crazy. To a degree. I don't think it's going to be like 2019 when we hit that other TLT, but there is very similar there's similar stuff going on. You know what I'm saying? And it's just something we have not seen. But that's why it's like whatever he says right now, wherever we go, that's why I went over the watch list yesterday. I really encourage you to go watch yesterday's watch list. We're going to talk about it today probably, but at the end of the day, I really think you should know what happened at these moments. And every time things have happened, different responses. 2000, the market didn't get clapped. 1994, the rates went up a little bit. The market kind of got clapped, but then ended up into a decade better. And then the last time in 1987, it led to one of the biggest stock market crashes everybody knows about, the 1987 Black Monday. So it's a very weird one. So literally, not always instantly, pretty much like 1987, 8 months later from the first double rate hike, the stock market crashed 15%. In 1994, it took a year for the rates to come back down, but even the rest of the decade led to a massive rally. And then in 2000, about a year and a half after their first double rate hike, you saw the tech bubble collapse. So different ones, but just different history. And that's why I'm like, dude, it's a very it's not as clear-cut as you want it to be, and that's why I think it's volatile as fuck. Just to be said very simply, is that there is so much on the table, and when we look at history, it's just bounced all over the place. But pretty much, this is what I want to tell you, they don't do this double rate hike for no reason. That's it. It's unique, yes, but it's like anytime you've seen this in a 12-month time scale, like this is low-key like a bazooka. Does that make sense? Where they are pulling out a tool that anytime they've done this tool, it just the track record is like, it's like when they brought out the javelin, in honor of the javelin from it's like a javelin, yeah, it's like javelin or javelino, depending on what you gonna name your child, bro. That's crazy. That was so that's why it's like we'll see what happens. But this is kind of a behind the curve tool, but it's a big tool. And anytime they've done it, it's like there's always been a lot of carnage. So that's what I think is important about it. So I hope you guys are ready for it, Chad. That is all today. All here in a couple of hours at 11 a.m. Pacific time, 2 p.m. Eastern. Hope you're ready for history, baby. Hope you ready for history, baby. It's gonna be good, baby. It's gonna be good. Amen, amen. Amen. Inflation, unemployment are lagging behind the curve. Can you enlighten about Uber? They moved their earnings up. I didn't even get to see the report as much, but I just heard it was the same exact thing as, what's it called? As Lyft. What was it? Let me find it for you. 95 recovered business. They were up for a little bit. Canada increased 70%. I don't know why they did that. That messes things up so much. No, it does look like it was different, but some people said, where was it? Adjusted EBITDA, they guided 240 to 270. Revenue was man, I'm so mad they moved it around. Now it just makes it hard to get everything. No, it's like right there, but still. Revenue was 6.8 versus 6. Where was the weakness? They had a 5.6 billion headwind on it. Probably Didi equity investments. Expect meaningful positive full-year cash flow. I don't know. I think they even guided up a little bit, or they raised the range, but I just don't think it's changed from last time. They spent monies. That's it. I could see that probably. That would make a lot more sense. Weakness was Didi and fuel costs, but they shouldn't be down. I think Lyft is probably giving them more of a bad look, but I'll actually take that. And then $26, man. This is it. Isn't this like the IPO level, or this is like the low? Oh man, it went down to 14 from there. You got a danger. Will Robinson, danger. Biden scheduled twice. Yeah, it's weird, bro. The Biden schedule is mad funky today. Like that's the only way to put it. Just mad funky. Because, again, he never speaks like this. He never has spoke. No, I don't even think any president has scheduled a meeting on Jerome Powell Day. It's just not something that really happens. Amazon, yeah, they're down 3.8, man. That's continuing that sell-off. Don't forget about earnings. You're going down. Tech is down 1% right now. So watch out for that. I need to go pee. Do we have a commercial break?
Company.
Inflation Nation.
Plus, shares
That's
of
what they called it?
Marriott are moving higher.
Did I read it wrong?
As travel continues to rebound. The CEO of that company is also going to join us later this hour.
And home buyers beware as mortgage rates continue to spike.
Oh my God.
Home affordability.
Oh my
is nearly
God.
The worst on
The
record.
real estate's
More
going
as
crash.
Talk in the Street continues in a moment.
Yo, this is crazy. All right, we'll have to wait for the bathroom break. We'll have to wait for a little bit. Could Biden be speaking it because he knows Powell caused a lot of market movement? I don't know. It's an unusual move. It's a very unusual move, and it's really hard to I think it's hard to even speculate on it. You know what I'm saying? It's a very weird thing. It's a very weird thing to think about. EWG again. Europe was down a lot today. Watch if Apple goes red. That one's still positive. So if that starts going red, that's not going to be good. I think he's speaking at the same time. The only thing, like, this is like a funny thing that people brought up, is that they said that it could lead to what's it called? Like, what's his name might very well just pretty much Joe Biden's always late, so it might not even have that big of a deal. Simple as that. Joe Biden's always late. Even if it's scheduled, what are the chances it actually gets in the way? We'll find out. But other than that, it's just it's a peculiar thing. No, I'm being dead serious. It's not even like a Biden joke. Not even. Like, that's literally, I think Bloomberg even said that this morning. It's just unusual, though. That's it. Everything is just very, very unusual with all of it. There's no other way to put it. Peculiar, I think. Can you explain like I'm 5, like moat, what a moat is for companies? I don't know what context you're talking about, but usually a moat could be referred to as like something that protects the business. So like a moat protects the castle, right? If you have a moat, it's a harder thing to cross. There you have a big barrier stopping you from being attacked. So that's like the same thing with the business. Some businesses have certain business models where there's like a barrier of entry to get in there, and it's like their competitive advantage. So you could break a moat, but usually it's just a more defensive way to look at what you got. Can you explain like I majored in fine arts? No. My nephew says moat when he wants the remote. Moat. Moat. I feel. Amazon is slipping. Amazon keeps on slipping, slipping, slipping into the stock dip. Powell keeps on tripping, tripping, tripping. Think about Microsoft Office as a service for companies, no competitor like the Apple iStore. Those are like moats. It's a good one. Elon Musk says businesses and governments may have to pay to use Twitter. Damn. I see you. I see you. RVSN, spies at the low. TLT not moving around too much. TBT, I did a May put and then a June call. May put, June call. May put, June call. Are they back? I need my potty break.
Military readiness.
There it is. All right.
From the
Follow me on
pandemic and
Instagram
materials and
at the Trading
parts,
Fraternity. I love you.
the parts that
Get
are still
ready
being
for
made,
history,
which is an
Chad.
issue
We get
on
we
Stinger
get to
that
experience
are
it
still
together.
being made are
Hope you're
costing
ready.
more. All of this factoring into defense stock forecasts for the year as Northrop, Lockheed, and Raytheon, also others, look to recover from pandemic-related challenges, but aren't baking incremental sales tied to, be it directly or indirectly, to Ukraine into full-year guidance. Since more demand for more weapons won't translate into more sales until at least next year, at least where that conflict is concerned. It's very much the reason why these stocks have come off their 2022 highs in just the last couple of weeks. David?
Yeah, interesting, Morgan. Well, as we head to a break right here, by the way, the S&P is in negative territory. The NASDAQ down 1.2%. But yeah, there it is, energy. That's your bright spot, isn't it? Getting to become a larger and larger percentage overall of the S&P as it comes down, and these keep going higher. Of course, oil itself is also up as much as 4% this morning. We're back after this.
What's up, baby? We here. We here. You guys ready? Are you ready? It's Pal. I did do a play on TOT. I might make one right before or right after Powell, and then I want to see, but I would feel like a schmuck, and I don't want you guys to play this. I don't feel like, I'm just saying, this is an opportunity in the sense that first time we've seen a rate action like this in 20 years. It's like I want to be somewhere near there, but I think you were just going to get a lot. I am planning to do the EWG double dip. We're just give it some time here. Again, you see how slow, little by little, like, I think the best thing to understand is, like, look at when we first started talking about wheat, right? What do you guys notice about wheat? Let's just break it down really simply. Like, take a look. This is where I think we were like $8 around there. It held. It shouldn't have held. Let me say that one more time. It shouldn't have held. Sal knew it shouldn't have held. We knew it shouldn't have held. Everybody, unless the situation kept going down the trajectory it should not have held up. So it's been a whole cycle. Even a whole contract has expired. And it's doing that. So this is what I'm saying even with Europe. It's like this has already been, 3 months? February 4th to May 4th. May the 4th be with you, my friend. But hopefully you see what I'm saying, where it's like, it's the timing on it. It's like things are developing in the direction that we've kind of noticed from the beginning of the year, but it is just slowly developing into that situation. Like we said, things can happen a lot slower than we could think about it. And that's where I'm saying with EWG. And guess what? Like I said from day one, I very well could be wrong, and that is fine. But and hopefully you see why I feel like an explorer. I'm willing to take it because imagine this journey from the beginning of the year when we started noticing this stuff, right? So it's like we could be wrong. Developments, history could change in the fact that all it takes is one big development here or there, but that's what we're waiting for. But the point is, it's like the situation hasn't changed, and all the news we're getting is just they are slowly kicking the can. In a weird way, it reminds me of Brexit to a degree.
Applebee's and IHOP parent company Dine Brands reporting an earnings beat.
I like Applebee's. I haven't been to Applebee's in a while, bro. They got that 2 for $20, or is that Chili's? I don't know. Either way, man. Either way, I'm down with all of it, man. Either way, I'm down with all of it. Same. They both got 2 for $20? Oh, they both got that? That's what I'm down with, bro. That's what I'm down with. Applebee's did kind of fall off, low-key. Like, we used to live at Applebee's. That used to be, like, a fun family favorite, man. We loved Applebee's. I'm telling you, I feel like all Middle Easterners, anybody with me? Anybody in a Middle Eastern family? Do y'all have a weird obsession with Applebee's? Because I feel like that's what we do. I don't know why. I feel like right when my parents, it was like they discovered freedom when they first, like they were like, yo, America's dope and all. But right when they figured out Applebee's, bro, oh my gosh, they loved it. They loved it, bro. So I was like, man, this is crazy. This is crazy. Prayers against Palestinian and we love it, man. I love it. Would you refinance your mortgage to 40 years if that becomes the normal? It depends. So what people got to realize, like I'll tell you this for my my older crowd or people who have held a property for a lot longer, like if you have already paid down like more than half of your if you've paid down more than half of your mortgage, I wouldn't refinance. Low key, because then you start the term all over. So what I would do, I said this the other day, a lot of people don't know about this. I don't know why. You can recast the mortgage, believe it or not. So there's something called a mortgage recast where you could have them, it's like a refinance, but instead of redoing the loan all over, you could kind of change pretty much the balance, what you owe. You could pay some of it down, and then you could find ways to keep the duration the same. But the thing is, what a lot of people don't realize, you don't want to go and pay, even then, at any other time, a lot of people don't realize it, where it's like, yo, if like you go and pay your mortgage for 5 years, right? And you go and pay 5 years of your mortgage, and then you go and refinance to a brand new 30-year loan, you just started over, you just added another 5 years, essentially, to what you're getting done, to what you're trying to accomplish. So that's your money. That's your money. That's your equity. I really wouldn't want to give it away like that. Yeah, I'm reading the Twitch chat. I saw that earlier. We just going along. I'm getting good conversations. I'm excited today, man. We got Young Pal, so I hope you guys are ready. I realize that trying to help my wife consolidate student loans, the banks are tricky. Indeed, they are. It's not that I think they're purposefully tricky to a degree, but it's also like once you learn like loans, amortization, and once you learn how they make money and where they make the most money and where you could save the most money, that's where you get better, and then you're good to go. So that's what you want. That's what you want. But stay ahead of it. You'd be surprised. A little tip, a little extra questions, it could save you a lot. Give me some wise words. First year profitable after 3 years. Again, look into a way to preserve it by either putting some into shares or to put it into real estate. And that's it. And just act as if, get yourself in the mentality that got you there. You know what I'm saying? No matter, you may be entering a new level, but I encourage you to be blessed and just keep grinding the same. A wise man named Uncle once said, what's it called? What did he say? Successes are never safe. So there you go. What's the deal with what is the deal with the ruble? That's a great question. We talked about this one yesterday, and all it has to do with is that the ruble is now isolated. That's all. So like a lot of people, oh yeah, we're going to talk about the commentary, but a lot of people it's just isolated. The value of your currency is dependent on your trading partners and what you could get with it. So if everybody cuts you off and, you're only trading with a couple of people and then you're controlling how the money leaves and everything else, it wouldn't matter. So that's what's happening, I believe, with the ruble. That's my opinion, is that relatively speaking, they're isolated and the ruble doesn't matter anymore unless you're Belarus. Unless you're Belarus or Turkey or any of the nations that are a friendly nation to Russia, the value of the currency does not give us any real meaning anymore because there's no real goods or services transacted in the ruble at a big scale now. So it doesn't really, it's a minor currency. That's why if like a random currency, like the Taiwanese baht or the Thailand baht, if that goes and devalues, back in the day, we had a lot more business there. It was more connected to China, but we don't trade a lot with Thailand. So it's not as if they crash in a weird way, we won't feel it the same way. Or it's like, I don't know, if like Ibiza crashes, I guess. It's just like, it's stuff we don't really use them. You know, we don't trade a lot with them. So that's pretty much what ends up happening, is that it's just, if you're less trade activity or more isolated, you are going to have a different reaction. Is the ruble deflated? I think the ruble is isolated, not deflate. It's just isolated, and the value has no real value to it. There's no way to determine it on a floated exchange if the bitch isn't floated. Do you know what I'm saying? If it's not compared against other currencies accurately, and it's not based off real trade, it's not floated right now. In a weird way, they have their own fixing to it. Crude inventories rose 1.3 million barrels. Check oil. This could have an effect. Again, people were tripping out a little bit on it today. Crude is up 3. Damn, bro. Yeah, this might be the week for crude again, especially after the oil earnings. It's like the supermarket 3 towns over closing down won't affect you. You never bought groceries there. Yes. But then if like you're the only Costco in 20 miles closed, you'd have a way bigger issue, right? Then you would be forced to go 3 towns over, and then it may be more expensive there. Great example. I just blew 44,000 channel points. Come on, man. Before Powell. I need money. I have an FHA loan. I owe $580, but my house is $800. What would be the best way to do it? Cash out refinance would be the best way, simply. And why do you want it, though? Or like, why? What do you need it for? Sometimes you could get a different home equity line of credit, which could be a little different. But there's various ways to go about it. And never get. We're gonna lower the merch price. I'm just, I need more data to see like an average. You know what I'm saying? But don't worry. But aim big. I want you all to aim big. Should I sell my lift? I'm up 4,000. Maybe ghetto spread. You got a big gain on it. It could always continue, just like Facebook, whenever something hits like a stupid low. So ghetto spread or trim, but good hit either way. I think you got a W no matter what, as long as you monitor it. Free merch, baby. Amen. Amen. Lyft. I like Uber. I mean, Uber is low, but if Uber goes any lower, that's it. It starts getting to the COVID low break. But I like it. Uber really just moved to the top of the list now, to the long-term deposit. I am comparing it with JP Morgan, but we'll see. We're still kind of close, give or take. But JP has a dividend, so we're going to see. And then we have DraftKings on Friday. Trading frat start today. It's good, baby. I'm with you. I'm wearing my sweater. I'm wearing my pink sweater. And again, so if you guys with Powell, he's gonna come on at 2:30 for the speech. 2 p.m. is when the report comes out. There will be movement, up front at 2 p.m., but then the real move's going to happen at 2:30. If you want the commentary while he is speaking, you're going to go on Twitch, okay? So we're going to keep the YouTube muted while he's talking, and then I will give my live commentary if you want to hear it. While Powell is speaking, I will speak over Powell on the Twitch. I think that's a fair way to do it because I know some of you like it, some of you don't. So make sure that you are there and you could choose accordingly. Again, Powell's a big day. Powell's a big day. Everybody get real Powell active. We want to make sure everybody has what they need. You know what I'm saying? Amazon, Apple. We pay to be here, not there. Whoa, whoa, whoa. Slow down, $4.99 entitlement. Relax. Okay, we're trying to make it good for everybody, you see, because not everybody likes it. So I appreciate your membership and you being here. You could easily go over on there. Again, not everybody likes the same thing you like on there. I feel you. I would prefer to give commentary, but again, dealing with 5,000 people plus during Powell, everybody has their own thing. You know what I'm saying? I wish I could on YouTube. Twitch don't even pay out money like that. So honestly, it's not even, believe me, we appreciate you. But I'm just trying to make everybody happy, and I think I could do it with this method. I like when you chime in. Why comment there? Because I've noticed YouTube, you'll see it. I mean, how about that? I'll do commentary until people complain on YouTube, if that's fair for you guys, and you'll see it. I just don't like dealing with it when I know the Twitch is kind of used to it. They're kind of chill with it, so that's all it comes down to. I just want to do what I do. That's all. I would love to. You know what I'm saying? That's all. People just bitch all day. So I want to give my commentary, man. Come on, what do you say? I live for this. I live for Powell Day right now. So let's see. I just want everybody to be happy and be excited. That's it. That's it, man. I'm trying to make them happy. Let's hear it. Let's hear it, baby. Let's hear it. Did my first trade, lost 2,000. Just go small but good. It's always good to get your first trade in. Always good to get your first trade in. Turn off comments on YouTube. Let them bitch. All right, that's good though. I'm glad to see you guys are interested. But I will do both, I guess, until we'll see what happens. But honestly, I will give a recap afterwards either way. But there's definitely, I'm sure, important things going to happen. So let's go. Let's go, baby. The Twitch link is pinned above there. It says, if Stram lags. I spelled it wrong. If Stram lags. I think I'm going to keep it there. If Stram lags, you could join, okay? Stram. On UMC. I'm not voting on UMC. I can't understand. Are any of these companies in real serious trouble? Not really. No, that's what we've been talking about. Although there's risks to growth, pretty much it's the risk of not like getting to the next level of what's it called? It's like not winning the Super Bowl, but you made every round of the playoffs. I don't know if that makes sense. But it's just like people are worried about the growth, but it's not as if companies are in debt, losing money, going bankrupt. We had a nice talk on this yesterday, and that's really what you could get from it, is that the next level here, the economy, everything, where we go, a lot just depends on how things play out, in the sense of, does economic activity actually start to contract? Right now, we're watching growth is the risk, but not the actual season. You know what I'm saying? It's like you might lose one game of the series in growth, but we're not the season and the team is not defunct just yet. But it could be. Burn is up though. Yes, 100%. It's starting to look like that, or people are worried about signs. Well, because guess what happens? First, the growth slows down, and then you start to contract. So that's the issue we're in now, and that's why, too, where we move forward from here, whether it's more earnings, but especially now Powell, and how do these companies now operate after Powell starts changing the financial environment. And here's the crazy part. I keep saying this. Do you realize most people on Wall Street now, to a degree, with how many new people there are, just a lot of even Wall Street has not dealt with this type of environment. Okay? I hope you guys realize that. Okay? I really hope you do. Where it's just like, it's one thing where it's like most of you guys haven't, but even then, think about all the new analysts. Think about anybody, unless they are over the age of 43, 45, and they didn't lose their money, retire, and still actually give financial commentary. It's just there's a high likelihood most people have never dealt with this environment. And that is where it gets crazy. So I hope you're ready. I hope you're ready. Powell is going to be at 2 p.m. Pacific time, 11 a.m. 2 p.m. Eastern, and then 11 Pacific. You are part of history right now. You are going to now, next time we ever see anything like this in 10 years, next time you ever hear this, I'm not going to tell you, oh, this is what happened in 2000. This is what happened. I'm going to be like, you remember last time when we watched it? Uh-huh. Y'all living through history, baby. Amen. Amen. Am I Mace? Like you think like Mason Betha? Breathe, stretch, shake, let it go. Breathe, stretch, shake, let it go. I used to be the guy standing next to Diddy, crucified for bringing sex in the city. Even though the girls know I'm extra pretty. Hard no, I ain't got no extras with me. Like, whoa, with the wrist, like, whoa, with the, yeah, bro, I know, Mace. Come on, son, they don't know that. Breathe, stretch, shake, let it go. Breathe, stretch, shake, let it go. Oh, they don't know. They don't know, man. Oh, the time for sit-ups. I could do some more core. I'm down with core. I'm 67. I remember stagflation in the 70s. Well, people don't know that stagflation is happening, but they know that everything sucks. I feel. That's cool. What else did you notice? What was it like in end of 1980? 1987. How did you feel when they when rates kept going back and forth, up and down? Were you even caring? Because that's one thing too. I feel like some of the people who have age experience with this, like what was it like? Like were you just as clueless as we are today, in the sense where we're like, it's like where we feel it but don't. And I'm a simple man. I listen to Kramer and do the opposite. My mom said it was normal, but assets were cheap. I was 1 year old in 87. I apply as much as I can, but lack the wisdom. I feel you. I know, 100%. 100%. That's the paradox. I was 10 in 1987. Don't give a fuck. It only mattered if you were taking on debt for one thing or another. So were there less impacts to like oil and energy and all of that, and like your daily, like you don't remember the price of like milk going up, and you're like, I used to buy this for 15 cents. Fuck. Now it's 39 cents. And you guys weren't like that? I'm just kidding. I know it was the 80s. You weren't that old. I was 16 in 87. I was too busy driving. That's what I was saying. Like, I feel like a lot of people were just living life. Like, for me, like, I mean, I don't know. I feel like people were just going to college when things were starting to crash in '08. It's called loan recast. You could recast the loan like you can recast the fishing line. Yeah, Dave Chappelle got tackled. I saw that. It's crazy, man. He was like, is that Will Smith? Is it just paying down? No, it allows you to like recast your mortgage. It's like it's like a refinance, but it's not a refinance. A refinance, do you guys understand what an actual refinance is? A refinance is when you take new money to pay for old money. So a refinance, if you owed $100,000 on your house, what you would do is you go to somebody else to give you $100,000, and you take the $100,000, pay off your other $100,000, and then you're able to, now you have a brand new loan that is usually a cheaper interest rate of a new loan that's cheaper than the old loan for the same price or whatever you owed. So when you recast the mortgage, it's like instead of going and getting a new loan from somebody else and paying off the loan and then redoing the loan, you just pretty much adjust your current loan with your current lender, and then that way you could make certain adjustments to pay down principal. Sometimes with the interest rate, depends on how you want to go about it, but you could pretty much recast the loan so that you don't have to pay closing costs. You're not paying for one loan and another loan. It's just keeping it all in-house within your lender. I just did this in the form of modification. Yeah, and that's good. And that's why, these are the little mortgage tricks you could take advantage of, where it's just like little stuff like that. But honestly, it's better because you just saved yourself like 1.5% for closing costs. Like, that's what I hate. I hate closing costs, and I don't think a lot of people realize every time you got to pay closing costs. We got a hype train, baby. Let's go, Twitch. Let's go, baby. It's game time. Just did a recast. Guy put down 100K. Yeah, it's good. It's good, especially, and then it's some people, too, if, like, your parents want to, like, pay down their mortgage or something, your grandparents, whatever it may be, instead of, like, doing a refinance and paying, you could do it. No, there's, like, $300 fee. They just charge you a flat fee to do it. It's usually, like, $300 to $500 to recast, but way better than 1.5 or whatever yield you're going to get charged to do it. Yeah, a lot of people don't know it's an option that exists. And they made him pay his car off with part of the funds. Is that normal? Yes, because debt to income. So they're pretty much saying we could give you the loan, but your car payment is too high. If you didn't have this car payment, we could give you the loan. So what the bank does as a condition, they say we're going to give you this amount of cash out refinance this, but then we're going to make sure X portion goes directly to the car lender so that you pay off that debt, and now you have just the loan of the house, but now you don't have a car debt. Crazy. Cigarette inflation is 200% from when I smoked 12 years ago. But that's by design. They want cigarettes to be more expensive because they kill people. It's like it's a weird concept. I know, but yeah. MRK on a high. Helix or fire. Just depends. Just watch the fees and what you got to pay. But yeah. You think they care if we live? Yes, 100%. Otherwise, cigarettes would kill you in like 2 days. Why you think it's a slow burn, dog? I'm just saying they need output, production, productivity, and an economy. I'm just saying. What do you, of course they want? Is it slow and steady. Slow and steady. Slow and steady. It's crazy. He said, you think they want you alive? Yes, of course they do. They need infrastructure. They need a lot of things. They need a lot. Elon can't do it. I ain't never seen Elon. I seen him tweet. I ain't never seen him build a train track or nothing. Look how even the poll was. When were you born? Yeah, we have a very diverse set of people. How the fuck are any of y'all born in 2010? The hell? Even then, that's crazy. If you were born in 2000, you're 22? Oh my God. I used to think kids born in 2000 were I thought you guys are still like 5. Like, here, let me show you this. Let me show you this, bro. This is funny, though, because I'll tell you, man. It's like anytime people tell me, like, people are like, oh, like a 10-year-old car, right? Like, in my mind, if you tell me, like, a 10-year-old car, like, if you're like, oh, I just bought a used car, like, oh, I bought like a 2012, like a 10-year-old car, right? This is what I think of. You know that? Bro, this is what I think of. Right here, this when you're like, oh, my Mustang's 10 years old. I literally think you have this Mustang in my mind. No, I love the Mustang. I'm just saying, I'm like, what? Because, like, bro, a 10-year-old car just looks so different now. It's just not a 10-year-old car anymore. No, it's wild, bro. Like, dude, a 2014. Imagine this. Are you ready? If you drive a 2014 vehicle, your car is almost 10 years old. You don't think that's weird? Because if you tell me you got a 2014, I'm like, oh, shit, your car brand new? I'm like, oh, crap. I'm like, damn, that's crazy. I'll be like, oh, so it's like a year or two old. I'm like, nah, not like 10 years. What are you saying? I'm old, bro. I just view it differently. That's why, like, you guys are like, I'm born in 2000. I'm like, what do you mean you were born in 2000? How can you even type? They don't feel me. Only the real ones. It's crazy, bro. I got a 1990. God bless you. 2001 here, 21 years old. That's so crazy to me that you guys are 21. I swear you guys are in, like, elementary school. But that's cool, though. You guys are so lucky, man, honestly, because you are in the damn long term. I hope you take advantage of it. I wish the internet was what it was. It was still pretty cool when I was young, but y'all just have so much opportunity. I don't even think y'all have so much opportunity. You don't want it. Oh, they don't feel me. SPY coming down. Slow bounce here. 8 o'clock. It's only been an hour and a half. We are down 1/3% on the SPY. NASDAQ is down 1.2, and now the SPY or the Dow Jones is about to go negative. Still got some cushion, and then you have Powell in 3 hours. You see my Powell poll? Can one of the mods get it on there? We need to get it on there. My bad. I'm not good at the polls as much, unless I'm like in there. There's 2018. 2018, stuck in a dream. I feel like I am stuck in 2015, bro. You're at least 29, 30. I could tell you're a grown man strength from the Watchlist videos. Grown man strength. I feel you, though. I feel you. I'm old, man. I'm old. That's it. It's just, you know. It's funny because, like, I didn't tell people my age as much because, like, I did it for the young guys because all the young guys would always ask me, how do you do real estate when you're young? And, like, what if people judge you when I was young? And I always tell people, I'm always like, dude, if I don't tell you how old I am, you would never know. You would never know how old I am. So I don't really care the age. I think I'm going to have to tell you guys my age one day for all of you. It may be time. But at the end of the day, you know, there's a nice little balance. I'm stuck in the weird middle, man. You know what I'm saying? It's just being stuck in the weird middle. Yeah, you look at the range is too wide. So look at the range, bro. Look at that range. Y'all ain't got no clue, man. See, that's why I was like, I just got to tell you eventually. Maybe later. Mm-mm. 44. 44. Yeah, it's lit. Just look at his hands. I got some nice hands. I do got some nice. HCA Healthcare. Don't they have buyout deal? I think they have something. HCA on watch. I think they have been, they got some level of bidder, I'm pretty sure. I'm not seeing any news come across the wire just yet. I'll work for HCA. This is like guessing the M&Ms in the jar. Look at the range. I know, man. Look at it. Look at it. They keep spinning. Biden speaking in 5 minutes. Sure he is. Let's go. Do a bet. Let's do a prediction. Let's go. 10 minutes late or on time, or 10-minute over-under pretty much. Maybe 15 minutes. Mods, can we get one up? Can we get a prediction? Let them bet. Is Biden going to be on time? Or 10, just leave it within like a 10, 15-minute range. Over. $1, Bob. $1. $1. Repositioning. Let's walk. But that's good, though. I hope so. That if he is on time, I hope he doesn't speak when Powell speaks. It's crazy. Mm. 100% over. Do we got one? Puts on the shorter term. Does that mean we're betting that interest rates to come down temporarily, then shoot back up? I think it could happen, but pretty much it's like either today is going to shoot the interest rates up and we could benefit off of it, or I think it could. I think we have a little bit more upside in rates, but depending on how the market takes it, we've lost so much, we could just rally up. So I do believe shorter term rate pop, or rates coming down, and then I think that we have a little bit more pressure on the back end of rates. But pretty much, I don't think bond yields can do this again, but I do think they could have, like, they just got one more move left in them for the interest rates to go a little higher. It's the second half, or like even the third or fourth quarter. Link in the description. We have it pinned in the chat. I don't know if that's easier, but it's up there if you guys want it. It's even right there too. Again, for both Powell or whatever it may be. Hopefully we see you there, but if you're here too, you're great. Consolidating on key levels. Push it to the limit. Yeah. Tough holding Visa, best earnings every quarter, but still price. I know, it's wild. Yeah, Airbnb down 10, bro. Today's a hard market. Let's just hope Powell could get us out of it. Dude, Airbnb might go negative on the day, which is ridiculous. So we'll see. Does Powell implement a double or triple rate hike? Uh-oh. Another Powell. No Powell on YouTube. No, we're gonna have Powell here. I'll try it. I was just saying for commentary. I was just genuinely because I know some people get disturbed. I said we'll do live commentary on the Twitch. Otherwise, you'll just have Powell on here. But we'll try it for a little bit and just see what happens. Let's vibe with it. It's a historic day. We're gonna have fun either way. We're gonna find out what's popping, and it's gonna be good, baby. It's gonna be good. How do you play Airbnb since they both killed? We wait till we get out of this little environment, because I'm telling you right now, with most of the earnings wrapping up this week and then us coming into a little bit less of earnings, but now Powell, we are going to get guidance for the rest of the quarter or at least for the next 30 to 45 days. So pretty much after Powell, all of the earnings stuff is going to get simplified. Now we'll see what happens to these companies. If people are feeling bad about the next month after Powell, any of the earnings, good or bad, we're probably going to see that correlation. Everything comes down. But if people will say, hey, we got the double rate hike, we're not as worried, we've priced in most of all the bad shit, he didn't scare us too much, now I think we have at least 30 days where we're going to be able to bounce and do our things. The market's oversold. We are still looking ahead for growth for the rest of the year, summer, yada, 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 whatever, bullshit Wall Street propaganda they throw at you, but pretty much you just need the guidance for today. We need the guidance from Powell. You know, all these companies have been giving their guidance, and it's great, but the bigger bird, the bigger guidance is Powell and whatever he insinuates or whatever he clearly says, and that's the key, because today nobody knows if he is going to give guidance. They don't know how deep he is going to go into the next 30 to 45 days of talking. He is going to be hawkish, but what he guides with, that is the key. So that, again, if he says anything with 3/4 rate hikes, faster balance sheet taper, or if he says these are our plans and we could do this and that, he's going to say expeditiously at some point, but what we don't know, he doesn't have to give any guidance today. And that's something very well too. If he doesn't give guidance, the market might, you know, they might do their thing and they might be chill with it, where they're like, okay, at least we're going to have to wait now. We weren't promised guidance, so let's just react to what we have and then we go from there. He can't triple hike once the economy. You never know. Like, bro, I'm telling you, like, if y'all have went over that Fed sheet the way I have, it's like, just be careful. Just because it's like, dude, they've done some wicked shit in the past. Like, they've gone up and down and up and down. They used to do a 1/2 quarter point. Again, 1987, they did a double hike, and then they hiked and hiked and hiked and hiked, and then the stock market crashed, and they're like, no guidance. We've done emergency meetings. Like, it just, you know, there's a lot. Anything could really happen at that point. Biden is not live yet. I see the video. Volcker went from like 5 or 6% all the way up to 15, and he raised it multiple times and then cut it and then raised it, and then he got blamed for everything. Theoretically, how bad would it be if Powell just said he quit and left during the meeting? I think the stock market would hit a circuit breaker. Very weird situation to try to forecast, but yeah, that would probably be one of the worst things that could happen, next to him being mauled by an orca whale, because the orca whale is a very vicious animal. If you didn't know, they look very cute. They look like the panda of the water, but don't be fooled by those looks. And you know, Jerome, he's an active, you know, fly fisher. He loves parasailing. He loves sailing in general. But that would be pretty bad. You know, those two, or orca whale clapping Powell, or him walking off stage, you know, like he's Antonio Bryan or whatever, and he just takes off his shirt and he's like, I'm out, I'm gone, and then that's it, bro, and everyone just looking at him, and then the lady's like, and now for the next question, we're going to Jen Smolak of the New York Times. Hey, Powell, where are you going? Okay, never mind. So I'm just saying, it could get crazy, bro, but that would be a pretty statistically unlikely scenario. Yeah, man, orcas are terrifying. Fuck that. They look dope, but nah, honestly, don't ever press an orca. If nobody's told you, I feel like you just learned something today. Powell is not Antonio Bryant. He's more Clint Eastwood of finance. What's up, sucker? You know, my dad calls Clint Eastwood. He said, Clint Eastwood. Bro, my dad is like the most typical fob ever. He loves Clint Eastwood movies. Bro, he loves them. He loves Westerners. He said, Clint Eastwood. Okay, here's Biden, BlackRock, and the two other people. I don't know who they are. This is Brian D.C., economic advisor and former BlackRock executive.
The Treasury Department is planning to pay down the national debt.
Yeah, pay that shit.
This quarter.
See, this is the commentary, so some of you may not like it sometimes.
It didn't happen.
Yeah, fuck that deficit up.
Under my predecessor.
Yeah, fuck your predecessor, right? Oh, just kidding. Don't hurt me, Harley Davidson. Okay, I'm on mute now.
Before the pandemic and during the pandemic. And it's gone down both years since I've been here. Period. That's their facts. And why is it important? Because bringing down the deficit is one way to ease inflationary pressures in an economy where a consequence of a war and gas prices and oil and food and it's a different world right this moment because of Ukraine and Russia. We reduced federal borrowing and we help combat inflation. This process is a great deal, is good news, but it didn't happen by itself. The previous administration increased the deficit every year it was in office, in part because of its reckless $2 trillion tax cut. I know you're tired of hearing me saying but a $2 trillion tax cut that was not paid for, And a tax cut that largely benefited the biggest corporations, 55 of which earned $40 billion in profits and paid not a single penny in income tax in 2020, and wealthiest Americans, like the billionaires, who on average pay just 8% in federal taxes. The previous administration not only ballooned the deficit, it undermined the watchdogs, the inspector generals, whose job it was to keep the pandemic relief funds from being wasted. Remember, at the time, I kept saying they're going to fire the inspector generals. Well, they fired the inspector general. And in my administration, those watchdogs are back. The Justice Department has a chief prosecutor for pandemic fraud who's going to go after the criminals who stole billions in relief money meant for small businesses and American families, but never got to them, got in the pockets of criminals. When I came to office, we took a different approach across the board. With the American Rescue Plan and other actions, we started to grow the economy from the bottom up and the middle out. Rescue checks and tax cuts for working families that gave them just a little bit of breathing room and put food on the table and a roof over their heads. Remember the first year, all those lines.
But yeah, so here's your commentary again. He may speak again, but I believe this was supposed to be scheduled around Powell. Keep that in mind.
We got vaccination shots in arms that helped us go from 2 million Americans who'd been vaccinated to more than 220 million Americans fully vaccinated. And we made it easy for millions of Americans to sign up for coverage under the Affordable Care Act, saving them an average of $2,400 a year. As a result of these and other economic recovery plans, we recovered faster than projected. A record 6.7 million jobs created last year, the most in the first year of any president in American history, and the fastest economic growth in any year in nearly 4 decades. And looking ahead, I have a plan to reduce the deficit even more, which will help reduce inflationary pressures and lower everyone's costs for families. Look, it's a plan that lets Medicare negotiate price of prescription drugs, as they do with the Department of Veterans Affairs. We can cap the price of insulin at $35 instead of the hundreds of dollars, even $1,000 a month for some families. And my plan provides tax credits to utility companies to generate clean energy. And those companies are required to pass those savings on to families. I met with about a dozen of those utility CEOs here in the White House, and they confirmed this plan will lower energy bills for families immediately. My plan includes tax credits for consumers to purchase electric or fuel cell vehicles, new or used, which will save the typical driver about $80 a month not having to pay for gas at the pump. Tax credits for folks to buy solar panels and heat pumps and more efficient windows and doors for their homes. Estimated savings $500 per year on average. And we can do these things by making sure that no one earning less than $400,000 a year will pay a single penny more in federal taxes. All we're asking is that the wealthiest Americans and the largest corporations begin to pay their fair share, at least part of their fair share. You've heard me say it before, I'm a capitalist. I believe you should be able to make as much money as you legally can, but just pay your fair share. There's no reason why a billionaire should be paying a lower tax rate than a teacher or a firefighter. That's in sharp contrast to what today's Republican Party is offering. And if they hadn't put this in print, you'd think I was making it up. Senator Rick Scott of Florida, United States Senator, who's leading the Republican National Senatorial Campaign Committee, released what he calls the Ultra MAGA Agenda. It's a MAGA agenda, all right. Let me tell you about this Ultra MAGA agenda. It's extreme, as most MAGA things are. It will actually raise taxes on 75 million American families, over 95% of whom make less than $100,000 a year. Among the hardest hit, Working families, kids with folks. Imagine you're a family of 4 and you don't make enough money to have federal taxes. Because you don't make enough money to pay them. You pay all your taxes, but you just don't make enough. And under this new plan, this tax plan, the ultra MAGA agenda, while big corporations and billionaires are going to pay nothing more, the working class folks are going to pay a hell of a lot more. And it goes further than that. This extreme Republican agenda calls for Congress. Now, I'm not making this up either. You ought to really think about this. It requires a vote, if it were to pass, every 5 years, the Congress would have to vote to reinstate or eliminate Social Security, Medicare, and Medicaid. Social Security is something seniors have paid in for their whole life. And it has to be reauthorized. Has to be reauthorized every 5 years. Look, again, it's hard to make this up, but then again, it's a mega agenda. You know, meanwhile, millionaires and billionaires and corporations skate by. Imagine that.
Look, that wasn't even me who was loud.
I think it is truly outrageous. I've offered a different plan, a plan rooted in American values of fairness and decency. Wealthy folks and corporations will pay a little more. Billionaires will have to pay a minimum tax. And again, most importantly, no one making less than $400,000 will pay a penny more in federal taxes. We're going to protect and strengthen Social Security and Medicare, not put it on the block every 5 years. Let me remind you again, I reduced the federal deficit. All the talk about the deficit from my Republican friends, I love it. I've reduced it $350 billion in my first year in office. And we're on track to reduce it by the end of September by another $1.5 trillion, the largest drop ever. I don't want to hear Republicans talk about deficits and their ultra MAGA agenda. I want to hear about fairness. I want to hear about decency. I want to hear about helping ordinary people. The bottom line is that for decades, the trickle-down economics has failed.
We still have a deficit.
As income and equity grew to historic levels under the Republicans, the mega Republicans, the MAGA Republicans. I don't want to mispronounce it, the MAGA Republicans. This is time to grow the economy, but from the bottom up and the middle out. Because here's the deal. When the poor have a ladder up and the middle class grows, the wealthy always do very well. They do very well. That's what this is about. That's what this is about. Everybody doing better. And so I want you to understand, again, first year, $350 billion reduction in deficit. This year, $1.5 trillion. It's going to bring some relief. Thank you. I take a few questions quickly.
Mr. President, may I ask you a question about sanctions? The EU, about sanctions against, or about further sanctions in Europe. The European Union today announced new sanctions against oil, against Russia. What's the next round for the U.S.? And also on a separate issue, what's the next step on abortion once this case gets settled?
I want to ask about deficits, huh? I want to make sure this doesn't get covered. Okay, here we go. I'm going to answer those two questions and then go out to talk to the Olympians. With regard to the additional sanctions, we're always open to additional sanctions, and I've been in consultation. I'll be speaking with the members of the G7 this week about what we're going to do or not do, number one. Number two, what was the second one? You want, look.
The second one was on abortion.
As I said when when this hit, as I was getting on the plane to go down to Alabama, this is about a lot more than abortion. I hadn't read the whole opinion at that time. But this reminds me of the debate with Robert Bork. Bork believed the only reason you had any inherent rights was because the government gave them to you. If you go back and look at the opening comments with the Bork-Biden when I was questioning him as chairman, I said, I believe I have the rights that I have, not because the government gave them to me, which you believe, but because I'm just a child of God. I exist. I delegated by joining this union here to delegate some obligation, some rights I have to the governments for social good. So the idea that somehow there is an inherent right, that there is no right of privacy, that there is no right. And remember the debate we had, you don't remember, but we had a debate about Griswold versus Connecticut. There'd been a law saying a married couple could not purchase birth control in the privacy of their own bedroom and use it. Well, that got struck down. Griswold was thought to be a bad decision by Bork, and my guess is the guy's on the Supreme Court now. What happens if you have a state changes the law saying that children who are LGBTQ can't be in classrooms with other children? Is that legit under the way the decision is written? What are the next things that are going to be attacked? Because this MAGA crowd is really the most extreme political organization that's existed in American history, in recent American history.
Will you make a speech on abortion like you did on voting rights, Mr. President? Mr. President, how can you combat it?
Come back. Oh, they couldn't bait him with that one. They thought, was that Kevin from The Office? That was Kevin from The Office. I did not know he works at the White House now. That's amazing. He's moving up, man. He's moving up. You saw that, right? That was crazy. So, they're lowering the deficit after raising it. Still a deficit, year-over-year decline, not net reduction. He didn't say much, but I wanted to see if he was gonna say something, just regarding rates or anything like that. I mean, that question was good. That was a really good question there about the EU stuff, but he didn't really download, or he did download it. He really didn't say it. If your Twitch is delayed, you got to go to your settings and turn on low latency. We beat inflation. That's what I said. I mean, for me, it just inflation right now, the economics of it. I mean, like he was explaining in the beginning, you don't think it's weird that we live in this new world where like food, energy, and the basic stuff is like, I guess sketchy, more or less. It's just like the whole thing for me is all about inflation, pretty much until we see what Powell does or until we get through the next couple of years. So that's the thing. Appel. I want to see Amazon. Airbnb gave up, 6-7% of its gains there from the top. Settings, advanced, low latency, toggle on. There it is. Well, I wanted to see. Maybe he speaks again. I don't know if they were rescheduling and moving it, but we're going to see what happens. I did not talk about the SCOTUS leak. I just think, again, like I'm saying, I know it's a very political charged issue. Everybody has it. People are talking about this relating into midterms, and I do think it can be an issue. But like I'm saying, it's just that I feel like it'd be foolish to put a court note that has not been finalized above the current pressing issue of facing a potential global food shortage and facing, runaway inflation 2 years into a already 40-year inflationary high. So it's just like at this point, just prices are too high where it starts to crush everybody, everything from here. So yeah, it's the first time it's ever happened, but it is it's a court document, like it's a court note. I forgot what it's called, but they send them. It's very common for that to be sent, but very, very unlikely and rare that it ever gets released. But it's a draft, yeah, but it's not finalized. So that's the one thing with it. But even then, it's just that I just don't think, I believe it's a big issue for a lot of people and it's important, but it's, I think on a bigger, broader scale, it's just like I'm more focused on inflation. So I'm not really, we'll see what happens with it. But I don't think, unless it's going to affect this financial situation for most American citizens and the world citizens, I'm not really as concerned with it, nor do I really have a stance on it. TLT, we went with TBT both ways. I'm on your squad. Welcome, my friend. Red team, blue team, don't matter. Get the bread and love your fam. Amen. Tell them. I got time on the TBT calls, and then I got less time on the puts. You talk about his aggressive deficit cut. Just pretty much, I think you guys already realize it. The government is not spending as much money as last year or the year before that. So somebody brought it up in the chat. It makes a lot of sense. What's it called? It's COVID. The money's gone. So right now, simply, if we just spend less money on COVID this year than last year, and all things stayed the same, the deficit would go down year over year. You see what I'm saying? So it's just that there's a lot of spending we were doing in the last year or two, but I see it as a problem. I mean, here's the you shouldn't be looking at the government deficit. There's a piece of, especially, that makes sense. Maybe that's why they did it today. Holy shit. That could be some tinfoil. Where is it? Let me find it for you. I got it for you. Are you ready? My light bulb literally just went off. Let me, here, I need to open up Roblox real quick so I could get you the Roblo chart. But this data came out here today. This was the data from today, and this is the chart of the trade deficit. That is what matters. You see that? So it's not about the government deficit. I mean, it's one thing, and I'm not saying it's not important, but on a global macro scale, it's the trade deficit. And as you notice today, you've actually hit a multi-year low. This is the biggest deficit in trade we have ever ran. Again, this chart goes back to 1992. Even 2008, look at how 2008, leading into 2008, you had the same sort of drop in there, but now it's really bad. So do you see what I'm saying? It's like, oh, you're telling me the government is spending less money than last year. Awesome. I'm sure that has some effect, but at the end of the day, as a country, we are buying more than we are selling. And unless other people are giving us that money, we are running the widest balance we have ever ran. I think it does go back to the 1900s or something like that. But do you see, that's the more, again, this is why I'm saying it's like, I love how people are getting like kind of caught up on domestic issues, and you're looking at our domestic, deficit or not. You're looking at domestic issues, but it's like right now the problem has just gotten so bad. I think it's very foolish to only view the domestic, where we got to start looking at the macro. Everybody is connected now. Again, the food stuff is a problem, but now even in this scale too, it's like your trade deficit is hitting a max. That means that whether our consumer is strong or not, we are not bringing in that much money. I mean, what is that going to say about growth? That means all of our money is coming in. The only way we could fund that deficit is through the fiscal account, which is no production. It's basically financial services and people buying real estate and stocks. That's the only thing that is letting people have money right now. And then stocks are already coming down. So keep that in mind. Export inflation. We do, but we need to, hopefully, that's why we need to give them our dollars. That's why we need to get our dollars to them so that they could start buying our goods so that our trade deficit comes back. You see what I'm saying? That's why I gave you that explanation the other day with exporting inflation. I know a lot of people are like, why are we giving them money? It's like, yo, look at your trade deficit. My guy, it would be beneficial to you and everybody in the world if you wrote Ukraine a check and they went and bought physical goods from the United States right now. That would probably be one of the best things that could happen on an economic macro scale, believe it or not. Can this go on forever exporting? No, there's limits to it, as history has shown us. Boo-boo, why do you think America has the productivity for domestic manufacturing? Don't call me boo-boo. I'm talking some Keynesian nonsense. I'm just saying how it worked back in the. This is how it's always been since like even World War II. I do believe it is Keynesian, but it's not based off of the idea of unlimited monetary policy to a degree. I mean, it's not. I don't know. I don't even know if this is full Keynesian, my friend. Ba-da-ba-ba-ba. Bye, man, and coat. Hey, happy on the days. Visa, relentless, everything. Keynesian. Y'all corrected me on my speech, but tell me, yo, what's the reason? I'm just saying that we will be getting it every season. Y'all acting like you demons, maybe part of Legion. It's a big day, baby. Amen. John Maynard Keynes. Nervous look at the meeting. This is going to be his first one with, what's it called? This is going to be his first meeting in person. All the other ones have been on Zoom, which is cool. Very, very cool for him. And then SPY, we hit that low during Biden, came back up. TLT hit a new high on the day, but barely moving. Dollar came down. Airbnb gave up earnings. Let me check AMD. Everything's down now with NASDAQ down 1.3. SPY and Dow barely down. Is UNG Boyle going to go down if war stops? Yes. UNG will go hard. If Europe could guarantee what they need in terms of energy and, there's no longer any issues with that, then yes, it will. I think UNG will fall off a cliff for the most part. Gasoline, it may take a little longer, but yes. Let's go, baby. The Twitch. Y'all running it up on the Twitch. God bless you. God bless you. Get ready. Can't wait for the watch list. I can't either because I don't know what's going to happen. That's the crazy part. We're going to find out pretty much by the end of everything. By the end of today, it's all going to be new information. We may potentially have guidance for the next 45 days here. And that's it. EWG, I'm still confident. What has changed? Nothing has changed in everything. Everything that we said is going to pretty much get affected or happen. It's happened. The only degree of it is to which the speed or how slow they're kicking the can. But, I see it. I'm not worried about it. Even if I am wrong on it and it doesn't materialize, then I think we're going to be good to go. Don't call me Boo Boo Frizzle. Bro, that's a knockoff. That's a knockoff Frizzle. It's not even the real peach. You know what I'm saying? It's not you sent the peach emoji. I know how to spot the real peach, but I'm with it, baby. Horn. God bless you. God bless you. Amen. 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 I'm long EWG. Good luck, man, and I hope it works out for you. That's the difference between some of y'all. Y'all too worried. Y'all praying for my downfall. Y'all need to be praying for yourself. Amen. Amen. So it's good. It's good. I wish all of you the best of luck and go with whatever play. You know what I'm saying? You got to do what you're there. It's in Nepal. Know what I'm talking about. Oh, and the Taurus, baby. Amen. Amen. Council meeting in 2 minutes with Yellen. That sounds like a scene from Harry Potter. Just because I feel like Yellen got mad Harry Potter vibes. But I don't think we're going to watch that one. I just don't think Elon would open a factory there if it was going to go to shit. Great point. I feel you. The whole point we're playing is because it was out external developments. That's it. It's just all about Russia clapping oil and understanding the impact of energy and the sensitivity of European markets to energy. Do you think a mentor is necessary for success? It really all depends. It all depends. That's all that it comes down to. It says, I really think it kind of depends on who you're around. I mean, I've had mentors in life, not necessarily for stocks, but for other things. But it's like the mentality. I mean, are you around hardworking people? Are you around people who don't give up? Are you around people who will challenge you and tell you the truth even if you don't like it? You know what I'm saying? It's just like, that's what you need to really be around. That's what I've really, I've learned from people. I've learned more about how to behave as a human that has helped me make more money than anything they could have taught me about money, if that makes sense. Just how to live a productive life. Just very, very simple. Again, who you're around, I mean, it goes a long way. Like, I don't think y'all realize it. That's why it's like, I don't know, some of you have friends like that. Some of you are around very unmotivated people, and, hopefully you don't judge them in that sense, and hopefully, you don't feel like weird about it, but it's very, very simple. It's just like, if you're around people who give up and quit at every corner, and you're around people who all the time are just talking about doing nothing or literally just like not moving forward, and they don't have that mentality of I'm going to get it, that right there will have an impact. Like I'm saying, I had mentors where like they worked in different industries, but these were people I watched. They didn't, they didn't sleep. They would work hard. I saw people do whatever it took to take care of their families. It didn't matter where it was. I've seen people humble themselves in just so many ways, but it's like, I was around people who were there. Remember, I told you guys that the other day. I said one of the biggest things I've ever seen, like my parents, bro, they lost a lot. Like, again, they real estate bubble, a lot of different things. Like we would get beat. My mom would hit me if we took something for free, or if they wouldn't ask for help. I've never seen them give up and quit. I've never seen them say, oh, we're never going to make it, and go back. And it's just little stuff like that. I think that's your mentor, is just what you surround yourself with is very, very important. So yeah, nice little mini rant there for you, Samuel. I don't know how to find those people. Been 2 years, I haven't really met. Just stick to what you believe, know what you want, set a standard for yourself, and the right people in your life will show up. I mean, I hope you realize if you have even 3 people in a lifespan that you could say, wow, I have a good friend, or I have somebody who has mentored or inspired me, that is a success. So you're still in college, and you said it's been 2 years. You're still very young. I mean, you should probably get one good friend from college maybe, and, give yourself time. But if you establish what it is you are looking for, and if you have those attributes too, you will attract it. But don't fool yourself. If you're going to be a complaining quitter ass bitch, don't expect the opposite to be attracted to you. Do you understand? So at the same time, let the things come to you, but you have to set that standard, and you have to be willing to attract that. Otherwise, if you can't be doing the opposite and thinking that you will, wow, all of these hardworking people are attracted to my shitty attitude and my disrespect. No, that's not going to happen, right? It's like people are going to say, oh, wow, maybe they saw that I was working, or wow, we share something in common that is also very rare that we've noticed that is lacking in other areas. You feel me? Hopefully it helps. But SPY, new low, Apple now red, Microsoft flipped earlier. Banks benefit from interest rates going up because usually they could charge more to consumers. Want to do 1,000 to Netflix at a good time? If you plan on holding it for longer than probably like 1 to 2 years minimum, I say 10 years. But yeah, I mean, I bought it there. I like it. I'm a big fan. Airbnb clapped, indeed. They scammed us. But not really. I mean, again, it's just better. I hope you can realize it, though. It's like, I would rather take no earnings reaction and give me good fundamentals rather than, it's not like I'm trying to, It's not like I'm defending a stock going down that didn't get good data. You know what I'm saying? And that's what I'm down with. The fundamentals are good. We just eventually, whenever the market gets kicked back into gear, or whenever we get through this little mess here, I mean, it's going to be on the point, but it's doing exactly what we want. You and TNT have been great blessings. God is good, baby. He gave exactly what we need, baby. And that's what I'm saying, though, too. Some of your attitudes and the way you work hard, it vibes. You know what I'm saying? So God bless you. Especially you, Mr. Tabebi. We need 100 basis point rise. Oh, man. Let's see. Airbnb in Orlando. Good for Disney. Good for Disney. TLT. It's rocketing up. I don't know what the plays have done. I haven't really checked. I think the real action happens right before the meeting and then right after. Interest rate talk, 2 p.m. So in about 2.5 hours, we get the first release. And then 2.5 hours, you're going to get Powell coming on and speaking. Big money hitting the exit. We'll find out. I don't know. Remember, last Fed meeting, you were right here. Do you guys realize that? You were just slightly lower, and then this was the preceding week. So let's see what happens. Fed credibility is at risk. I'm sure people are tired. Powell's tired. I feel you. That I think is the big risk. Again, like I know some of you, I know Nate, you're pretty pessimistic on it. I'm kind of just trailing behind you to a degree where it's just like, I think the next big risk is if inflation expectations become unanchored, aka credibility goes out the window, and then the numbers keep running and people don't know really how to price this or everything else, then I think that's where we have it. But I do believe Fed credibility is very important, and that's why I do believe that my guy is going to do the double rate hike today. Hence, it's already priced in too. How does the Fed have any at this point? Because they still have the biggest stick on the block. I mean, it's just like, you don't think about it. They're the biggest. It's still the Fed. At the end of the day, they still got that name. They have brand name credibility, no matter what it is. Do I believe it has diminished? Has it even diminished with myself personally? Yes, it has. But it's just like, what do you still always got to listen to them. What can you do? It doesn't, literally, we still listen to the same Joe Biden speech 2 years into this, and it don't matter what that price of gas or inflation does. It's like, it's still the president. It's still the person in that position. So I do feel you, though. I don't think credibility is absolutely diminished, but, I mean, it has been a painful year for the Fed in that department. I don't think 50 will tank the market, but I do think, like all other times historically, like we covered on the watch list, I think it's going to cause some level of big reaction, especially in the bond market. But we will find out very, very shortly. All I did was TBT both ways. TBT is the UVXY of TLT, so I thought it would be appropriate. Skipped the double, went to the triple. He wouldn't do that because, again, even back then in the past, even in the 90s, before they went to the triple, they always have to test out the double. It's like medicine. You can't dose a patient that high without going through kind of the steps, if that makes sense. So any other time they did go on aggressive cycles, they start with the double hike, and then they give it a little bit of time to sit there, and then they go from there to see. Like we discussed in that other weekend video, he may even wait. He may even wait for the next month. We're going to find out. Or he does hike in May, hike in June, and then waits for the next one, and then go from there. Ladies and gentlemen, boys and gas, I hope you're having a wonderful day. I hope you're ready for history. I know yelling is speaking. We may get there in a little bit, but what you got to do is some push-ups, baby. It's push-up time, okay? We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. Say what's up, man. Say what's up. Show some love. But, ladies and gentlemen, man, you've been here for 2.5 hours. You got 4.5 hours left to go, and history on the way. I hope you have stretched. I hope you have moved the body, and what we like to do is just get the body moving, baby. Okay, so you've been here for 2 hours. You got 4.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. You can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get on your knees, do a push-up, plank the worm, anything. But get the body moving, baby, okay? Then, optometrist recommendations. Stare at an object 10, 20, 30 feet away. Blink a few times. Relax those pretty little eyeballs. Blink, 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 blink. Blink, 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 blink. Oh, feel good, huh? Huh? Let's go, man. Let's go. You can do some arm circles, and then legs in front of you, chest to the sun. Flex the core, tuck the hips in. Oh, boom, baby. Damn, you look good right now. I ain't even gonna lie to you right now. You look better than Powell. I'm just saying, man, you look like you've been making progress. It looks like all those push-ups and sitting up straight. I don't know. You look taller. You look glowing. Did you get a tan or something? Like, you just look like, wow. You look, wow. Shine bright like a diamond. That's good. But legs in front of you, chest to the sun, flex the core. Drop the shoulders. No one's attacking you, bro. Fix that nerd neck. Then relax the jaw. Go. Breathe in really deep. Breathe out with your tongue out. Do the dragon breath. Go. Apple just bounced off the bottom. So did the market. Again, tech is the one that's down the most. So they got a little bit that could go up. News on SoFi, I don't know. SoFi popping through the top. Oh my gosh. Let's get it, baby. Never fails. Good one, right? Never fails. Good stretch. Always good for you, bro. Always good for you. We're proud of you. All right, what are we looking at? Equity index, SPY. Utilities are the leading industry right now, up 1.27. Energy, second. Consumer staples, third, just above 0.5%. And then financials are barely green, 0.11. Industrials, healthcare, material, all barely green. Then tech, real estate, communications, and consumer discretionary are all negative 1% today. Consumer discretionary, down 1.7. Abby Vibe, watch on volume. So y'all really want yelling? I feel like I've seen so many yelling comments. I only come here because you banned me on YouTube. Would you like to see your chat history? Or how do you want to do this? We could just move on. It's straight. God bless you. Isn't she important? No. No, I'm kidding. No, yelling, I don't know. If you want yelling, bro, I'm just not. I don't know. I don't think she's gonna say anything important. Last meeting, nothing, and things got significantly worse. I somewhat agree. I mean, it could have been worse. The fact we could have been lower. We did hit a new low prior, so that's the issue. So we're going to see how it plays out. But, I mean, really what it's going to come down to, if Powell gives us anything more, but I will say this, Oil has chilled out. It hasn't gone up. It hasn't gone down. That's the key. But I'm really more worried about the food situation. After today, and then it's staying up this long, and then now coming into more Fed rate hikes, and then the food, pretty much setting new cost of production. I think that with mixed in with energy, and if energy comes up now, that is what's really getting worse. And I think that is where now slower growth, slower consumer, that's where I think it starts to get a little bit more impactful. Because right now you got to realize it's like Fed could slow down the economy a little bit, raise the interest rates, but now it's like if gas goes back up, if the price of gas goes up or stays up for multiple months, right? And then the price of food goes up another 30% and then stays up for another 3, 6, 9, 12 months. And then now the other excess stuff necessary for growth or whatever it is, if that is all, higher to purchase and it's slowed down, it's like that is what creates the very negative situation. Indonesia, more than 50%. That's it's everything, though. It's like the weather has been awful, and then the supply stuff just does not, transport does not help on top of everything. That is the biggest issue that we are dealing with right now. Get to the point where the people cannot get food. Not in the United States. I think, and even then, worst case scenario, I think food prices, like if I'm talking like worst case scenario, like Great Depression, the price of food just becomes extraordinarily high. Like talking like hundreds of dollars for food pretty much is the only thing I could ever see occurring. But will there be a lack of food? No. But other countries, it's a different story. I mean, it's kind of sad. My mom has been telling me about what's going on with Egypt, with the wheat situation and food and everything. It's wild. Like they're even giving like food subsidies and doing stuff. And then like if you got like a new car, you're not allowed to get a subsidy. It's like it's wild shit going on. But it's bad. It's very, very bad. But for other countries and globally, but that's where people fail to realize is like eventually that starts to come back around and affect us. I was like the purge. That would probably take a year and a half, though, 2 years of nothing getting positive and everything just getting worse. Airbus, EBITDA, Yellen bullish. We could put her on for a little bit. Like I said, in the Bible, anytime there was famine, people would die, but there was always some level of story of famine where they had food. The price just went up exorbitant. Remember I told you that story? It was like 40 silver for a goat head in one of the worst famines there in Israel. I think it was under Elisha, the man of God is what they called him. But it's very like that's just common throughout history. And like again, that's why I'm bringing up the Bible. But it's just like there's always some level to access of food. But the question is, how much does it cost? Do you see what I'm saying? Oh, that's her son's name? I love that name, baby. Elisha. Yeah, 40 is silver for a goat head or some shit like that, man. That was expensive back then. I think the average price at the time was probably 2 pieces of silver. You see what I'm saying? They had mad inflation back then. And they even complained to the king. You know that? That's what happened. The king wanted to kill the prophet Elisha because inflation was so bad, and then the famine brought the food prices high. They were complaining about it. So the people complained to Elisha, or they complained to the king of Israel, and he said, go bring me the man of God. We're going to attack him. It was crazy. Funny. There you go. Bible history. But like I'm saying, just various times throughout. I mean, you could go see any other like famines or anything else that have happened, but usually just the price goes up a lot. You know what I'm saying? It's not as if you've run out of food. It's not like you're not going to have food, but it will become very expensive. And that's the next level of risk. What the hell was that? Is there another car crash? VWAP. I don't know. I think E-Trade's VWAP is a little different. At what point do the spikes in foreclosures become a concern? I know they were blocked by government for a while, so I have no idea how to baseline. I think when they get above like 10% or something like that, 10 or 15%, because right now, even then, like the foreclosures, if you compare them now to like 2008, you'll giggle. Just because you're like, okay, well, I guess it's not that bad. But it has to just get a little bigger. At 85, you at 50? Interesting. Maybe that's where it was until this little move. Back then, the kings used to be rulers. What happened? They killed each other. That's it. They all just would fight each other. That's why safety is so key. That's it. They were all the kings of their country till somebody started stomping. And then they were like, hey, man, that's my land now, son. And then they'd be like, the Lord sent me. And they'd be like, no. And they'd be like, Lord, did you send them? And Lord was like, nah, you will defeat and crush your enemies. And then it was just that for like hundreds of years. Wild. The Lord needed some entertainment. I think if you just made humans and gave them free will, I think that's enough. I'm telling you, bro, that's it. It's just, that's what happens when you give anything free will. Y'all crazy. You see what happens when you give people the internet? Internet plus privacy, that already does a lot for some people. So I feel. We're still fighting today. Yeah, we're just not as like, I guess we're more civilized. I guess civilization's dope. Did she say Dodd-Frank? I don't even, you guys, like y'all blaming house prices now. Y'all should blame Janet Yellen for why people can't buy houses. Okay, Dodd-Frank, 2015. Or 2010, 2011. Leading into 2015. Crazy. Yellen, I don't know. Yellen scared me now. My country last week posted a 125 in foreclosure, your county, historic lows, so it piqued my interest. Go check out the total rate, and then if you really want, just compare the foreclosure rates to compare those foreclosure rates to what it was. Thank her for stopping people who couldn't afford houses from buying. If that's how you view it. I don't know. At the end of the day, in 2015, you could have qualified for a house and probably still not would have gotten it. Again, I don't think it was true. I mean, it did stop a lot of the other stuff, but it's just like anything with the government usually. It's usually an overkill, and it only, stops a portion of it. But, that's why it's been so, you could blame Yellen for the reason why real estate's not going to crash. Maybe that could be it because, again, you don't see any of that leverage. But they, from Dodd-Frank till 2019, 2020, if you don't think that created a generation of renters, then I don't know what to tell you. I mean, we'll just have to agree to disagree. We will just have to agree to disagree. It will correct. I think it corrects if the Fed wants to destroy it. That's it. The only way I think it really corrects to, or I guess crash. I mean, correction to me, I think prices stabilize, maybe go down 5% from the highs, but I just think it's going to play around with, just all really depends on how the Fed wants to do it. So Fannie and Freddie come out of there. That'll be interesting. Or whatever programs they launch. Balance of trade, balance of payments. Balance of payments is the overall between your balance of your current account and capital account. Balance of trade is just saying just traded goods and all of that. The BOP is, I believe, the overall with both of them. And then the main things you want to look at is the current account and the capital account. I believe that is what creates the balance of the trade balance, and then the balance of payments is how you go about to fix a deficit or a surplus. What's my favorite stock split? I hope AbbVie, but that's just what I want. What do you think this quote is valid? Bonds have an inverse relationship to interest rates. When the cost of borrowing rises, bond prices usually fall and vice versa. Yes. That's why, it's usually inverse, but it hasn't been like that for the last 2 years. But pretty much the cost of borrowing, it is increasing, and then usually the bond price drops. That's why people yield more money. So there's a yield, and then there's a price on the bond. Keep that in mind. Do you like Salesforce? I do. I think they're going to be an interesting one. Did you guys see that guy climb the building yesterday? My friend sent me a video. I posted it on my TikTok, but they banned me because of my other video. But y'all should see it. My friend was in the building while the guy was climbing, and he sent me the dude climbing. It was actually wild. Powell is at 2 p.m. Pacific time. And then, that's when the release comes out. And then at 2:30, that's where we see everything else. Binance receives regulatory nod from French market authority. That's kind of bullish. Check crypto. Oh, 2 p.m. Eastern. Yes, my bad. Eastern. I was so Pacific East, it gets confusing. Eastern, right? Eastern. So, what, in 2 hours? 2 hours. My mom said hi. She hasn't watched you since college. Tell her hello, and God bless you, Amir. Hopefully you finish college up strong, right? Aren't you guys wrapping up college right now? I'm praying for all of you. I know we got a lot of college kids. You know, I've noticed that, man, and I don't know. I think it's a really good thing. There's a lot of y'all on the prayer request with college. You know that? It's pretty cool, because I'm like, man, y'all, we got a lot of college kids praying, bro. It's beautiful. It's beautiful, but we got you guys. But good luck with it. Yeah, graduation on Friday. Good luck, baby. Good luck. That is hype. That is hype. Stay in school, man. Stay in school. Even then, some of you, it's a big deal right there. I wish you the best of luck, and just kill it, man. Close it out right now. It's the final. I love finals. Man. I know y'all got finals, so run it up. Run it up, baby. I had finals grades due today. Well, good luck, bro. Good luck. I should have gave you this pep talk last week. Everybody in the UNG, put your mother hands up and follow me. UNG, pop, pop. Pop, pop. It's lit. Ba-da-bop. Twitch chats. If you want more points, you have better Twitch TV. If you better Twitch TV settings, auto claim bonus channels. Oh, why are you teaching them how to run it up, bro? Come on, we supposed to be Wall Street. We got to rig the channel points. Come on, bro. Why are you telling them how to succeed? Wall Street ain't never do that to us. That's why all of the price targets on 90% of the companies are 80% higher than where they're at today. The hell? Are you giving them the plug, bro? That's crazy. Said, I am for the Chads. I am one of them. The Saki ape, it came down, but it's still just the most I've ever been offered for a, what's it called? For a, how you say? Yeah, it's interesting. Finals this week. 2 weeks of summer. Then moving to internship with NASA. Good luck, baby. The market will absolutely poop itself if Powell comes in. It would for a little bit. That would be a shocker. But it's like a good shocker. It still might even lead to a bounce. The NFT video, that was like the beginning of the year, I think, or something like that. I bought that in NFT in October. And then, thank you to your local lender, Boomer. So if you guys ever need a lender, you know you have Boomer. We got lending tips and Boomer tips. Fun fact, but here is the foreclosure starts based on the years and quarter. So this is where we're at now. And I don't know what's that number we're looking for. I think 100,000. But this is where you are now. So as you can see, it's ticking up, right? But then take a look at the first quarter of 2021. Like, do you guys see how different this is? Like, this is 2018, 2019. It was already coming down, but you could already see, like, this was when the real estate, this was before COVID and even first quarter of COVID. Foreclosures were like 100,000, but it was still coming down. But, like, look, even from today, that's still like half of the amount that we're at now. So it doesn't mean it can't go up, but even if it goes up double, so if foreclosures double from this quarter and then start to get back up here, we just start, like I said, things are just reverting back to 2019. But then this is what 2008 looked like. So look at 2005, 3 years before the crash, it was already above 100. Then it went up to like what, 125. Now you're like a little bit, maybe 150-ish here, then 175, 180. Then it shot to by 2006. Then it starts to go up and up and up and up. And then you could see, though, this is just, it's a very different scale. That's why I said, like, literally, if any of you look up this data, you might giggle if you actually are like, you know, when people say, oh, man, the foreclosures are bad. It's like what we went through in 08. I don't think a lot of people understand the scale. This is the amount of foreclosure starts quarter over quarter. So anytime a bank starts a foreclosure and sends out the letter, they send out a letter. It's like a pretty much a legal application starting the process of foreclosure. At peak is the genesis of Josh's desire to dominate real estate. Kind of, honestly. Can you argue that the big backing of Stim supported foreclosures? Yes, I agree, but now here's the problem, is that take a look. The foreclosures are low, and now the equity is very high. At this point, when foreclosures were high, equity was still kind of high up here, but at this point with the supply and demand, it's going to be very tricky. Like I said, everybody is just, there's one big problem, is that equity is through the roof right now, and then on top of it, not only is equity through the roof, it's just now there's supply issues, there's labor issues, there's all of these things where the housing supply may not come back as fast as you think. Mods, do that poll for Galactive. Should we rename channel points to Chad coins, Carl Jr. coins, Hummer coins, or long-term coins? My mortgage got sold for the third time since September. UWMC. Jeez. It's big. So mods, make that poll for him if you can. FRGE, that was just one of the crazier ones. I wish I could burn my financial aid checks on stocks when I was like, right? What did people use the first stimulus checks for? You guys remember that? You remember? Anybody remember the 2009, 2010 stimulus package? You know that? This is how you know I was like, here, I'll tell you this, guys. For all of you who judge me, and maybe you think I'm soft, I hope you know I've been an online troll from day one, okay? That's it. I'm just a gamer, okay? And I remember in high school, I walked around with a shirt. This was in high school. It said stimulus package, and it had an arrow just pointing down at my pants. That's what it was back then. I was walking around with, I didn't get in trouble, surprisingly. This was I'm surprised, honestly. Oh yeah, I thought I was a little kid. I thought I was so funny. I think I might have a picture I could probably find for you. I don't know. But that was the classic. That was the first meme shirt before memes existed. Back then, they weren't doing memes. It was a different age. It was a different age. Surprised mom didn't whip your ass. She didn't know what that meant. That's it. That's it. Straight. But, anyways, do you guys remember that one? Remember when they first gave like an $800 check to people in like 2010? Does anybody remember that? Please tell me you guys remember that. They gave it to like, I forgot what it was. You just had to make less than like a certain amount of money or whatever. And remember, they had cash for clunkers too, but it was like, oh wait. Remember, they gave everybody a check if you qualified for it. What did you buy back then? Do you remember that? Think about it. The economy was bad. Real estate crashed. People were feeling some type of, what did you buy? Like, you did not buy stocks. That's the funny part. But what did you buy? You bought beer, a PS3. You paid rent, liquor. I don't remember that one. No, it's real. It happened. It was $600. It was $600. The first ever, I believe it was $600. Yeah. It was cheap. It wasn't a lot. I mean, maybe the dollar was stronger back then. Just recreational stuff. And then George Bush gave 100. Yeah, I think this was 08. Oh, no, this, or it could have been Obama. This was like 09, I think. It was 08, 09, or 2010. What could it be? But yeah, that's weird because that's wild. You guys were just a different generation. You got to put your stimulus check into stocks and fucking crypto. It was signed by Bush. I was on HDTV and I bought more tools. That's pretty dope. It's just so different, though. Think about it. Those years I didn't know Wall Street existed. Those are my early years of Wall Street. Let's see. CVS. Didn't they have news? I think they had guidance today. They're popping up. You could buy Louisville for $1. Really? Send me them. I know there's random programs in different places. You could do it. Bro, someone's in my house. I got Oompa Loompas that work for me. So, you know, like Willy Wonka, it's like I got them everywhere. I got one washing my car right now. I got the other one setting up the video set for the watch list, you know, even taking some notes. They're dope, bro. They're dope, honestly. Just like don't break the rules and then they start singing and shit. But otherwise, it's chill. Oompa, loompa, doopa dee doo. Coin operating beta to all users. To all users. There it is. Coinbase is open to everyone. Let's see what happens. You go the Great Reset, the Great Unwind. Wow. Like I said, I just don't think it's started. I think the Great Reset, it just has not started. As weird as it seems to say, depending on what you read. This is very exciting. I mean, we got what? 2 hours? Hour, 50 minutes. And then it is finally game time. Coinbase is opening beta, breaking news. So another person posted it. Some reporter on Twitter. I think it's already started because we're not making new highs. It's been 5 months. I mean, you've been surprised. I've been in markets where we haven't. Like 2015, is UNG still spazzing out? Like 2015, we hit a high, and then we dropped, and then we didn't really do anything for the next couple of years. It like slowly edged up. It was like later, but you could hold a high, not set a new high, and it doesn't have to be negative. Like, do you see this? This is 2014 to 2016. It should have went to 2018, but, like, you didn't even go high. Like, look at 2015, right? So you could have said the same thing about 2015, 2016, and then it bounced. But, like, look how long it took. You took a whole year before ever hitting a high, almost 2 years. So you spent 2 years without hitting a high. No, this is not the longest bear market. I don't even say this is. It is a bear market, but not like really. I mean, I remember some ports of 08. I mean, I wasn't really trading as active. I was all about that long term, but it was just, it's just different. It's just like you didn't even want to trade. You didn't even want to look at it. Everybody did. Nobody wanted to. Nikolai Semi a couple days ago. Another truck driver was transporting it. No way. I don't know that's real. 2017, it took 7 months to retrace highs. We would trade side days till the war is over, or until enough bad Powell. If Powell could get extremely hawkish, crash the market, and then start cutting rates, then maybe we'll have just pretty much rip the Band-Aid, deal with a harder landing, and then go from there. My 3-year-old Chad listening, asking about the charts. Let's go, baby. Teach him. Teach him. That's what 2001 was like. You didn't even want to look who's. I knew more about the market then. Yeah, because 2001 was just an aggressive valuation, and actually 2001, I mean, there was a lot of things going on, but the thing that like really clapped it was that it was just before even the Fed cut the rates, the market was already down 20%, which was crazy. So maybe that could be like here today, but we'll find out. But yeah, the 2000s, I mean, I was not actively trading then. It's interesting how much it comes up. I love the history behind it, but it was definitely a different time. Rather rip it off than rip the Band-Aid. But that's the thing, though. You don't know, like, what's going to happen if you rip the Band-Aid off. That's the, like, you know, like, that's the thing. Would you rather have the devil you know or the devil you don't know? I've not played the banks yet. I think maybe before or directly after. I think we did that last time we went for the bank plays, but I'm going to be looking for that. Confident in Christ, rip the Band-Aid. Because that's the thing. It's like, okay, what if you rip the Band-Aid, you run the risk of companies going bankrupt. If you pull off the soft landing, everybody suffers a little bit, but nobody goes bankrupt, therefore stopping the next big domino to set shit off. Because that's it. The minute you get a big bankruptcy, we're effed. I hope you guys realize that. The minute somebody with big money says, I can't pay that money, I don't got money, I need to leave, I got to go home, I'm sorry, I just don't got it, you shouldn't have loaned me $85 billion on a high-yield corporate bond, that is your fault, it is unsecured, we have to file for bankruptcy. If that happens, investor sentiment, imagine everything you've gotten right now and then throw in a bankruptcy that you have not had. So all of this right now is without a bankruptcy. All of this market sentiment, the fear, people freaking out, it is all without a default or credit event that has not occurred. That's the craziest part about all of it. So that's why it's like if you rip the Band-Aid and you just let everybody get clapped, do it fast, do it quick, let what needs to happen, happen, you run the risk now of somebody, just getting clapped. Another new in the lay. Very weird, again, especially considering the good earnings. D-Walk on watch. SoFi's still killing it. We're kind of chilling, even though we're selling off. NASDAQ's still down 1%. Dow's pretty much at break even. SPY could go either positive or much more negative from here. I think oil's still up. I don't have any of the SPY dailies, but they do expire today, right? I didn't think about that. Oh, shit. May the 4th, bro? They are kind of expensive. I'm kind of down, though. Not going to lie to you. Luke Powell going to save it. Luca Powell. This is showing good earnings doesn't mean shit. All about the whale sentiment. To a degree. Because, again, some of these earnings were good. I'm pretty disappointed in them. Namely, Airbnb. It was good. Yeah, Airbnb was great, and even they sold off too. But I do think once we get Powell out of the way, you'll really find out what happened with earnings. And it's just high correlation at the end of the day. A lot of them reported very bad, or at least just not what people were expecting. DWalk is popping. Uber, I am considering it. I might just wait till Roblox's earnings, but if the next couple days, especially after Powell, I think I might go with Uber now, unless JP Morgan becomes extremely more attractive and goes down in the meantime. Still holding the Sam share. Still clapped on that. Been a long time coming. I should have just bought a cheap house in Ohio as a down payment. Cheer! God bless you. Y'all showing love on there. I need to get the, what's it called? I need to get the dashboard up so I can see it. Shout out to Ohio. Amen. Elon changed to NFTs. Maybe Coinbase. DWAC popping. Don't know what that is for. SPY coming back up now. So little move into Powell here. You like beach houses near Myrtle? Curious. Yeah, they're really. Beach house is good because, I mean, a view is always going to hold. And it's also good for vacation rentals as well, too. Oh, shit. Yo, that's real. I guess. Look at this. Are you ready for this? Has anybody seen this? This was by Mr. Kenneth, baby. God bless the coal. Look at this. I think it's real. Bro, that's a Nikolai semi-truck. Battery electric vehicle. I don't know why it's a new truck and it looks so old, but bro, that's a Nikolai semi. Is it fake? I don't know. It looks. Oh, it's not hydrogen. Something there. In my country, I would get arrested if I made anything like this. Very bad. This looks very, very suspicious. It's a new old Photoshop fake. Well, either way, the chat's going crazy. They're pulling it. Spy pop a little bit there, VWAP. Let's see. We got an hour and a half till Powell, baby. Or the release and then Powell. I'm a mechanic. That's not hydrogen. Ukraine farming equipment is being stolen. I think I did hear something on that one. And then, again, even today with India and the weather, that clapped the wheat. SPY is starting to really rip right now there through the top. Coming right back up here. We're right below open. We'll see how this plays out. TLT is only up 0.25%. Surprisingly, bond volatility is not that bad. Even Uber's coming up. It's wild because even Uber's earnings, besides like guidance, which was still up, I'm just surprised. How will the rate hike affect AMC stock? It's probably more likely to bring it down than anything, just because it's a high growth name. But we're gonna find out. I think everybody will get affected to a degree. It just depends on what Powell says and guides. Apple's even launching up. DWAC is on the high. SPY just woke up all of a sudden here. The hour and a half rally. Let's see. Insider trading. Nah, people could just be feeling good, but I mean, at the end of the day, where are we? We're at the same place as Monday, pretty much. All of this movement is just, I think, don't get hypnotized until Powell speaks, nothing's happening, especially with it so close. I mean, we might see a little bit of a range break towards the top, but I do not have any crazy expectations. Ba-da-ba-ba-ba. Bop it. Oh, where is my bop it? I think it's somewhere here. It's the Powell put. Big money rug pull, maybe. Intermittent volatility. I did a TBT play today. We went both ways, but I think as we move forward, we're going to go from there. On my way to get married at the San Diego courthouse. Going to miss Papa Powell. May the odds be with you. Good luck, baby. And congratulations. Oh, dude, big money rug pull, dude. It's real, dude. Don't forget about it, dude. It's real. Market bottom on the market exact level. Do we do this again? Well, we'll see, because it's just going to be different, and there's different things going on right now. That's it. That's all it's going to really come down to, is that you are getting a double rate hike instead of a quarter, and you do not have the same... You don't have the same negativity as last week or last month coming into it. And then we had not only the other earnings and other stuff, but mainly a lot of the stuff chilling out there in, what's it called? Chilling out in that one place. Russia. Being long and short at the same time. I pretty much think there's going to be massive rate volatility, but historically, it's very hard to determine what's going to happen. I mean, really, quite frankly, today is going to be an inflection point. The bond rates will either continue their rally, and they're going to keep going higher, as they have done 2 out of 3 times following an aggressive rate hike action. So it's either that's going to happen, or like the year 2000, it could be a case, or even other instances not as aggressive, where literally anything could happen, where they come in and then it just starts moving and then that's it. So that's where I'm saying it's an inflection point and we just go from there. So what is this market going to do? That all depends on the guidance that Powell gives. Facebook running. Apple, too. Apple's on fire. Let me take off DWAC. There it is. See if Microsoft, Facebook's about to go positive. Oh, we're the oil place. And he plays after Powell. I will, actually. I do, depending on what it is and what we can interpret right away. That is in the cards. Is it not reasonable to say big money will come back in the market to pay themselves, depending on the situation and what is most incentivized? Because that's what just people are. You got to realize the big money is there, and they're going to put their money where it's a guaranteed win. Right? That's why you saw them all act stupid and all the analyst ratings are high when everybody was there. There was money to be had. So that's why it gets interesting here, because now what happens if all the money just goes to bonds? What are you going to do, retail? when that's it. All of the big money just goes to bonds because now if people really believe inflation is coming down and then the bond yields are that high, all of the money is going to go to bonds. Or it could go to real estate. It could go in different areas. So I do think they will, but it all depends on what is incentivized. That's it. And that's why right now it's difficult because a lot of things are uncertain and you can't really say with certainty how the next 6 months is going to look. Simple as that. Can you tell me with certainty what the price of food, energy, oil, and even tech and bonds will be at? Can you tell me that with certainty? There is very little evidence you could use right now to say, yes, with certainty, we believe the market is going to do this. FDA says no evidence to support repeating Paxlovid after relapse. Pfizer got a cheek lay off that. Facebook is launching. Pfizer is coming down off that. Tesla 1000 a day. Beyond Meat. I forgot about that one. That lasted for a day or two. Don't they have earnings? Maybe they go crazy. Bop it. TLT and TBT, yes. Well, TBT shouldn't be up. They should be inverse, yeah. But that's how they're designed. It's the UVXY of the TLT of the bonds. There's value. Abby Violet Greed. They're holding up. Tech is picking up. I should know this, but what's the relationship between bond demand and rates? More bond demand, lower rates. Less bond demand, higher rates. So if people don't want it, if it's risky or they don't want it, the price goes down, the yield goes up. Vice versa. If people want it and demand it, the price goes higher, the yield goes lower. So that could be a little confusing, but quite simply, I mean, if there's no demand for something, if you offer a higher incentive, chances are people will do it. Like if I said, hey, if you like the video right now, I'm going to give you nothing. Right? Is anybody incentivized by that? If you like the video now, I will give you nothing. Okay? Now, what if I told you, if you like the video right now, I will give you a 12% return on your long-term guaranteed by April 2023. Now would you like it? You see what I'm saying? So less demand, you raise the yield, right? Higher yields indicates less demand, and then vice versa. Otherwise, if everybody wants it, then you don't really need to incentivize it as much. Just voice cap. Are you trying to entrap me? You trying to put me into a fake digital contract with zero consideration or context? You should work for NBC. It's a good deal. You guys are already analyzing the deal. You're like, yeah, I'll take it. I think that's good. Fixed return on the likes. I mean, why not? Right now in this market with this uncertainty in the POWELL and the economy, I mean, I think a 12% yield on the likes is pretty fair right now. You know what I'm saying? It's very simple. Very, very simple. I create 10 new YouTube profiles and like it 10 more times. That's the funny part because that's pretty much what the banks do. Depending on what happens, it's called a shadow bank. And there you go. And that is why we still have leverage, even though it may not be felt. Amen. What is balance sheet reduction? Is that a bond or securities? It's the overall balance. So I believe the Fed owns securities as well, but they also own mortgage-backed securities, and then they own Treasury bonds. So they have a balance sheet. Every single month that they go in, they're buying stuff. So during all of 2020, every month, the Fed was buying hundreds of billions of dollars of both bonds, like government treasuries, like TLT, and buying mortgage bonds. So balance sheet reduction now they are holding about $8.9 trillion of assets. So the plan here now is to reduce that balance sheet. So what they want to do is little by little either sell off assets or simply not reinvest in the same assets that they are holding. So the amount of assets that they are holding begins to fall off. And then that way it's real market participants buying and not them. So when the bond prices go down, we could assume that market will head down with them. So listen, we got to just describe, well, there's bond price and then there's bond yield, right? So if the price of a bond is going down, that means the yield is going higher, right? So in that case, it usually there would be an inverse correlation. It used to be bonds go up, stocks go down. Stocks go down, bonds go up. But lately, since 2020, it has been a positive correlation. Again, here is the problem. In the last 6 months or 5 months, it's a different ratio. So the ratio is different. Like there's more stability in the SPY. But look at what happened from the beginning of the year to now. The price of stocks went down. So theoretically, that means the price of bonds should go up, meaning that the yields should come down, but they didn't. So what's happening, what you could notice from just a simple daily chart between the two is that bonds have sold off in the last 6 months, and so has the stock market. They are a positive correlation when they should, in fact, be inverse. We have TOT. That's what helps the Chads. Well, pretty much SPY goes up, TLT should go down. SPY goes down, TLT should go up. So why did we make so much money in March 2020? You know, not only do we have the best timing, right? And where the fuck is 2021? Why do I have to go back so long? How has it been 3 years and we're still talking about it? So here's TLT, right? It went up. But what happened to the stock market around? I'm doing it again. Stock market went down. Very, very big, right? Very simple. Very, very simple. That's why even in this case, if we do the opposite of here and raise the rates, that's why I'm saying we might get a move. But quite simply, there should be some level of reverse correlation. Again, stocks go down, TLT goes up. But lately, the problem is over the last 6 months and even longer, so the bonds, TLT has been going down, but so has the stock market. That's unusual or odd, but kind of familiar over the last couple of years. So that's the simple explanation, more or less. Stocks and bonds are correlated when both are driven by the same thing. Easy money. Yes, and then once it turns into an animal. Right now, it's just like the easy money is where it starts, and then you start to see that. But now it's like, now we have the energy. Now we have the food in these other countries, and then now we are needing to raise rates and stop the economic recovery and all of that. So the yield, you could just look at bond yields, just look at different durations, and that's what it is. So to track the price of a bond, you effectively just look at the yield. If the yield goes higher or lower, that lets you know about the bond. But again, the paradox that people don't realize, if the yield goes up, if you see bond yields go up, that is bearish. That's not good. A yield going up means people don't want the bonds. If yields go down, that means people want the bonds and they are demanding it. That's why you have had low interest rates and low yields throughout the recovery, because the Fed was giving demand and they were trying to spur economic activity. So right now, they don't want the same economic activity because they think it's too hot. So they want to slow it down a little bit. Hence, they want to start raising rates, and then yields would go higher. They don't want that demand to be there. This is why Burry did say to short the bonds around there. Yes. It's very interesting that he closed the short and didn't reopen it, but yes. So right now, what would you do? Buy a 10-year bond, stock, property, or other? I would buy property or stock and then a bond. I still don't, unless you're like old, you don't need a bond. Unless you're going to do a fat leveraged option trade on the bonds, I wouldn't buy a bond. But otherwise, I mean, I think there's some good prices on stocks right now. But I like real estate because, again, real estate just has the most stability right now in my mind. We've seen it. Everything's moved. Real estate hasn't. We'll see if things end up coming down. But for the most part, I'm still real estate and stocks primarily. That would be the number one thing I'd want. That's a poll, though. They want a poll in the chat for that. Are there any good reason to wait longer after Powell to buy Uber? Yeah, because Uber is at a key support level, and depending on how Powell goes and if market sentiment goes sour, we'll get clapped on there and it could send it through, and then we'll go from there. SPY ripping through the high. Facebook's been on a tear. Beyond Meat is up. Amazon's still down almost 2%. Axios suing Activision. New York is suing Activision, saying CEO Bobby Kotick was unfit to negotiate takeover bid. Interesting. No. Yeah, that news is coming out there. It's not having too big of an effect. Again, Buffett just took another additional stake. Remember, that's what we got coming into this week. So keep that in mind. No worries. That was a good post. Good post. Caused the run up. Just like yesterday. A good old case of nothing. Brent crude is rising up. Yeah, USO is going up. Dude, oil may come back to 110. I don't think you guys realize. That's pretty dangerous. We were back up there that one time, and remember now the China stuff started to play in. But, I mean, 110 is going to be key. Switch, deal reporter chatter again. Remember, there was something earlier this week on him. Holding COP. I like COP a lot. I'm looking at another play on there right now. Because it's been hard to do it. It's just been the August ones because like they went down, but then the spread is like super wide anytime it comes up. So I'm trying to find the sweet spot there to see if it's down. And again, they report on Friday. But I like oil. I mean, again, I said it at the beginning of the week. It started off slow, but, you know, we've burned about 4 weeks of oil doing nothing. I mean, it very well may be the time now where oil could start to take off again. Shell play. Again, there's a couple of oil names on Friday. That's going to be big. Fed is going to be in 1 hour and 15 minutes. It is right around the corner, baby. So I hope you guys are locked and loaded. Again, guidance is the big focus. Balance sheet reduction. Big news will be a double rate hike. It doesn't seem like that will be a surprise, but we will see what happens. And then whatever Powell could say on the economic situation and how the market is moved, those will be big questions to watch for. Honestly, let me see if I could get you guys some analysts, too, who have some comments prior to this. Let's see. Yeah, 5 seconds. I know I was going to get one right here, and then it just shot up, but I think we could wait a little bit. Early PHILO. We may not have a PHILO, unfortunately. Trying to see. The analysts, there's like live analysts. They're not up yet, though. I'm trying to see. POWELL is PHILO. We need more PHILO. Positive message. Surround yourself with great people. That's it. I think we had a little mini PHILO answering Samuel's question. No PHILO is a no-go. All right, let's see. I love you guys. You know that? God bless you. Like, honestly, if you're a PHILO hater, ha. Because, honestly, bro, just shout out to some of y'all who are just, y'all just are beautiful. You know that? You see what I'm saying? What was I just telling you? What was I just telling you? I was just telling you, be around people who, you know what I'm saying? And you know, look at that. You see them go crazy. They're like, nah, I want PHILO. They're like, give me the, they hyped on that. That's who I'm around, son. That's who I'm around, son. So God bless you. God bless you. PHILO's dope, bro. Let me go to the bathroom and let's see where we're at. Oh, yeah, they're talking about the rate. They're doubling rate.
So we not only asked people, as I said, about the sectors they like, we asked individual stocks as well. So coming up, we're going to go through a few of those names as well. We do have some earnings movers to hit after the break. Plus, join the CNBC Fantasy Stock Draft Challenge. You can scan that code right there or go to cnbc.com/stock draft challenge. You can build your virtual portfolio, track your progress, trade to win, and play for free. And that's the best part. Halftime's back in 2.
Nah, fuck that. Just sign up. Free long-term alerts. First link in the description. Get a free long-term. Hold forever. And by the time these dudes retire, you're going to realize they've been saying the same shit for like 2 decades. And you're going to have a long-term. And you ain't going to be a part of the generation that knows everything but owns nothing, okay? So simple as that. YouTube.com/the stock market. And you could click the first link in the description. We also have a Twitch if you get a little crazy there. So it's good, bro. It's good. He came back from the ad too quick. I wanted to go pee. Are you on T-Mobile, Carissa? Because, like, some people's had issues, but I know T-Mobile has been the biggest clapper of all of it with the short codes on there. We will, bro, honestly, like, I don't know. Some of you guys are going to get clapped just because you don't like to hold long term. But, man, Chad, we are going to be a force to be reckoned with. You know that? If all of y'all are just still holding assets, like, you know, bro, we got landowners in here. We got stock owners in here. Everything. Am I yelling? I'm Arabic. I'm Middle Eastern. This is how we talk, bro. Okay? We just get hyped. This is what happened when we on the phone and we get passionate. You know what I'm saying? Would you liquidate losers for Amazon or Google split? It depends really how bad it is. But like I've always said, I just add to the winners. Or I'll add, I just stop adding to it. But let's go, Chad. Let's go. I'm serious. We got a lot of, you guys are pushing weight, man. I'll do it again. Hit up T-Mobile and ask them about the short codes. That's been the big one. It's good, man. It's good. I'm pushing peach. Yeah, I'm pushing peach. Is there a big vote for UWMC? Because I have not voted, but is the guy trying to he's like, yo, I want to offer 20 billion shares. Long terms are born on years like this. They don't get it, man. I never understood the big power of ownership until I became a part of the cult, and I am grateful. Oh, my God. Bring it home, Chad. I ain't even got to talk. Just bring it home. Let them know. Tell them, man. See, there's good wisdom in the chat, man. I don't know if y'all feel them. I really don't know if y'all feel them, for real. I feel you. I feel you just saying that. I'm like, amen, bro. I'm like, preach, bro, preach. Tell them, Notorious. Tell them for real. I did not understand. Or what was it? Let me read it again. I never understood the power, big power of ownership until I became a part of the cult. That's it, man. Ownership, like real ownership. And you don't have to be limited to one or two, but just own some quality stuff and you guys will never be disappointed. And where it will take you in life is amazing. And like I'm saying, man, I'm just blessed I'm surrounded by owners. I know a lot of you guys are just owners. It's different. Do you get what I'm saying? Like, isn't that wild? You are an owner. And every year that goes by, the more that you accumulate, I hope you realize you are an owner. I voted against their scheme compensation plan. Oh, I'm telling you, it's beautiful. It's going to be good. The Fed is coming out in about an hour and 10 minutes. It's not the minutes. It is a live meeting. So it will be a live report, an active FOMC market decision, and then you are going to have our guide to later, in just a little bit. After that, 30 minutes after will be Young Pow Pow. Pre-written come out in 10? No. That's at 11. I think you could vote on the, what's it called? You could vote on the UWM offering. Or I don't know if they're doing an offering as much as like a compensation plan or whatever it is. But I haven't voted yet. I have to take a look at it, but I'm sure through your investment portal, or I think Robinhood sends you like a colorful email or some shit. Jerome is speaking in 10 minutes. What do you think, TLT, more up or down? I'd like the return if TLT goes up. It's like, I feel like TLT, and that's just what's happened at times, is eventually once rates run hot enough, like rates go down enough, and then you get an event, there has been a time where historically it turns. Again, just like in 1987, eventually, even though it was a crash and everything, it started to drop down. But I'm kind of leaning, I kind of think TLT could go up, but at the same time, it's like there is another second leg. So I'm like 60-40, I would say. I'm saying 60% TLT goes up, 40% it goes down, but then that way I made sure I got more time on if it goes down or if it goes up, and then less time if it goes down, pretty much. I believe. No, I got more time if it goes down, less if it goes up. But I'm leaning towards the pull reversal, but like I'm saying, it could be anything. And just the history of this is just like the historical background is like very wild. Like you just don't really have, there's nothing clear cut about it. Every other time it's happened, it's been a shit show. It means something is happening on either the front end or the back end. They are either just beginning to deal with something or they are coming off of dealing something. And that's where again, I hope you watched yesterday's watch list and you can see it's pretty wild. 1 hour and 10 minutes till Powell comes out. Goes down. It's just, there's this second half. I think, and then that's the one thing too, is that pretty much if bonds do go down, I think TLT can go lower after this, but I don't think it will go much lower. Does that make sense? I think worst case scenario, I think I think the next flush maybe takes us to like 113, maybe 110. But then that's it. And I that's the key though. It's like, even if it does go down after this, I think it's limited as how far it could go now. It's if they are doing half a basis point and if they are doing all this other stuff. So that's where I'm like, do you see why I'm like, there's more upside than downside. However, TLT does not need to go down. It doesn't need to go down, and even if it does go down, it doesn't mean it'll do it to a bigger scale, but then same thing on the reverse, but the reverse just has more upside. But it doesn't have to go up just because we're close to the floor. So that's kind of my view. I hope you guys understand that. That's the big thing you could take away from this, is that I really believe after this event, and this is my opinion, I very well could be wrong, but I really think it's notable, is that I think this is the second half of rates. Meaning, after today, after the Fed starts double hiking, after they start announcing balance sheet reduction and going upon a more aggressive plan, I don't think bond yields could go much higher. I think they can go higher, but I think there is a cap. It's not going to move another 2% in a month is what I'm trying to tell you. It's not going to go and do another one of these, but we have still yet to see real volatility in TLT. But it's not going to do another, one of these 140 to 117 to 120. I think TLT could go down maybe 5-10 more bucks max. I put you to sleep on TLT. That's cool. That's cool, bro. You like the guy ditching school for 4 days a week, and then you got to tell me that you ditched school for me to realize how cool you are. But other than that, that's good. It's not for everybody. TLT is definitely not for everybody. Market sentiment on rate hikes. We'll fight. I think it's going to stay roughly the same, but we'll see. Unless he signals something on 3/4 of a hike. This is an inflection point. I wish every other TLT I've had a lot more confidence. So this one I feel a little different about. But this is a big event for rates, you guys. That's the best thing on it. So TLT, don't get too excited about it. Don't ignore it, but just understand this is the first time in 20 years, and every other time the history behind this is not going to be light work. So the next few days after this, and depending on what he says, get ready. I just went both ways on TBT, but it's not like, I don't know if this is the TLT play, but like I said earlier, I would feel like a schmuck if this is one of these big events on bonds, and I'm not really getting anywhere near to it. So I got to. Oh, what color tie will Powell? Oh my gosh. That's crazy. You guys could bet on Powell's tie in the Twitch chat. That's a good bet. That's a good one. FOMO Josh. I do not mean to FOMO anybody. That's why I'm keeping it small, but I think it's recognizing just what's going on. It's a big, big bond move. I FOMO'd you. Well, don't. Do you want me to sell out? I can sell out right now if it'll stop the FOMO. But then I'll just have to watch it. Oh, you guys want to get real crazy? I got an idea. Let's trade some bond futures. Huh? No? Who's with me? Hey, bro, they trade in commas. Yeah. Oh, we could just trade bond futures, bro. What are we looking at? Oh, dude, it's only $2,000 a contract. Oh, let's get it. Yeah, son. Yeah, we can see it. Bond futures on Powell Day must be insane. It must be insane. Bro, it must be absolutely wild. We'll make sure we look. Again, right when Powell comes out, too, it is going to get wild. How does one take delivery of what? Of the bond auction? I think it just settles in cash. I don't think you get treasuries. 417, baby. They made an update where we could have multiple answers. But don't you have to pay for it, though? Or is that saying, like, multiple? I saw that there's more than one. I love it. Ba-da-ba-ba-bap. Coming on the merch. You can't stop the rain. Hold on. Everything Moon is going to take. I'm trying to see if we could knock this out here. CNBC final trades, Hood. It was yesterday. All right, let me go to the bathroom real quick. Please hold.
That'll relax and.
Jason Snight.
If he goes to ad, I'm gonna clap him.
I like Honeywell here. A nice revenue beat on the quarter. They've been outperforming the market. Stay long.
Okay, and Joe T.
Burke, nice boring name.
Yeah. All right, great stuff, everybody. I will see you in overtime with Jeffrey Gundlach. The exchange begins right now.
Thank you, Scott. Hi, everybody, and welcome to a very big day here on the exchange. In 1 hour, we get the Fed's decision on interest rates. We know what to expect, a half-point hike, but how hawkish will the statement be? What will Chair Powell himself say in the press conference? And most importantly, what are markets positioned for? Those are all the key questions we will try to answer this hour. And as the Fed ramps up its tightening and rates are surging, it might seem like the worst time to get into growth stocks. But our guest says they're starting to look attractive and tells us which headwinds he sees abating. Plus, he thinks they'll outperform if we enter stagflation. And it's not just the U.S. Central banks around the world are raising rates. We're going around the globe looking for opportunity with longtime investor Mark Mobius. But first, Dom Chu is back, and he has our market setup.
Okay,
Dom.
so the market setup is you're not going to expect a whole.
Yo,
heck of a
I ain't
lot of
gonna lie.
volatility ahead of
Yo,
the press
that
conference.
sound effect was dope. That like whoosh-oo. It sounded like I was playing Sonic. I swear that was a Sonic headline, like a sound, you know? Mm-hmm. That was crazy. All right, are you guys ready for this? 10:02, 1 hour left. He can't be too aggressive. I don't know. Aggressiveness might be better, but you run more unknown risks of people freaking out. And you already see the markets freaked out and responded to pricing a little bit. So we're going to see. It's an interesting one. WTI extends gain, rises more than 5% as EU targets oil. Again, that's the big news for today. Fed rate shows 0.75 to 1 is 99. Because right now we're at 0.2, right? So if they do a double rate hike, that takes you to 0.75 to 0.1 or to 1.0. 418, baby. It's running. It's running big. I wish you the luck. I wish you the luck. You know? Do banks usually use the midpoint of the range? It depends. It's like they just keep it in a quarter point range, just depending as supply and demand. So as demand increases or declines, they start raising it up depending on what the market's doing. We are ripping. Cares too much about the stock market. He doesn't. I mean, you haven't seen 2018 Powell. I'm telling you, 2018 Powell gave zero Fs, as the kids would say. I'm telling you. Very, very intense. Like, it went down, bro. It dropped very, very fast. It's a lot quicker than this one. Bring back 2018, Powell. I don't know. I don't know how that feels. Powell went Hollywood. Powell just had to deal with the big situation. I know you guys are saying it's Trump, but Trump appointed him. And Trump would just, like, talk smack all day. I remember the Twitter beef. So it's very interesting. There it is. Now it's coming off. Now we're getting it. So, ladies and gentlemen, boys and girls, SPY coming down a little bit, but don't worry about it. Let's go. Let's go, Chad. You inspired me. Okay, I have a couple PHILOs, but I got a super quick one. Trust me, it's going to be very fast. This is not going to distract from anything with it. I'm just going to say it very simply. Okay, this was the verse of the day yesterday. And I just want you to read it, and I'm going to just tell you one point. And I got one thing to give you all right here, right now, okay? Are you ready? It says, Isaiah 54, no weapon forged against you will prevail, and you will refute every tongue that accuses you. This is the heritage of the servants of the Lord, and this is their vindication from me, declares the Lord. That's it. That's all I wanted to tell you. And I just want you to know one point about it. It stuck out to me. I actually saw it. I think it was this morning, because the old verse came up, and I just started thinking early. I was like, wow, I like it. Because it's very simple, man. Y'all just got to keep fighting. Do you realize that? Do you realize no weapon formed against you will prevail? Do you realize that is your heritage? So some of you, I'm just trying to say, bro, that's hereditary. It's in you or it's not in you. And some of you are going to be the first people to lay it down and establish this in your heritage. Do you understand me? Oh, Chad, I don't think... They don't feel me, bro. For real, I'm telling you. And I don't know, man. It's finger to the sky. You know that. I know what family I'm a part of, so it's very simple. That we have a different heritage. Okay? That's it. It's a heritage. I want you to really think about that. Okay? And I hope y'all make this hereditary. So, Chad, I hope you're ready for Powell. Today is a historic event. And I hope these small words can stay with you, and I've given you enough encouragement to just take it to the end of the year and the end of the decade. So let's get it, baby. That is your fastest philosophy ever. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press high chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts Bootcamp and Real Estate course. Follow me on Instagram at the Trading Fraternity. I love y'all. That's it. That's it. How do you feel? How do you feel? You feel good about that one? There's a simple PHILO, but I don't know. That verse just stuck out. The heritage. Just think about the heritage, Chad, okay? That's it. Just think about the heritage. That's all you got. That's all we got. Actually, here, I'm going to play you just one song. Just one old song, okay? I didn't plan on playing this song, but let me just give you one, okay? That's it. Let me give you one. 95 balance sheet is expected. Isn't that bad? No, that's expected. That is expected. I think it's like 45 and 50 mortgage and then the other ones. So 90 combined. But yes, that is expected. I got a good one. I think it's very applicable today. Are you ready? Are you ready, Chad? Is it playing? I don't think it's playing. Hold on. It didn't play. Okay. Take two. Take two.
Man, you ain't never seen anything like this. It's a power put called Howard Schultz. I think I need some coffee quick. You don't like me, hop off my dick. I know it's sounding ominous. The market's drop apocalypse, but I'm just using common sense. The same thing happened once before. I'm talking 1936 or 32 through 38. Markets then employment rates. The Marxists say the system breaks. The right side said it's because trade. The left side blames the word that said. The rush is in a election. Historical recession trade. Come to see Republican. The opposite of pro is con. So Congress, what is going on? They won't tell us what's going on. So I'ma show you through a sign. We fucked if budgets take too long. We put some sanctions on Iran, but that don't mean the problem's gone. But wait, who said it's a problem? Yeah. Think about that for a sec. Are we gonna pay the debt? Keep the AAA credit. Get the people all fed. Get the people all messed. Till the people all dead. Do we really need the Fed? Trade the freedom in for cash. Freedom for a double tap. Trade the freedom for a Mac. I'ma leave it at that. It's a power put called W. Bush. We need to start a war real quick. Our top export is armaments, the land of free that sells the death, the blood and money in a sec. But that won't make you not invest, cause Bowen hit record profits and I'ma get that divvy check. Yeah.
It's the power put, ladies and gentlemen. Gonna pay the debt, get the AAA debt, get the people all fed, get the people all messed, to the people all dead. Oh man, do we really need the Fed? Trade the freedom in for cash, freedom for a double tap, trade the freedom for a Mac. I'm gonna leave it at that. Oh man, it's the power put. Call Howard Schultz. Oh, I'm excited. All right, Chad, I hope you're ready. I hope you're as excited as I am, man. You are living through the history, okay? You are living through the damn history. And this is it. Again, can I say something? Even though I talk for 7 hours a day, and quite frankly, you cannot stop me from saying it, but I feel like I need to ask you this to get you in the right mindset. Okay? I don't know. I don't know if I'm allowed to or anything. Do you guys realize? Now, this is what I want to tell you. Today is historical. Something from here can happen. But I'm telling you, it is not just a one-day event. So please understand that. Where we move from now will set up a short-term trajectory for both the rest of the month, the rest of the quarter possibly. But even immediate reactions, there is going to be a lot of digestion. So I'm saying this is historic, and I know this is a very important day, but that does not mean you are going to watch all of the fireworks today. You got it? Good. All right, we good to go. So 45 minutes, baby. 48 to be exact, and let's have some fun, and hopefully you're ready to go. Hopefully you're ready to go. It's going to be good. No one knows. That's why it's fun. And, I mean, the fun part for me is what we do know is that they haven't done this in a while. And I just love being a part of stuff that we have never seen, because now the history books kind of come to life a little bit. And that's where I think this gets very important. Again, it hasn't happened in 20 years, 22 years. Every other time we look back at it, it's a very rare opportunity, or there's a rare marketplace, more or less. But now this is you are just sitting at the front line of where we move from here, and that's the difference. You're not a spectator anymore. You're watching this from the driver's seat practically. So I hope you're ready. You've been through this with Greenspan. Well, then, yeah, you actually have. You actually have. If that's the case, then you remember what I'm saying with 87. Then you remember what it led to for the next couple months and how high interest rates were. And we were asking people today who got to live through some of those moments. It's interesting to see people up there. Well, that's when Greenspan took over. That was what we showed yesterday. This was the fun fact. I'll give you guys. I won't make you watch the watch list. That's fine. Y'all lucky I love this shit. You know what I'm saying? I'm excited about it. That's why I just can't wait to share it with you. You see? Oh, no. Is that what it was? I think it was the other one. Yeah, you can see it. Greenspan takes over. I show it. Damn, I thought I had the full one. But this is the kicker. So Greenspan took over, and then 4 months later, this happened. The Fed didn't even give a target rate from October to November because the stock market crashed roughly about 4 to 6 months after they did their first double rate hike. Fun fact. So this is why I said it was interesting, because that in 2000, the financial events that followed the double rate hikes, it allowed them to play with policy a little differently. Or at least in 1987, they went from double hiking and going up to about 6 months later, one of the biggest stock market crashes. And then the next 6 months after that, they started playing with policy. You know, they started going up and down, and then they gave them it gave them the flexibility to a degree. Do you guys understand that? Do you see how an economic, like, let's say there was major volatility, in a weird way, it could benefit the Fed because then it would give them flexibility. Do you see the difficulty right now with the Fed? Right now, it's been 2 years since the recovery. You have Ukraine and gas and this and that. It makes it harder for the Fed to be flexible. But in following 2000 and then following 1987, the volatility, it gave them the opportunity to be flexible and start, okay, now we got to cut rates and then we'll raise them again. And now we got to do this because now we're responding to this situation. You guys following with me? Shout out Josh. Who is doing this for free? Man, who loves it this much? I know y'all love it with me. You know what I'm saying? I know some of y'all, you weren't like this in the beginning. I feel bad because I did hit you with it. You know what I'm saying? I hit you with this and I turned, you started hanging out with me, and instead of me, like giving you blunts and shit, I just started giving you mad pow. You know what I'm saying? And then you just started getting mad pow. And then now you love the pow just as much. And now we... So I apologize, but you're welcome. Okay? I'm sorry as well as you're welcome. You see what I'm saying? Because now it's just like, yo, now we in this Powell shit. But it's funny, though. It's really, really funny. You know why? Because if you talk to somebody who is not initiated, as we are... I like to use that term, the initiated versus the uninitiated. I feel like it's like a respectful way to say so many but so little things. But it's just like people don't know who the fuck Powell is. You know that? That's the crazy part. That's the nutty part about this. Even my own damn mother, bro. Even like people, they have no idea, bro. You know how, honestly, and where my real estate agents at, baby? Shout out Call Real Estate. You got a real estate call tonight, baby. Email them. callrealestate@gmail.com. You know how many real estate agents have no idea what the hell the interest rates and how they get affected and all? You know that. I'm just saying. I'm just telling you. I'm keeping it real on the real estate front. But there is so many people who just do not know what Powell does, let alone the impact, let alone just how important every one of these meetings is. And some are less important than others, but man, it's fascinating. So God bless you, and I just hope you guys are ready. We got 40 minutes. 40 minutes. 40 minutes. Smoking that Powell pack. I know some of y'all got addicted to Powell, but it's worth it. That's it. If you could just follow up one person, then you'll be good. Josh grew up in the hood. I did not grow up in the hood. I mean, initially, we did not have really the nicest. We grew up in El Cajon, if you're familiar. And then we moved, and then we almost lost that house. But I think it's the culture and the people I spent my time around, more or less. And then eventually, once I became independent enough where I didn't need a job from somebody or I didn't have to listen to judgmental ass people, I just started doing and talking and saying whatever I wanted, quite frankly. So, and that's why now I don't have to listen to anybody. And now it's kind of like hey, it's kind of a middle finger to the people who tell me to do certain things in that way. But I love you and I love everybody. And that's all it comes down to. So, and we love Powell, baby. Uh-huh. El Cajon, man. What you know? What you know about Hamashah? They don't know about that life. Nah, but then it was cool. It was cool though. I'm glad with everything to be exposed to. Even when I was younger trading stocks, like, dude, I wish I knew who fucking Powell was. Powell wasn't the Fed chair, but man, I think it was Greenspan. Or Greenspan or Bernanke, that little mother effer. But either way, it was still just, knowing this type of stuff, man, it goes a long way. It goes a long, long way. And that's what I'm saying. Like, even my parents didn't even understand this back then. It's crazy how many people were even investing back then and they had no idea. Oh side or no side. You like Bernanke? No, I honestly think it's amazing how some of these people get these jobs. You would be surprised. Like, even in the 70s, I believe, I think during the 70s, the Federal Reserve Chair, I believe, and then the head of the economy, or one of the economic advisors for the president, had zero formal economics training. And then he filed for bankruptcy. It's actually a wild, go read about, let me find out who it was for you. Let me see what his name was. Powell has no formal economics education. I believe he does. And then on top of it, Powell has like market experience. Like, Powell worked, what bank did he work for? Powell was a banker for a very long time. Banker and lawyer. Powell has a different set, but I know he has some level of training. It's a lot different. Like, let me find, who was it? John Connolly, the Treasury Secretary. That it is. John Connolly, the Nixon-installed Treasury Secretary, did not have formal economics training. Let me see. John Connolly. I think former governor of Texas. Yep. Like, he was just like a war guy. And then he just represented like legal people. I guess he was. He was a lawyer too. And then he went bankrupt. But again, the 1970s, it was a fiasco with inflation, but you should go read about it and see the similarities and just like the crazy stuff. So that's always my thing. Most of the Fed people I haven't been a fan of, except for Jerome Powell. And it sucks because I don't say that as if Jerome Powell hasn't done anything bad, but he's probably my favorite Fed chair. I would say, and he's probably, I think we've been blessed to have Jerome Powell. I know it may sound weird to some of you, but I do think we are blessed with Powell. I think the Powell has been a blessing for the most part, except lying about transitory. And I don't, maybe he had his reasons, or maybe he really believed it. But other than that, I think he's a stand-up dude who's handled the position a lot better. And that's just me from my uninitiated outside point of view. And I say uninitiated simply because it's a difficult job. It's his own little private club and party, and there's stuff with it. So very interesting. All my homies hate J Powell. That's good. You have good homies then, for the most part. At least they know who that is. I don't even know people if I ask them about J Powell. I don't even know what they say. Get ready, bro. The moment is arriving. To be honest, as in long term, he committed to transitory. He stayed committed and explained once he changed his mind. I love this guy. I like the take. I'm with you. I think it was just the transitory thing was a fiasco because it was Powell, it was everybody, it was the damn government, it was everybody you could think of. You guys saw a lot of private citizens took it upon themselves to spread the narrative and fight people if they disagreed that inflation was not going to come down after 4 months. So, but I feel you. He did say it right away. He did do good, but I do feel that's a good take. That's fair. Fair. I like it. Holy shit! I was saying it is transitory. That's what we call propaganda. That's what we call. Some of y'all just started doing it though. I feel you. It's okay. It's forgiven. We all learn. But I just remember for 2 or 3 months, I had arguments every other day with some random Chad about them pulling up all sorts of statistics to explain why transitory was true and that it was all going to come down. So I was like, I don't know. I feel. Word. The only problem, he's slow. He moved pumping the brakes. Asset purchases were too slow. That's the paradox of Powell. Because I agree with you, but that's the thing I like about him. He is slow, but the paradox is how fast he responded when there was a situation in the beginning of COVID. And I think that's what shows you when shit really hits the fan, they go quick. If they're not scared, they go slow as possible. And that's what I think this meeting could be so important, because if Powell starts picking up the pace, that means they're worried. If Powell is kind of chilling, there's a kind of, you could always say they're behind the curve, but then in deep down, you could also say maybe he's not worried. So I feel you, though. I feel you. The Fed runs off lagging indicators. Yes and no. Because we get most of their data a month later, if you think about it. So we also operate off lagging indicators, but they're getting it first. Buying. Oh, I do. The last week or last couple weeks here, some of the real estate stocks took a big dip. So I think if it could come back to an appropriate level and I'm not paying too much of a premium, I'm down with it. Right now, Uber, I'm really eyeing, and then JP Morgan. I mean, we still got our deposit. I would love to see Roblo's earnings, and we'll go from there. But, I mean, there's stuff on the table. I got an idea of what we could buy, and then we're going to see what happens. Papa, I'm in a coat. Hey, every other day. Do you eat? We'll eat when the work is over. Once Powell has spoken. Once Powell blesses the market. I heard a lot of critics say he was very, quote, quick to throw in the kitchen sink at the start of COVID, but should have been just as quick to respond to skyrocketing inflation. Yes, and that's the paradox of it. That's where it's like, huh? Like, why? Like, man was really fast to literally cut rates, quantitative easing. Everybody, even with fiscal spending just super high, he was like, yeah, go do it. But that was a full economic stop. Like, literal, no exaggeration, global economy stopped. But that is the problem there, is that they were slow on it. But maybe you can argue that Powell is not moving fast because, truthfully, they're not worried. But we'll see what happens. After why not expect another one? Elections coming up. Just opinion using my eyes from the past 15 years. Too predictable. Let's see. And that's why, too, I think Powell, my opinion, I think Powell wants to do enough, and then he could leave it untouched coming into the midterms. That way he could kind of avoid it. But historically, I mean, usually the Fed kind of sides with the administration no matter what. Yeah, but we'll see what happens. But I really do think that that's why he could do a double hike now, double hike next meeting, and then chill out until we get into the midterms. Because there's a way to get to 2.5, 2.7 while still kind of waiting at one of these meetings. It just depends on if he's willing to do a double rate hike. And we're going to find out that today. That's the crazy part. That's one thing we have to consider. Maybe Powell doesn't do a double rate hike. Let's see if he follows the market or not. If I don't know. I don't think it's a likelihood. Maybe we could do a poll. So we'll see what happens. Double rate hike is 50 basis points. 0.5 instead of 0.25. How do you play the banks? We see the reaction. Watch if the yields go higher or lower. He's going to raise rates. I'm assuming the banks will go up, but they might have a little back and forth, and then we'll get an idea of where things are at. Airbus CEO still seeks amicable solution to Qatar air dispute. That's coming in. California senators urge shipping carriers to work with exporters. Double rate hike. I mean, I think real estate's already priced into it a little bit. But essentially, it goes hands in hands. You might just see real estate rates go up, but chances are the real estate rates are kind of already reflecting it. In 2020, how much were the rate hikes? I think they were just single point, but then we did back-to-back. Remember, we did a rate hike, and then we did an emergency one, and they just did a set of progressive cuts. I could double-check. I think one of them was like a point cut, though, at one point, I want to say. So in 2020, yeah, you had 2 unscheduled meetings. So in 2020, the rates were at 1.5 to 1.7. And then on March 3rd, the G7, they called to discuss the impact on market and economic conditions. And then they lowered it from 1.5 to 1.7 to 1.0 to 1.25. So that was actually like a half a basis point cut. And that was on March 3rd, the same day of the G7. They did an unscheduled meeting, and then they cut it. And then 12 days later, the Fed did another unscheduled meeting, and then they cut from 1.25 down to 0. So they cut 1% on all of it. So they only did 2 rate cuts to get to 0, and they were unscheduled. And that's it. And again, that's why we knew what to do at that point. That meant, holy shit, it's hitting the fan. So take a look. G7, then March 3rd, unscheduled meeting, rate cut by half a basis point. And then 12 days later, we had 2 unscheduled meetings, and then they cut it 1% to 0. They cut it 1.25% to 0. All within 2 weeks. We pretty much cut 1.5 to 1.7 in 2 weeks. And then that's it. And then stayed at 0 up until last Fed meeting in March 16th. But you got 30 minutes. Let me see. May the 4th. What are the prices looking like? How much? How many time? So height. If oil snitching, probably. It's a good take. The chains are bullish. They're kind of decent. I mean, we only got a couple of hours. $30 for a 10-point move, pretty much. If you think it'll move 10 points top to bottom from right here, it's going to cost you $60 to play both sides, $30 each way. Short UNG. We'll see what happens with everything else. Why would they cut so quick, then raise it so much today? That was in 2020. That was in the midst of the whole global economy shutting down. And now, you know, it's been 2 years. That was March 2020. It is May 2022. It's been a full 2 years and 2 months since that happened. And we've been at 0% interest rates since March. I guess a whole 2 years. Expected move post Powell. I mean, you could just check right now on the dailies. Right now, option chain is pricing in $2, $4.50. It's pricing in 10% on today. You got about 10% pricing, a little bit more. Or no, not 10%, 2%, or 1%, excuse me. I'm tripping. That's not $40. 1%. 1 to 2% pricing in for today. So S&P can move about 1 or 2% is what the option chain is saying. Not 10%. I'm tripping. Just okay. It's a long day. Long day. I'm just excited. Nolens. God bless you, baby. Shout out to Bits. Shout out to Chad. Come on. I know 10%. It's okay. I'm just excited. Let me be excited. Get ready. I know 10%. We about to move 40 points on the Fed. This is the most crazy historical pricing I've ever seen. May the 4th be with you. Are you able to see? You can just check the break even. Those contracts expired today. At the money contracts, if you played it both sides, you would need 1% to break even. So that's what the option market is telling you, that if you wanted to go both sides of the chain, it's a 1% move. If the computers thought the market would move more than that, the prices would be higher. If they thought it would move less than that, the prices would be lower. So factor in the computers and market demand. It looks like we got a 1% move on our hands. Okay. Did I get filled? Oh, scammers. I got paid 2 cents more now? You're a scammer. Okay, I grabbed one of the SPY puts for the daily. And I'm going to buy a SPY call soon. Just a daily. I spent $40 on that. Let's see, which one was that? Again, don't trade that. Not a recommendation. You will get clapped. Only a real degenerate would go for that one. And it's only $40. $4.11 at 69, $40. And let's see, and then the calls, because my plan was to spend, if these go down more, we might be able to get these cheaper. Like the 427s. I think it goes like 426. I might even get it now. We'll see. If we get another red candle, though, the calls on the dailies will be very good. We might stay pinned at VWAP. We'll find out. I grabbed a 408 put daily. Don't trade it. $40. Just a little bit of a risk here. Total degenerate play. Just going after a daily on the Fed. And again, it's 10 points to the lows. I mean, it's possible, but not really probable. Those are 22. Too soon. I could be too soon. We got 20 minutes, so we'll find out. We will find out. It could be because if it's, again, this is a daily. That's why I'm saying, like, even on the call, if I just wait a little bit and this thing goes down, all the calls are going to go down a lot. We'll find out. I mean, you saw how it was playing out the last couple of days. Yeah, come on. Do your thing. This was going to be exciting. Apple sitting at resistance. Even Facebook's up. At least tech recovered. I mean, NASDAQ is barely green. Just went red right there. So we're going to find out. At the monies are more expensive, but we'll bank if it goes in your direction. Yeah, and it depends. It could be wild. And you could go for the banks too, but I think the banks I'm going to wait till they report. And then we'll go from there. And we'll see what happens. Let's see. I'll just keep this one ready to go. What a time to be alive. Up and down. I don't know. If it bounces from here, though, it just gets crazier. Maybe we'll just do it now. 20 minutes. I'll take the 20 minutes of decay. All right, I went for the call. 427. Literally 10 points up. 9 points down from here. Stupid range. $60. Again, this trade is like less than 1% probability. So I hope you guys keep that in mind. That's at least what the option chain is pricing. So we're going to see what happens. I just grabbed a daily. Don't trade it. Not a recommendation. It's a very, very low probability risky play. That's why I kept this small, and we'll see what happens from there. This gambling is fun. It depends. I don't feel like I have more fun at a baccarat table, to be honest with you. But, you know, it really just comes down to this is a moment you haven't seen in 20 years. I think it's a little bit different of a gamble. It's just, I guess it's knowing the difference between possible and probable and not overestimating one or the other and paying too much for the wrong side. And that's what I'm saying. I think it's just a smaller price. You gambling hard. I mean, $70, maybe it's a big gamble. And then I did $800 on the TLTs both ways. I don't think TLTs as much as a gamble, as much as it is responding to the situation. My Wall Street bets is showing. I could show you some. Y'all, I don't even think y'all have actually seen that side. I know you guys have seen some stuff, but I don't really think you've seen it. Oh yeah, I did TBT, not TLT. Excuse me. Same thing in my mind. Friday SPY calls. When you say you're flipping shit coins in LA traffic. Yeah, I guess that was kind of it. That one was crazy, bro. I will never forget that. That one was wild. That's when it was stupid. That was middle of last year, bro. And dude, it was just, bro, the money was flying around everywhere. Hot money, there was demand for everything. That was crazy. Bro, I was legitimately in traffic. I forgot how, I think I made like $2 or $5 grand or something. And I was like, what? This is wild, man. I said, this is wild. Safe Moon. Oh, yeah, Safe Moon. We used to get attacked by Safe Moon Army. Quantitative destruction. That's a good way to put it, I guess. That's a very good way to put it. What time is it? 10:44. We might stay, let's see the move here. We could stay stagnant into all of this. But let's see. Watch the premiums, because the premiums are either going to go up or down. And that right there is going to kind of let you know, especially with time decay. But we're about 16 minutes away. I believe Safe Moon 300 million market cap. Not bad. Have you heard of Step make GST by running in NFT shoes? That sounds crazy. Microsoft, Apple, Amazon. Apple's hitting a high. Airbnb. IBM's at the high. That was nice. You grab SPY. I did a SPY call and a SPY put. Spent about $70. They're a daily. They expired today. And pretty much it's capturing the main points, the main levels. So we could go to like 427, 426. That's the high from last week. Or we go down to a 407, 408, right below the low that we set a couple days ago. So it's a very big move. I saw the opportunity. I could have probably used $70 with more time. I don't think I would have been able to get it that cheap, but I'm down with it, and we're going to see what happens here very shortly. New York Fed accepts 1 million of 1 million in bids at overnight repo. If it's more than 50 basis points, I mean, people would freak out, but I think it would recover. Maybe not today, but eventually, maybe quicker, as people kind of react to Powell taking an aggressive stance, and then it might readjust some people. I think it might make people feel a different way. So we are going to see, baby. The option song. Why? Because I said I could make I got a car, I could make the money both ways. Oh, wait. Was that what it was? You were like, yeah, son. I feel you. Pa-da-pa-pa-pa. Options just go hard. If it's 75, it would be a negative reaction for a little bit, and then I think that would bring us closer to bottoming out, if that makes any sense. So I think it would be negative, but then that whatever it flushes to, that would probably be our bottom after Powell does 3 quarters. And then I think rates would start coming down again, believe it or not. In a weird way, it would be the worst thing that could happen. Or that would be the worst, best thing that could happen. Does that make sense? The chances are pretty low. I think it's about 20%. For next week, for next meeting, it's a little bit higher, but that's it. It should be. We'll see. We'll see. It would be the worst, best thing that could happen. But they don't feel me though. Oh, much love. God bless you. J4520. What's up, baby? I am Edward O.D. I thought I was about to say something crazy. I was regretting reading that out loud. Thank God it wasn't, man. That's good to hear, man. That's good to hear. So, 2 minutes till the 10-minute rig before. What's the channel link you're going to go on to? We're already live on Twitch. I mean, so here's the deal. There's a lot of you guys here. If you don't know, we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. We love you. We are going to be streaming Powell here on this channel. I will be giving live commentary over it, but we also have a backup on Twitch if it lags. And then if YouTube keeps complaining about my commentary, so if the commentary is disruptive for a majority of you here, then we will have the commentary on the Twitch as a backup, and I will mute it here. So I'm going to try to do both, so be prepared. You will be listening to Powell and me at the same time, but either or. But again, if you do get lag, check out the Twitch, and if the chat on YouTube turns into a bunch of B words, then you should just join in on the Twitch, and then you'll be good. That's if y'all don't like it, but I feel like most of y'all are down with it. So I'm down to keep it on here. I'm genuinely just want to make everybody as happy as possible without changing too much. So I think it's good. Ba-da-ba-ba-bop. Predict feeling blessed. God bless you, baby. We need it. I'm down to be an interpreter. I'm always down. That's why I had a lot of fun last time. It's a lot of fun, honestly. It sucks that some people don't like it, but I think it could help you guys learn a lot, and that's why it was a lot of fun last time on Twitch. Last time we did it on Twitch, I gave the live commentary, and then YouTube, you were like, wait a minute, let me get some. So again, I'm giving you the warning. If you don't want to listen to Powell with commentary, maybe go to another stream now, but I'm just giving you the heads up. First move is genuinely a fake out. Yes, possible. We have definitely seen that before. The wild card is 25 bases. I think wild card would trip people out because it's it's negative, but then it's like kind of positive. But then I think a quarter point we would dump. I think or maybe a fake rally, and then the next days would be awful. But 0.75 would be interesting too. But let's just see. We are gonna find out if Powell, is Powell actually going to bring this shit to life? Is Powell gonna actually do a double hike? Is Powell gonna outline a plan that makes sense? Because now this whole time Powell said he'll do what the market says. So let's see it, because 50 basis points isn't a joke. You know what I'm saying? This one is very, very important. So we're gonna really, really find out. The meeting, the report comes out in 9 minutes. 9 minutes till Powell, and then he speaks in about 40 minutes, 10 minutes or 30 minutes after that.
Loosely follow that.
Look at the calls and puts are both going up, and the shit's not moving. So volatility is coming in. But let me go to the bathroom. Follow me on Instagram at the Trading Fraternity. I love you, Chad. Get ready.
Would have been at the start of the pandemic. As a result, 95% of the 100 biggest U.S. housing markets are less affordable than their long-term levels. That figure was 6% at the start of COVID. Kelly?
And this could be a big Fed meeting to find out whether they will actually sell mortgage-backed securities from their portfolio.
Absolutely. And if we see that and we see mortgage rates moving even higher and affordability moving even lower, that just pulls more buyers out of the market. And we have seen home sales dropping for the past 5 months. The question then going forward is, what effect does that have on home prices? Generally, there's a 6-month lag between the two, but there's still so much demand out there, and as you said, so little supply.
Absolutely. Diana, for now, thank you very much, Diana Olick. That does it for the exchange, everybody. Don't go anywhere. We are moments away from the Fed's decision on interest rates. I'll see you on the other side of this quick break when Power Lunch picks up our live coverage for a very important hour.
Oh, man, I was muted, so y'all couldn't hear me. That's good. Get ready. Moments away. 7 minutes. 7 minutes, we get the report. And then after that, it is game time. So let's get ready. Let me send out this stream alert so they are up to date. Oh, y'all hit it with the hype train too? Let's go, baby. Let's go, baby. Is this the right one? I hope it is. Yes. Let's go. Amen. Amen. Let's go, Twitch. I hope you're ready. Again, you guys got the Twitch as the backup. And let's see what's going to happen. Let me see if I could get you some live estimates now of what people are saying. All right, are you guys ready? I'm going to just go through a bunch of stuff here, and let's see what we got. So BMO Capital Markets, they're saying hawkish lever that is more likely to be pulled would be a firmer indication of another 0.5 point in June, or even introducing language that puts a July 50 basis point move firmly on the table. That likely keeps bond market volatility elevated, as there are 2 CPI and job reports ahead of that. So we're going to see what happened. The dollar's surge over the month is showing signs of topping out. Deutsche Bank says sell the dollar, take profits on FOMC day. A bigger correction looms for the reserve currency. The Fed is unlikely to change the still favorable USD tone. Risk appetite vulnerability via the dual supply shocks expressing in COVID in Russia, says Ruskin. Thomas Costard, senior U.S. economist at Pictet Wealth Management. He says financial conditions will play a bigger role in the Fed's policy shifts from here. So one way of gauging financial conditions is going to rest on the funding costs that for companies that sit below investment grade. And then here are the couple points that we need to be looking at. Coca-Cola partnership with who? Cigna's on the high too. I don't know if that's it. Let's go, Chad. Let's go. Y'all showing love. I see y'all. I'm getting y'all the game time. That's it. We got 5 minutes. Let's digest all of this. Let's get all the information. We're going to get it, and then we are going to get everything 30 minutes when Powell comes on. So we got 2 events, Chad. It is history. I need you locked and loaded. It's very simple. You get one move in 5 minutes, and then the next big move, the real one that matters, is going to be at 2:30. So here are the 3 points to watch. In terms of future hikes, you need to watch if there is a shot of 75 basis points that has not been seen since 1994, and you are already firmly educated on what happened when they double hike. Ah! Damn, CMB, shut the fuck up. They got me. Anyways. So again, we already know what happened when they did the double hike in 1994. Powell may keep an open mind and leave the market pricing in an equal chance of 75 basis point next month. The next thing, number 2, is going to be the question of whether the Fed is prepared to push rates beyond neutral, which is seen around 2.4%. That is likely given the recent hot ECI and JOLTS report, which only reminds the Fed how far behind the curve they are. It means there is a scope for the market to push expectations for the terminal rate higher, in turn drag the 10-year yields above the 3% mark. And finally, long end selling may ensue should Powell suggest the balance sheet has a bigger role to play if inflation challenges persist. So really, it's coming down to rates. Let's see. We got some other comments. Bank of America, they said that they expect minimal market reaction from the meeting, but a non-committal answer of 75 basis points in June may be marginally disappointing to a hawkish front-end pricing. It is hard for Powell to out-hawk the market, which suggests a likely neutral to slightly dovish market outcome. Okay, Bank of America, we see you. That's a good one. Who's this one? Bryce Deutsch, Senior Vice President and Portfolio Manager at SIT Fixed Income. Inflation is still a problem. Labor and supply shortages causing rampant inflation will not improve due to higher rates nor from lower Fed balance sheet. Likewise, the Fed is not the driver of energy prices either, but a direct result of higher rates is higher inflation initially. As though homes weren't already too expensive, monthly payments, CHK activist chatter. I have not verified. I'm in Fed mode right now. CHK popping off that. Chesapeake Energy. Wasn't Icon? I think he was in there. CHK activist chatter. I have not verified, but it's popping. Chesapeake. I'm not seeing it just yet. Signals, oil and gas. It's not coming across the wire just yet. So be careful with that one. That one is unconfirmed. Spies hitting a highs coming into it. We got 2 minutes. The puts went up, or no, the puts went down. Calls have almost went up 100%. So, Chad, let's see what's about to happen here. Again, I think that might be it. There's a couple more, but we got a lot. The Fed will rise 50 basis points. This is Janet Gardy, Chief Economic Managing Director at Robertson. It's priced in. They might as well. Assumptions are being made all over the place that consumers will continue to spend more. This ignores a possible, if not probable, response to inflation driven by consumer concern and dissatisfaction. So, Chad, it's coming in, baby. I hope you're ready. You got about 1 minute remaining. Here it is. This is a historic one. We're probably going to get the double rate hike. Let's see how everybody responds, and we will get you an update if we could get a breakdown on the 50-50. If we could get a breakdown with what the wording. Right now, people are going to look at the wording. Again, I'll get you the updates, but really biggest moves are going to be the computers, and then you're going to get these analysts start interpreting very quickly. So keep your eye on it. Get ready, Chad. Good luck. I hope you finalized it. You got 30 seconds, baby. Welcome to history. Welcome to history. What's going to happen? What's going to happen? Oh, man. Here it is, a little pop and lock. What else should we get? Let me get some Facebook. Let me get some banks on here, man. We need some banks on here. This is it. This is it, baby. 5 seconds. 4, 3, 2, 1. And initial rise. Or getting a little pop. HYG's going up. That's the first thing I'm noticing right now off of this. You're getting a big move there. Watch TLT, the bonds. First move is a pop. They expect ongoing increase will be appropriate for rates. They say they're highly attentive to inflation risk. They raise 50 basis points and start June runoff June 1st. Balance sheet runoff confirmed. So they've confirmed that for June. That's it. Balance sheet is confirmed, and then it's going to run off to rise to maximum 95 billion after 3 months, that means they're starting slower, it looks like. So that's the early interpretation of it. 0.5 point as expected, but that's kind of good. So they're confirming balance sheet runoff for June. It looks like I think they're starting 45 billion total, and then they're going to move it up to 95. So 95 would be 45 split between, but it seems like they're starting with a slower balance sheet reduction, but they're moving towards it. They raised 50 basis points. Let's see. The runoff begins June 1st, so not as immediate launch this month. So again, they're starting in 1 month. So pretty much dovish on balance sheet reduction for now. Let me see. Is there a side-by-side? I need this side-by-side. It's kind of bullish so far. There's dovish comments. Watch what happens with the rates, though, too. Keep in mind bonds. Banks are going up, but HYG has a monster move right here. The high-yield credit, that I would definitely keep your eyes on that one. That one should have moved. It said no huge surprises. That's what some analysts are saying right now. Again, I think dovish balance sheet. The rates aren't good, but watch what happens with bonds and banks here. And then again, HYG is sticking out, but I would take a look at the tech stocks because they will definitely tell you how people are responding right now. So we're hitting there. I need to strike through. Treasury yields higher. Stocks are higher. It's a decent reaction so far. The puts went down, but the calls are kind of holding the price leading into this. So the option market's not believing it just yet, you guys. Hold on. The option market's not sold. You're not fully sold yet. Keep watching banks and then again tech too. So at least with the initial main decisions we're seeing is the Fed has telegraphed there's a little bit of relief in equities. Their highly attentive line about inflation risk definitely gives a hawkish vibe. So some people are saying hawkish vibe. I'm getting my interpretation so far is bullish on the balance sheet just because they're not doing it immediately, and it looks like they're going to slowly taper into it more or less. You did reject 420. You're coming down right now. Now I've told this tone could change at all of the bottom of the hour when the Powell begins the press briefing. So again, that starts in 28 minutes. So now we're going to get 28 minutes. Let's see. Popping. How do you spell popping? I spelled popping wrong for the stream alert. I'm sending this out to them. Again, I'm thinking initially dovish. So the new info right now we know about, and that's a great question because that's what you need to be asking right now. What do we know right now between the last 3 minutes? Now we know the Fed is going to be doing balance sheet reduction at the beginning of June 1st. They're starting at a pace of $45 billion a month. And then after 3 months, they're willing to raise it up to $95 billion. And then we know that they are raising rates to 0.5 basis points, which confirms that Powell is willing to listen to what the market is pricing in. So those are the 3 things we've pretty much taken away in the last 3 or 4 minutes so far. But it's not too much. Some people are saying hawkish tone in terms of the wording that has came out and what he said. But right now, I'm liking the balance sheet so far. So Fed repeated statements from March about Russian invasion. It's making things uncertain for the U.S. economy and will likely continue. We've already seen those impacts in gas and food over the last couple of months. So let's see if we go up again, maybe the option market might believe it. Again, look at your calls and you'll see things are getting hyped, but nah, they're coming down a little bit. Both of them. It's just the premium, we're going up, but we need a more consistent move. And honestly, this is nothing. At the end of the day, this is it's an update, but the words aren't scaring us too much. It's giving us new information. But like anybody who's seen this before, it's just you got to deal with Powell right now. So that press conference could move things a lot better, more or less. So let's see what we got. Highly attentive language. It looks like that they need to be able to pivot quickly. Could Powell give us more texture? Should we interpret this as being 75 basis points? Modest relief in treasuries as the statement came out. So here are the differences now. So this is a strike-through comparison. But so they took out indicators, and then they said, although overall economic activity, they added edge down in the first quarter household spending. They've removed mention of employment. They say business fixed investment remains strong. Job gains, and then what? They said they took out strong, replaced it with robust. They said that U.S. economy is highly uncertain, but in the near term, they took that out. So now they're literally just saying the U.S. economy is highly uncertain. The invasion related, they took out likely, and they said is creating additional pressures that are likely to weigh on economic activity in the addition of COVID-related lockdowns. So they mentioned China and supply chain disruptions. So they pretty much said they took out they said the U.S. economy is highly uncertain. They took out the near term, and they took out likely to create and said it is creating a problem. So they are acknowledging the risks and uncertainty. So we'll see. I don't know. We're coming down a little bit here. Yeah, this was not there in March. I think people are reacting to what I just read you, low-key, because now analysts are mentioning. I'm seeing this on the live thing right now, too. So take a look. So this is new. They're pretty much acknowledging China is negative. The Fed just said China's lockdowns are not good. Again, they didn't say likely or in the near term. They just said economy is unlikely, and now they have mentioned China. That's not good. Here's the next one. They said federal funds rate to 1. So this is just how much. They said the committee expects. They took out expects and have now decided to begin reducing the balance sheet. So we already knew that. That was the main point. As of June, as described by the plans, nothing changed in that paragraph. James Bullard, so voting for. So James Bullard was with it. And then Patrick Harker, I think, was the only dissenting one. That's weird. But Bullard agreed, and then Harker was the dissenter. Huh? Interesting. I don't know. But is that correct? Someone double check. I'll have to double check this with the original, but that's weird. So literally, everybody voted in favor, and Bullard is now no longer disagreeing, but now Harker voted as an alternate member at this meeting. That's correct? That's weird. That's just weird. I think now it seems dovish with the balance sheet. There is hawkish tones. I don't like the China shit. That's new. I hope you guys realize that. China lockdowns, again, and they pretty much said the economy is uncertain. They took out any language of being kind of bullish. They literally, instead of saying the events are likely to create. They said it is creating upward pressure and are likely to weigh on the economy. And they're saying, in addition, they have now mentioned COVID in China. It kind of could be the gray swan, but that's the negative right now. In a weird way, the most negative thing about this is this paragraph right here, I would say. So this paragraph is more negative than this paragraph, which is weird because this paragraph is the balance sheet reduction. So we need, after Powell clarifies, we will find out. But this is definitely negative right here. And then the 50 basis points, it's like fairly neutral, kind of expected. But let's see what happens. Interesting. Bitcoin is going up too. Yeah, I want to see what he has to say about China now. That's new. That's a new one. No, none of us said shit about that coming into this. I don't think nobody really addressed this that much because I thought Powell would have been slow to it. Pretty much, I didn't think Powell was going to address it. I thought he would have been, oh, maybe it's likely, maybe China could have but he said it is likely to and that it is creating problems. So that one's an interesting one. That one is a very interesting one. Those are the negative and positive things so far. Wow. That one wasn't even on the roster. All of a sudden, Powell is now, he not only did he mention China, he mentioned it in a very, they said the language is just very bad. Interesting. So we'll see a little bit of pop and lock. You need the press conference. We need to hear what he's going to say about China, balance sheet reduction, what he has to say about inflation too. But we got a couple of things so far. And again, we do know where the puck is moving a little bit, but what we need more guidance. The Fed laid out balance sheet in special memo. In line with discussed, Treasury Secretary reductions will be capped at $30 billion a month initially, then increased to $60 a month for mortgage-backed. The cap will be set at $17 a month, increased to $35 after 3 months. So they're tapering into it. That's good. Again, that could have been worse. Treasuries are flat now after yields were just up. There goes the gain in stocks. Oh, man. So balance sheet reduction seems to be in place. So it's not anything too crazy. Oh, my gosh. Chad, how you feeling? Twitch, how you feeling? YouTube, Twitch. I've just been reading and looking into this. I know it's been going crazy. I hope you guys have been feeling... Again, we still have the press conference. I hope you are learning something from this, but it's interesting. We got a couple of new things, I think, new with China and how they're viewing the economy. We got a little bit of a dovish. It's not a surprise, but it's dovish. Oil's coming up right now. Watch out for that. That's another thing. That's not pretty. The calls have dropped now, and the puts are holding value but are down. So the option premiums are a little bit wild. But, yo, oil is climbing up right now. You are above 110 on Brent. That is a key level. We have now popped back up. This one is wild. The press conference is going to be big. Press conference, I don't know if we could rip it or drop it to a big degree because this isn't that big of a move. But, I mean, there's a lot of... I have questions. Again, we need to hear what he says on China and then the specific plans of balance sheet reduction. That's his moment right there to be dovish if he wants to be. Because if they're tapering into the plan, they're starting in June instead of May. That's Powell being somewhat patient. And then we'll see if hopefully he just doesn't say anything stupid about 3/4 of a rate hike. Because that would be the only thing that could surprise. But if he takes a very negative tone towards China, economy, inflation, that is the biggest change right here. Again, I don't know if you guys are reading it the same way I am. They've literally took out... Instead of saying that the economy is highly uncertain in the short term, they're saying the implications are highly uncertain. And then they're saying, instead of saying that the invasion is likely to create events, they're saying it is creating additional pressure and is likely to weigh on economic activity. That's a pivot, or it's giving them some negativity to respond to that they believe it's an excuse more or less. But now they've just mentioned brand new China all of a sudden, and I don't think most people have mentioned this. So I would watch on the press conference if he says anything about China. I think it's important. It may not be the most important. I think if he hints at anything related to 3/4 of a point rate hike, that will dominate the headlines and that will be the most negative thing. But I do think the second most important thing will be what he says on China. ICE and BKI, Intercontinental, why are they getting clapped? Down 4%? What the hell is this? Black Knight Inc. ICE said to wait deal to buy BKI. Is BKI halted? ICE is dropping on that one. Very interesting move. 95. They said, I think it's on the side note, but that's what they mentioned on the back end of it. It is pretty wild. Let me see if I could get it for you. I think it's on the separate note. I read it from just the headlines, but they said it's on the separate memo. It would be in here, but they went into more detail on how they're going to do it. This is crazy, bro. Leaps on the spy for today. Wait until we hear those 2 questions from Powell. I think that is going to probably be the most important thing out of all of it. That will take us a very, very long way. You think, I see. Amazon's coming down. All right, it's chilling out a little bit. I think everyone's now probably watch the VWAP move. Watch if oil keeps going up. Watch the banks. The bonds are kind of staying the same now, but we may need to just wait on the press conference, and I think we know the questions we need. It has been a fairly small reaction so far, 100%. So right now, Fed rate hikes 0.5 point, begins runoff June 1st. Ongoing rate increases will be appropriate. That's a quote from the Fed. Central bank is, quote, highly attentive to inflation risk, and then treasuries are flat and stocks are pairing gains after the initial pump. So get ready. Man, this is beautiful. This is excitement now. What was my expectation was a false bullish reaction, but even I didn't really care. I wasn't talking about right here. You could kind of see it, but we'll see what happens afterwards and over the next couple of days. But like I'm saying, I think they were going to just lean into what was expected, and I'm just waiting to see what they said about the balance sheet reduction. And my real estimate is all about what bonds do. That's really what I care about, because I believe the bonds will impact the dollar, the market, and everything else to a degree. The question is, do yields continue higher or do they go lower from here? And then we find out what happens. Bye. So the committee, highly attentive to inflation risk, the Fed said in the statement, adding a reference to COVID lockdowns in China that are, quote, likely to exacerbate supply chain disruptions, end quote. That comes on top of Russia's invasion of Ukraine and related events, which are, quote, creating additional upward pressure on inflation and are likely to weigh on economic activity, quote. So that's the big quote. Everybody's taking it in there. That's the new thing. We know exactly what to be watching for, okay? We will be narrating. I'm gonna give what's it called on here too. So I will have it up here as well. I'm gonna give commentary on the YouTube till you guys complain. But if the stream does lag or anything happens, make sure you guys are on the Twitch. We are live there now. Y'all are running it up. Let's go. Give me that free Jeff Bezos money if you got Prime. Again, we got business in the front, party in the back. You know what I'm saying? Business in the front, party in the back is how we get down. So hopefully we see you there and keep it safe. But I'm gonna do both, and we'll see what happens. Let's see what happens. And like the video. And if you don't know, we're live Monday through Friday, 30 minutes before open. Okay, simple as that. Simple as that. We love you and God bless you, and hopefully we see you. And that's it. It's very, very good. It's very, very good. We have Watchlist too. I don't know if they down for the Watchlist. BKI resumed. ICE news to buy them out. They're up there. They're up 10%. So they're killing it. We do have merchandise. We do have merchandise. How many ads? Yeah, if you have the Bezos Prime, they give you free ads. The Twitch is pinned above there, and we just spammed it. I give you money on both streams. You a real one, baby. We don't expect anything, but we love you. We love you, and God bless you, baby. So let's go. Bring it home. We got 12 more minutes. Let's see now. Second half of the reaction. Initial was pop and drop. Again, you know the main things that we have already gone over. Everybody's digesting it, but I think a lot of people, there's like 3 main questions coming into it. What is he going to say on the press conference? Is he going to mention 75 basis points? I think that's the number one thing you got to be looking for. Number 2, how does he address the COVID lockdowns in China, since that is a new mention that he mentioned? And then 3, the future guidance and any other explanation on balance sheet reduction, which we did learn they will be beginning in June 1st today. Or that's what we learned today. It's at June 1st. MBS, he said the plan for it. They're going to slowly work their way into it, starting at 35 or 45 billion a month, and then after 3 consecutive months, they're going to raise it up to 95 billion, which was kind of initially planned, but it's bullish. It's dovish because at least it's slower rather than faster. So BKI and ICE, that's a buyout deal. Watch the bank stocks. Everything's kind of flowing in line, though. Even the tech stocks. Watch if oil continues up. That's one of the little standouts there. And bonds have not moved. If you're going to play BKI or ICE, keep that in mind. I like the months. The months. You know what I'm saying? Many months. I got you, bro. I got you, bro. See, grain export survey, that's coming out, I think, tomorrow. Who is going to buy the debt? Well, that's the thing. Today, the Treasury announced that they're lowering the amount of debt that they're offering. So here's the paradox. The Fed is going to be lowering how much they're buying, but over the last 4 or 5 things, we've actually learned, even today, they announced that they're going to be lowering the amount that they're issuing. So even though the Fed's amount that they're purchasing is going down, the available of debt supply is actually dropping. So fun fact. So 416, you are at VWAP. Let's see if this one plays a little bit differently here. Keep your eyes on it. This is crazy. It's not too crazy, though. This is, unless it comes down hard. Let's see. Option premiums. What are they pricing? Yeah, option premiums are believing it now, but not as much. They're not up 100% yet, but a lot of time has came in. But if you notice, the puts are going up. They didn't go up as much on the calls, so just keep that in mind. UVXY tanking. Watch if bonds move, and again, financials and tech will be key, and then just see if there's a secondary type of move that comes in from, what's his name? A secondary type of move that comes in on oil. That's what we're going to need. What time? We got 9 minutes. We're getting close to it. Something that surprises me, they won't be moving to the maximum 60 billion Treasury cap during a refunding month. We thought it would increase the caps to 60 billion in August to allow reinvestment. Now it's likely it'll be a large T-bill runoff in September, a bit over 16 billion after not rolling off bits at all. So that's how they're going to do it too. It looks like they're just going to, I don't think the Fed is going to stop buying, in the sense that I think they're just going to not roll over. Or if they're, depending on how much they go up, we'll find out where they go from there. Interesting. Am I bullish or bearish? I think bullish for a little bit until it kind of fades in here. But unless if he drops the ball on 3/4 hikes, we'll see what he says. But I think the China thing is something. I think it's very important. It came out of nowhere. Like, that one wasn't like that right there. I think is going to be the kicker over the next couple days, if that makes any sense. How you feeling? I'm excited. I really want to know what he's going to say. I think everything rides on there. None of this is enough to like. I'm glad we got more information. We definitely know a little bit more coming into the next, month of the year. At least we know about balance sheet reduction. We know they're going slow. Again, what I just told you right there with the balance sheet runoff in September, it kind of feeds my theory that August, September this year is going to get pretty wild. But we got to learn about that. It's good to see that Powell is doing a double hike or moving the puck, and he's willing to actually, listen to the market, which is surprising. But right now, the big stuff comes in from our guy over here, Mr. Press Conference Powell. Fed internal uncertainty is dovish. That one was weird. Why is what was his name? Harkin? Why the hell is Harkin the one who's dissenting now? I thought that one was wild. A little bit of a pop there. It's messing with the premiums, but even on any of the moves so far, the premiums weren't like, oh my gosh, and running up there. I'm sure, like, where's UVXY? I'm sure that's been a wild ride for them. Yeah. He didn't dissent. I think he voted for alternative or something. What did he do? Harker voted as an alternate member. Okay, so wait, no, nobody dissented then. Oh, Harker was an alternate. Okay, there it is. Okay, then that's it. So maybe, I think, is that because the one guy sold out at the top and then got in trouble? Inflation. What time is it? 5 minutes. Again, a lot of it. Everybody is really eager for this press conference. I'm telling you, this could be a very, very big one. The language surrounding China was this right here. They just said that they added this. This was never mentioned in any Fed meetings this whole year, and this was not mentioned last time. Instead of saying there is likely events, they literally said there is events that are creating upward pressure that are likely to weigh on economic activity. They did not say that last time. They said that there is likely to create upward pressures and that can weigh on it, but now they're saying it is creating pressures and it is likely to weigh on the economic activity. And then just quite simply, they are acknowledging the lockdown in China. That's it. That's all it comes down to. So we are going to see. And what time is it? Oh, man, we got 5-6 minutes. We are going to see. We are going to see. Yang plays. You could go for China, but I'd wait a little bit. That's why I'm saying just give it some more digestion. And you're gonna see. Damn, this is wild. Bro, this is such a hype conference call now. I don't know if you guys realize this is like we got stuff to look forward in the future. There's stuff he has to address about today. Again, today's still a big event with the double rate hike and everything else. We'll see with the thing, but this conference call, again, question number one, that is number one and ranked by most importantness. That's not a word. Is it a word? I don't know. Anyways, whatever he says about 75 basis points, that will move the market up or down. Number two, whatever he says with China, if it's dovish or hawkish, that will move the market up or down. And three, more detail, not necessarily the numbers, but the clarity and guidance regarding the balance sheet reduction, that will be the final thing. And I'm sure we'll get questions in between. So, hope you're ready, baby. Hope you're ready. Just about 2 minutes. Pop, lock, and coming back to the pop mode. Oh, man. This one's crazy. This one's crazy. Watch the bank stocks again. I think they're starting to go, but the bonds aren't moving, and that's the weird part right now. You have way too much bond stability and all this. SPY, that's a big candle. Those are two candles stringed together now. Those are a little bit bigger here. Get ready. It does it every time. I hope you're ready. Here it is. That's the Fed music that they have. And then here, if you go to the Fed website, this is where you could get the plans for reducing this. So we actually have to read this individually. Okay? Yes, we are still going to do the commentary on Twitch. I'm going to do it on YouTube too. I'm just going to leave both mics unmuted. If YouTube turns into a bunch of little girls and you guys start crying and being like that, they're like, Josh, we have a bunch of girls in here. I know. You know what I'm saying, though. Shout out the queens in here, okay? We love you. But I'm just saying, if y'all just going to get mad about it, if not, you go to the Twitch. But either way, we going to have fun, man. This is important. This is very, very important. I want the big video, though. I can't get the big video on the website. I only can make it huge. But get ready, you guys. That's it. 1 minute. 1 minute. Let's get Jerome Powell up here. I'm assuming. Well, let me get both sides. I'll get you the video in a little bit. We're going to have it right on the dot, but get ready, Chad. This is it. So locked and loaded, people. This is the moment. You know the questions. I will keep it unmuted, and that's it. That's it. 10 seconds, 27. 10 seconds, 27, 38, 39. Are you ready, Chad? God bless you all. Oh, wow. It's in person. I forgot. Oh, my gosh. Bro, it's in person. So it's a lot different. Oh, my gosh. That's crazy. It looks so much more different. Here, I got this small video for you. Dude, this isn't a Zoom call anymore. Oh, man. Oh, my gosh. Are you serious? Are you serious? This is crazy, bro. Do they got it up there? Yeah, they're waiting for it. The Yahoo Finance one, they have a different camera. I think they might be. All right, let's go through a couple cameras. This is weird. This is the first time he's been late.
Good afternoon. It's nice to see everyone in person. First time in a couple of years.
What the hell is that? They don't have it on him.
Before I go into the details of today's meeting, I'd like to take this opportunity to speak directly to the American people.
Yeah, Yahoo Finance is delayed.
Inflation is much too high.
Okay, what's going on?
We understand the hardship it is causing, and we're moving expeditiously to bring it back down. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2 years and have proved resilient. It is essential that we bring inflation down if we are to have a 2 years and have proved resilient.
Okay, a little bit behind.
It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment,
so none of this is new.
The current picture
I'll tell you when anything's new. So I could talk over this. If you get mad, you're not missing anything.
And inflation is much too high.
Watch if bonds keep coming down.
Against this backdrop, today the FOMC raised its policy interest rate by a half percentage point and anticipates that ongoing increases in the target rate for the federal funds rate will be appropriate. In addition, we are beginning the process of significantly reducing the size of our balance sheet.
SPY reacting a little bit.
I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. After expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth.
Yeah, it is a pink tie for the
Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight.
Dollars going up.
Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force
Watch what he says
participation
about
has
this, because the
increased somewhat,
actual things,
labor supply
they took
remains
out labor
subdued.
being good.
Employers are having difficulties filling job openings, and wages are rising at the fastest
SPY about to hit a
pace
new
in
low from the
many
first
years.
drop.
Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%.
Honestly, he may not say anything
Aggregate
crazy until
demand
the
is strong,
questions come.
and bottlenecks and supply constraints are limiting how quickly production
But
can
SPY is
respond.
starting to react.
Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine.
So listen to this. He's going to lead into China.
Upward pressure on inflation.
This is it. This is
And
the quote.
COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions.
So this is all the statement. But that's what we
Russia's
need.
invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain.
So there you go. We're
In
dumping.
addition to
We're
the
coming
effects on
towards the
inflation,
lows now.
The invasion and related events
The puts are
likely
now
to
starting to
restrain
react,
economic
but they're not there
activity
yet. Watch
abroad
the premium.
and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're
Okay, another
strongly
low.
committed to restoring price stability. Against the backdrop of the
Yeah, he
rapidly
just
evolving
echoed the
economic
invasion thing.
environment,
That's not
our
good.
policy has
That's
been
like
adapting,
the market
and it will
reacting.
continue to do so.
It says high
At
inflation
today's
poses
committee meeting,
significant
the co-
hardships.
At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point. And
Again, this is
stated
all
that it
prepared, so
anticipates
you already
that
know
ongoing
everything he's saying right
increases
now.
in the target range will be
But I think as he
appropriate.
reiterates it, it's not
We
looking
also
good so
decided
far.
to begin the process of reducing the size of our balance sheet, which will play an important role in firming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels, assuming that economic and financial conditions evolve in line with expectations. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. We'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the economy.
He's not confirming 75 right there. That's why it's bouncing.
As clearly as possible.
He's not. He didn't say 3/4, and that's the
overarching
number
focus
one.
is using our tools
They're going to
to
ask
bring
him questions
inflation
about
back
it, but
down
that right
to our
there,
2% goal.
what he just said, he said it's on the table, but he's
With
not.
regard to our
He
balance
didn't
sheet, we
lean
also
towards it,
issued
and
our
he's giving
specific plans
uncertainty.
for reducing
That's
our
why it's
securities
positive.
holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet, up to monthly cap amounts. For Treasury securities, the cap will be $30 billion
So he's
per month for
explaining
3
what was
months
in the other document.
and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments.
Come on.
Making appropriate monetary
Questions
policy
are
in this
coming
uncertain
soon.
environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks.
That was
The
the other
committee is
key.
determined to take the measures necessary to restore price
Again,
stability.
he's just literally reading you the
The
document.
American economy is very strong and well-positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
This is it. This is it. All right, let's see who it is.
Wall Street Journal. Chair Powell, the unemployment rate at 3.6% in March is now essentially at the level that the committee had expected would prevail over the next 3 years, and at the bottom end of FOMC participants' projections for the longer run rate.
Watch bonds, they're selling off right now.
Projections at the last meeting. How has your outlook for further declines in the unemployment rate changed since March? What does this imply for your inflation forecast? And how has your level of confidence changed with regard to the feasibility of
This
slowing
question's
hiring
important, but
without
it's not
pushing
top
the
three.
economy
Because again,
into
he wrote off
recession?
employment in the
Thanks.
beginning.
Thank you. You're right, 3.6% unemployment is just about as low as it's been in 50 years. And I would say that I expect, and committee members generally expect, that we'll get some additional participation. So people will be coming back into the labor force. We've seen that, particularly among prime age people. And that will, of course, tend to hold the unemployment rate up a little bit. I would also expect, though, that job creation will slow. Job creation has been
That's kind of what they
more than
implied in the
500,000 per
document.
month
See if
in
we get a
recent
reaction
months.
to that,
Very,
but I
very
don't think
strong,
the market's as
particularly for this
concerned with
stage
it.
of the
That's why I
economy.
said it's a
And so
not
we
waste
think
of a first question.
With fiscal policy less supportive, with monetary policy less supportive, we think that job creation will slow as well. So it is certainly possible that the unemployment would go down further. So I would expect those to be relatively limited because of the additional supply and also just the slowing in job creation. Implications for inflation, really the wages matter a fair amount for companies, particularly in the service sector. Wages are running high, the highest they've run in quite some time. And they are one good example of, or good illustration really, of how tight the labor market really is. The fact that wages are running at the highest level in many decades. And that's because of an imbalance between supply and demand in the labor market. So we think through our policies, through further healing in the labor market, higher rates, for example, of vacancy filling and things like that, and more people coming back in, we like to think that supply and demand will come back into balance and that therefore wage inflation will moderate to still high levels of wage increases, but ones that are more consistent with 2% inflation. That's our expectation. Your third question was?
Your level of confidence that you can slow hiring without pushing the economy into a downturn.
Yeah.
So,
we're easing into the
I guess I would say it this way.
I don't think this is. I mean, like I said, they already touched on it.
There's a path by
Employment isn't
which
really the main
we would be
factor
able
right
to
now.
have demand moderate in the labor market and therefore have vacancies come down without unemployment going up, because vacancies are at such an extraordinarily high level. They're 1.9 vacancies for every unemployed person, 11.5 million vacancies, 6 million unemployed people. So, and we haven't been in that place on the vacancy.
Banks are starting to move off that. You got a bigger pop.
Unemployed curve.
Take a look at the banks.
We haven't been
and
at
tech
that
too,
sort of
and then
level
bonds hit a low.
of
See if it
ratio
bounces.
in the modern era.
Bonds are either going to stay
so
trapped
in
today,
principle,
or
it seems
do
as
something.
though by moderating demand,
Do something on the high side.
we could see vacancies come down, and as a result, and they could come down fairly significantly, and I think put supply and demand at least closer together than they are, and that would give us a chance to have get inflation down, get wages down, and then get inflation down without having to slow the economy and have a recession and have unemployment rise materially. So there's a path to that. Now, I would say I think we have a good chance to have a soft or softish landing or outcome, if you will, and I'll give you a couple of reasons for that. One is households and businesses are in very strong financial shape. You're looking at excess savings on balance sheets, excess in the sense that they're substantially larger than the prior trend. Businesses are in good financial shape.
Job
the labor market
vacancies
is,
could come
as I
down
mentioned,
significantly.
very, very strong.
And then help the economy.
And so it doesn't seem to be
You're just getting a
anywhere
lot of
close to a
volatility, but
downturn.
I don't think we're reacting as much to this.
Therefore, the economy is strong and is well positioned to handle tighter monetary policy. So But I'll say, I do expect that this will be very challenging. It's not going to be easy. And it may well depend, of course, on events that are not under our control.
He answered that question way too long.
Our job is to use our tools to try to achieve
He spent a lot of time on this
one.
one. Interesting. All right. Steve Leisman, CNBC.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings.
This is the question.
Might there be something larger than 50? Is 75 or a percentage point possible?
Beautiful. Great question.
Perhaps you could walk us through your calibration.
I'm assuming he's saying no based on the market.
One meeting should we
look at the market right now before he answers.
I think why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
Banks are moving off that.
So,
bonds haven't bounced.
75 basis point in an increase is not something the committee is actively considering.
There it is. That's it.
What
that's
we are
good.
Doing is,
that you're going to get that will give us our false dovish reaction, but that's enough
that,
to keep
again,
things
assuming that
a little bit higher.
financial
Next one is China.
In ways that are consistent with our expectations. There's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So
yeah, they just tricked us into liking 50 basis points
at the meetings, of course.
Look at that. You got 50 and not 75, and we're going up. Chill though. That's dovish right now.
To financial conditions.
That gives you some
finally,
dovishness.
Of course, we will be communicating to the
next
public.
Next thing is China and balance sheet, but that's positive. Market's ripping off that.
So the test is really just, as I laid it out, economic and financial conditions evolving broadly in line with expectations. And I think expectations are that we'll start to see inflation, flattening out. And not necessarily declining yet, but we'll see more evidence. We've seen some evidence that the core PCE inflation is perhaps either reaching a peak or flattening out. We'll want to know more than just some evidence. We'll want to really feel like we're making some progress there. But I mean, we're going to make these decisions, and there'll be a lot more information. I just think we want to see that information as we get there. It's a very difficult environment to try to give forward guidance 60, 90 days in advance. There are just so many things that can happen in the economy and around the world. So we're leaving ourselves room to look at the data and make a decision as we get there.
I'm sorry, but if inflation is lower 1 month and the unemployment rate higher, would that be something that we would calibrate towards a lower increase in the funds rate, or
I don't think 1 month is not no 1 month's reading would not
beautiful
doesn't tell
question.
us much. We'd want to see.
So from now until next month, there's no triple rate hikes.
Is moving in a direction.
I think they're gonna hold the double hikes, and that might be the new for the whole quarter probably, or until the end of the quarter.
Is a little lower, but we're not looking at that.
That right there, that is some guidance.
Take some comfort. I think we need to really see that our expectation is being fulfilled. That inflation, in fact, is under control and starting to come down. But it's not like we would stop. We would just go back to 25 basis point increases. It'll be a judgment call when these meetings arrive. But our expectation is if we see what we expect to see, then we would have 50 basis point increases on the table at the next two meetings.
Thanks. Let's go to Colby.
All right. So first question, that like we said, that's the most important
Thank you.
question.
Colby Smith
We're
from the
bullish
Financial
off of
Times. Given the expectation that inflation will remain well above the Fed's target at year end, what constitutes a neutral policy setting in terms of the Fed funds rate? And to what extent is it appropriate for policy to move beyond that level at some point this year?
This is a good question. It's not the most important, but depending on what he says, it's important. So like if he drops anything new. If they're going to go above it, it's kind of expected.
When we talk about the neutral rate, we're really talking about the rate.
We mentioned this before the report.
Neither pushes economic activity higher nor slows it down. So it's a concept, really. It's not something we can identify with any precision. So we estimate it within broad bands of uncertainty. And the current estimates on the committee are sort of
Apple's
2 to 3%.
about to hit a high.
And also, that's a longer run estimate.
See what the bonds
that's an estimate for an economy that's at full employment and 2% inflation. So really what we're doing is we're raising rates expeditiously to what we see as the broad range of plausible levels of neutral. But we know that there's not a bright line drawn on the road that tells us when we get there. So we're going to be looking at financial conditions, right? Our policy affects financial conditions, and financial conditions affect the economy. So we're going to be looking at the effect of our policy moves on financial conditions. Are they tightening appropriately? And then we're going to be looking at the effects on the economy. And we're going to be making a judgment about whether we've done enough to get us on a path to restore price stability. It's that. So if that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to the
dollar's starting to collapse off of
We
this.
won't.
That's big.
But again,
We'll keep this one up here.
there's a sort of false precision in the discussion that we as policymakers don't really feel. You know, it's you're going to raise rates and you're going to be kind of inquiring how that is affecting the economy through financial conditions. And of course, if higher rates are required, then we won't hesitate to deliver them.
I know, right? Next question. That was bullish enough. I mean, again, I think we're reacting to 3/4 hikes.
Do you see evidence that inflationary psychology is changing? That in areas like workers' wage demands, businesses' willingness to raise prices,
More
do
highs,
you see evidence
422.60.
that there is a psychological shift going on inflation?
Banks, new highs, dollar dropping. That will be
We
the
don't
bullish
really
indicator.
see strong evidence of that yet, but that does not in any way make us comfortable. I think if you look at short-term inflation expectations, they're quite elevated. And you can look at that and say, well, that's because people expect inflation to come down. And in fact, inflation expectations come down fairly sharply. Longer-term inflation expectations have been reasonably stable, but have moved up but only to levels where they were in 2014 by some measures. So you can look at that, and I think that's a fair description of the picture. But it's really about the risks. We don't see a wage price spiral. We see that companies have the ability to raise prices, and they're doing that, but there have been price shocks. So I just think it takes you back to the basic point was that we know we need to expeditiously move our policy rate up to ranges of more normal, neutral levels, and we need to look around and keep going if we don't see that financial conditions have tightened adequately or that the economy is behaving in ways that suggest that we're not where we need to be. So you don't see those things yet, but I would say there's no basis for feeling comfortable about that. It's a risk that we simply can't run that risk. We can't allow a wage price spiral to happen, and we can't allow inflation expectations to become unanchored. It's just something that we can't allow to happen, and so
Again, that's what I was telling you on the
way.
video the other day. So he said they can't let it happen, but not too crazy. We need China
Great.
question.
Thanks, Chair Powell. Gina Smilik with the New York Times. You mentioned in the statement both the upside risks to inflation from Russia and China.
There you go,
Obviously,
Gina.
those are very much supply shocks rather than demand side. And I wonder what you meant to convey by adding them.
Thank you. Oh my
I wonder what you meant to convey by adding those.
There you go.
So
that's question 2.
Our tools
That's what
don't
we're
really
looking
work
for.
on supply shocks. Our tools work on demand. And to the extent we can't affect really oil prices or other commodity prices or food prices and things like that. So we can't affect those. But there's a job to do on demand. And that you can see that in the labor market where demand is substantially in excess of supply of workers. And you can see it in the product markets as well. But I guess I'm just pointing out that a couple of things. For both the situation in Ukraine and the situation in China, they're likely to both add to headline inflation, and people are going to be suffering from that. You know, people.
All right, I don't know. Mark is not reacting to that.
Food and,
Listen what he just said. He said headline inflation is going to go up a lot.
Even though they don't actually tell us much about the future path. So
Oh, no.
the second thing is that they're both capable of preventing further progress.
He's
in
not
supply
focusing
chain-
on one or the
in
other,
Supply
though.
chains healing.
That's the key.
And so, or even making supply chains temporarily worse. So they're going to weigh on the process of global supply chain healing, which is going to affect broader inflation too. So in a way, they're two further negative shocks that have hit really in the last, 60 days, 90 days.
So he just pretty much just said headline inflation could go a lot higher. So TLT, that's the dollar. Let me see TLT, but literally, that
Hi,
I don't know.
Victoria Guida from Politico.
The market didn't really react too
I
crazy.
want to follow up on that because
Thank you
you
for
all
the
have
follow-up.
obviously highlighted that there are both supply and demand issues at play in inflation. And I'm just wondering, if these supply chain issues continue because of Russia, because of China, or just because these things take a while to work out, does getting back down to your 2% mandate require that these supply chain issues get resolved, since you can only handle the
That's a
demand
decent
side,
question.
as you said, or will you have to crimp demand maybe even further if the supply chain issues don't resolve themselves in order to try and get inflation back down to where you want it to be?
So, I'll just say for now, we're focused on doing the job we need to do on demand, and there's plenty to be done there. again, if you look at it, it's essentially almost 2-to-1 job vacancies to unemployed people. There's a lot of excess demand. There are more than 5 million more employed plus job openings than there are the size of the labor force. So there's an imbalance there that we have to do our work on. It's a very difficult situation if you can't, you would look at core inflation, which wouldn't include the commodity price shocks, and that's one of the reasons we would tend to focus on that, because we can have more of an effect on that. But it would be a very difficult situation. I mean, we have to be sure that inflation expectations remain anchored. And I mean, that's part of our job.
What he's saying isn't good, but the market's ripping off of
that
it
carefully, and that does
saying they'll have
puts,
difficulty
any
dealing
central
with
bank in a very difficult
with supply side inflation. Let's see, 423.54.
Thanks, and nice to be back. So, two questions. One quick one. You cited the 1.9 to 1 figure so often now. I got to ask you, what would be a good figure there? What would you like to see that come down to think that you're at sort of a non-inflationary vacancy to unemployed rate? And secondly, on help from inflation, how much are you counting on wealth effects through stock market channels? Equity markets broadly down quite a bit since late fall.
He's asking about how they're.
How are you mapping that into household consumption? Have they come down?
We're getting Powell's response on what he thinks about the market.
Another leg down in equity values to think that
Good question.
households are going to stop spending at the rate you need them to stop spending.
Okay, so in terms of the vacancies to unemployment ratio, we don't have a goal in mind. There's no specific number that we're saying we got to get to that.
That's talking about
it's really,
job
you've got to get to a
openings
place where the labor market appears to be more in
how many
balance.
people are taking the
And
jobs.
That depends not only on the level of those things, it depends on how well the matching function in the labor markets are working, because the longer these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to help. So there isn't a specific number. I will say we were at, I think when we got to 1-to-1 in the late teens, we thought that was a pretty good number. But again, we're not shooting for any particular number. What we'd like to see is progress, but we're not really looking at that. That's an intermediate variable. We're looking at wages, and we're looking at ultimately inflation. So there are a bunch of channels through which policy works. You can think of it as interest-sensitive spending, and then you can think of another big one as asset values broadly. And there are big models with a lot of different channels that are related to that. We don't focus on any one market, the equity market or the housing market, or we focus on financial conditions broadly. So we wouldn't be targeting any one market, as you suggest, for going up or down, or taking a view on whether it's at a good level or a bad level. We just would be looking at very broad measures of financial conditions, all the different financial conditions indexes, for example, which include equity, but they also include debt and many other things, credit spreads, things like that too.
Rachel.
Hi, Chair Powell. Rachel Siegel here from the Washington Post. To follow up from your message from the very beginning, what is your message to the American people about when they will start to feel the effects of, say, a 50 basis point rate hikes or multiple hikes? How do you explain to them what that does to their grocery bill or their rent or their gas bill? Thank you.
So the first thing to say is that we understand, and some of us are old enough to have lived through high inflation, and many aren't, but it's very unpleasant. It's just something people don't, when they experience it for the first time. You're paying more for the same thing. If you're a normal economic person, then you're probably don't have that much extra, to spend, and it's immediately hitting your spending on groceries, on gasoline, on energy, and things like that. So we understand the pain involved. So how do you get out of that? And it's our job to make sure that inflation of that
I want to hear this question, but there's something coming in right now. Some people are saying the 75 rate hike thing isn't bullish because even if you did a bunch of doubles, it would lead to a higher terminal rate. So watch around here, but this is kind of important question here.
So that the economy is under less stress and inflation will go down. Now, the process of getting there involves higher rates. So higher mortgage rates, higher borrowing rates, and things like that. So it's not going to be pleasant either. But in the end, everyone is better off. Everyone, particularly people on fixed incomes and at the lower part of the income distribution, are better off with stable prices. And so we need to do everything we can to restore stable prices. We'll do it as quickly and effectively as we can. We think we have a good chance to do it without a significant increase in unemployment or really sharp slowdown. But ultimately, we think about the medium and longer term, and everyone will be better off if we can get this job done. The sooner, the better.
Thank you, Edward. Thank you, Chair Powell. Edward Lawrence with the Fox Business Network. So you've talked in the past about consumer spending and how that's drives the economy. Are you concerned with this high level of inflation that the consumer will stop spending, pushing us into, and what's the level of your concern, pushing us into a recession?
So the economy is doing fairly well. We expect growth to be solid this year, and we see household spending and business investment as fairly strong, even in the first quarter, which was relatively slow on some other fronts. So, and the labor market. If you look at the labor market, for people who are out of work and looking, there are lots of job opportunities. For wages are moving up at rates that haven't been seen in quite a long time. So it's a good time to be a worker looking to either change jobs or get a wage increase in your current job. So it's a strong economy, and nothing about it suggests that it's close to or vulnerable to a recession.
Yeah, he's not
now, of course, given events around the world and
good old, do you
fading
think a
fiscal
recession? Powell says
effects
nah.
and higher rates, you could see some slower economic activity. Certainly, it will not be. Last year was an extraordinarily strong growth year as we recovered from the pandemic. As I mentioned, growth over 5%. But most forecasters have growth this year at a solid pace, above 2%.
But we've talked with economists who have advised Democrats and Republican presidents who both said that the Fed is so far behind the curve on inflation that a recession is inevitable.
So, and as I said, I think we have a good chance to restore price stability without a recession, without a severe downturn, and without materially high.
He's saying price stability.
And I mentioned the reasons for that. So I see a strong economy now. I see a very strong labor market, for example. Businesses can't find the people to hire. They can't find them. So typically in a recession, you would have unemployment. Now you have surplus demand. So there should be room, in principle, to reduce that surplus demand without putting people out of work. The issue will come that we don't have precision surgical tools. We have essentially interest rates, the balance sheet, and forward guidance.
Same price stability is going to come back because everyone's still going to need a job.
Capable of surgical precision. So
maybe that's elementary.
I would agree. No one thinks this will be easy. No one thinks it's straightforward. But there's certainly a plausible path to this, and I do think we've got a good chance to do that. And our job is not to rate the chances; it is to try to achieve it. So that's what we're doing. There are a range of opinions, though.
We might go back to this.
That's only appropriate.
Steve Dorsey.
Thanks, Steve Dorsey, CBS. You mentioned earlier, just now, fading fiscal policy.
425
do you feel
on the way.
That
424
the Fed
27
has been
Bonds at a
supportive
high
enough from policies at the White House and in Congress in combating inflation?
It's really the Fed that has responsibility for price stability, and we take whatever arrives at the Fed in terms of fiscal activity. We take it as a given, and we don't evaluate it. We don't. It's not our job, really. We don't have an oversight function there, and we look at it as our job given all the factors that are happening, to try to sustain.
They're asking him if
maximum
government
employment
spending
and price
fucks up his
stability.
shit.
If the Congress or the administration has ways to help with inflation, I would encourage that, but I'm not going to get into making recommendations or anything like that. It's really not our role. We need to stay in our lane and do our job. When we get inflation back under control, then maybe I can, give other people advice. Right now, we need to focus on doing our job, and I'll stick to that. Stick in our lane.
Steve Matthews.
Stay in your lane, baby. Ooh.
Steve Matthews with Bloomberg News.
A number of your colleagues have said that rates will need to go above neutral into a restrictive territory to bring down inflation. One, do you agree with that? And two, you recently spoke in great praise of Paul Volcker, who had the courage to bring inflation down with recessions in the 1980s. And while it's certainly not your desire, and the soft landing is the big hope of everyone, would this FOMC have the courage to endure recessions to bring inflation down if that were the only way necessary?
So I think it's certainly possible that we'll need to move policy to levels that we see as restrictive as opposed to just neutral. We can't know that today. That decision's not in front of us today. If we do conclude that we need to do that, then we won't hesitate to do it. I'll say again, there's no bright line, that you're stepping over. You're really looking at what our policy stance is and what the market is forecasting for it. You're looking at financial conditions and how that's affecting the economy and making a judgment. We won't be arguing about whose model of the neutral rate is better than the other one. It's much more about a practical application of our policy tools. And we're absolutely prepared to do that. Wouldn't hesitate if that's what is taken. So I am, of course, who isn't an admirer of Paul Volcker? I shouldn't be singled out in this respect, but I knew him just a little bit and have tremendous admiration for him. And I would phrase it this way. He had the courage to do what he thought was the right thing. That's what it was. It wasn't a particular thing. It was that he always did what he thought was the right thing. If you read his last autobiography, that really comes through. So that's the test is, it isn't will we do one particular thing. I would say we see restoring price stability as absolutely essential for the country in coming years. Without price stability, the economy doesn't work for anybody, really. And so it's really essential, particularly for the labor market. If you think about it, if you look at the last cycle, we had a very, very longest,
the premiums are coming down, but banks and tech stocks, and then watch the bonds here.
History.
Bonds are fairly
in
neutral.
the last 2-3 years, you had the benefits of this tight labor market going to people in the lower quartiles, and it was, racial wealth and income, not wealth, but income gaps were coming down, wage gaps. So it's a really great thing. We'd all love to get back to that place, but to get back to anything like that place, you need price stability. So we've been hit by historically large inflationary shocks since the pandemic. This isn't anything like regular business. This is, we have a pandemic, we have the highest unemployment, since the Depression. Then we have this outsized response from fiscal policy and monetary policy. Then we have inflation. Then we have a war in Ukraine, which is cutting the commodity, patch in half. And now we have these shutdowns in China. So it's been a series of inflationary shocks that are really different from anything people have seen in 40 years. So we have to look through that and look at the economy that's coming out the other side, and we need to somehow find price stability out of this. And it's obviously going to be very challenging, I think, because you do have numerous supply shocks, which are famously difficult to deal with. So I guess that's how I think about it.
Hey, Chris.
Thank you. Chris Rugaber and Associated Press. Earlier, you just said that if necessary, I think were the words, that you would, or if it turned out to be necessary, or you said it's possible that we'll need to move policy to restrictive levels. Given where inflation is and the hot economy is, or certainly the hot labor market as you described it, why still the hesitation? I mean, shouldn't it be, what else do you need to see in order to determine that? Wouldn't the Fed naturally be looking to go to a restrictive level at this point? Thank you.
So if I said necessary, I meant to say appropriate. We're not going to be erecting a high barrier for this. It's more if we think it's appropriate. The point is we're a very long way from neutral now. We're moving there expeditiously, and we'll continue to do so.
Said we're a very long way from neutral.
We don't have to make, we can't make that decision really today. The decision for,
again, a couple people brought it up. It's not the most important, but if he says it enough, people might react.
On the table to be made when we reach neutral. And, I expect we'll get there expeditiously, as I've mentioned. So it's not that we don't want to making that decision today wouldn't really mean anything. But I'll say again, if we do believe that it's appropriate to go to those levels, we won't hesitate.
TLT finally breaking out on the day. Again, market's at 424. A lot of volume coming
from
in.
Bloomberg Television and
A lot
Radio.
of momentum since the 75
balance
basis point
sheet.
question.
Why did you decide to wait
This is a big
until
question.
June 1st
This
to
is number
begin
3.
Letting securities roll off and not immediately start in the middle of this month, say? And do you have a newer or a better estimate for the monetary policy impact of letting the balance sheet decline?
These are all 3 of the questions.
And then finally, I'm just curious why you felt the need to address the American people at the top of your remarks. Are you concerned about Fed credibility with the American people?
So why June 1? It was just pick a date, and that happened to be the date that we picked. It was nothing magic about it. It's not going to have any macroeconomic significance over time. We just picked that. Sometimes we publish these calendars on the first day of the month, and that's what we're doing. I wouldn't read anything into it. In terms of the effect, I would just stress how uncertain the effect is of shrinking the balance sheet. We run these models, and everyone does in this field, and make estimates of what will be the how do you measure, a certain quantum of balance sheet shrinkage compared to quantitative easing. And, these are very uncertain. I really can't be any clearer. There won't be any clearer. People estimate that that broadly on the path we're on, and this will be taken probably too seriously, but sort of 1/4%, one rate increase over the course of a year at this pace. But I would just say with very wide uncertainty bands, very wide. We don't really know. There are other estimates that are much smaller.
I don't like
by the
that
way, and
answer.
some of you may have read about that.
He literally said
That's
nothing
kind of a
magic about the
mainstream
start date.
Estimate.
He said,
We
I
know
wouldn't
that it
read
does-
anything
that
into
it
it.
is part of returning to
He's
more
literally
normal,
saying
more
that date
neutral
is arbitrary.
financial conditions. And our strategy is to set up a plan and have it operate, and really have
That's a weird question. That's an
have
important
the
question. You see it.
Interest rate be the
It's
active
reacting,
tool
but
of
that
monetary
one's
policy.
very important. But it's
In terms
weird.
of speaking to
Very
the
weird
American
answer.
people, I feel like sometimes I want to remind us really that that's who we work for, and that it's inflation that people are feeling all over the country, and it's very important that they know that we know how painful it is, and that we are working hard on fixing it. I thought it was quite important to do that, and so that was really the thinking behind that.
Do you think the Fed has a credibility problem?
No, I don't. And a good example of why would be that, so in the fourth quarter of last year, as we started talking about tapering sooner and then raising rates this year, you saw financial markets reacting, very appropriately, not to bless any particular day's measure, but the way financial markets, the forward rate curve has tightened in response to our guidance and our actions really amplifies our policy. I mean, it's monetary policy is working through expectations now to a very large extent. We've only done 2 rate increases, but if you look at financial conditions, the 2-year is
He's like,
at
bro, we just let
280
the
now.
market
In
decide,
September, I
and
think
now
it was
we're
at
not
20
tripping.
basis points. And that's all through the economy. People are feeling those higher
He's
rates
saying,
already.
listen, I'm listening to the market.
And so that shows
said,
that
we're
the
just talking
markets
and doing
think
what
that
they're
our
pricing in.
forward guidance is credible. And I think
All
that's
right. Not bad. Not a good answer.
we want to keep it that way.
That's a good answer. That's actually a good answer. Like low key, he started a little nervous there, but that turned into a really good answer. He's literally just saying, "What do you mean credibility? I'm doing exactly what you're pricing
Brian
in.
Chung
We're just
with Yahoo
talking."
Finance. To expand on Steve's question about Paul Volcker, there was also a great pain that came with that as well.
So 425
higher
breaking
interest
out.
rates obviously affecting households and businesses, and wondering how you kind of square what might be demand destruction. Are you already seeing that? Is the idea here to incentivize a lack of spending, to decrease consumption,
That's a
to
good
perhaps
question.
table
Shout out Yahoo.
business investments? Is that essentially what's happening through this?
His question is pretty much saying, "Do you guys
Well,
like the
so
stock
as I
market
mentioned,
going down?"
you can see places where their demand is substantially in excess of supply, and what you're seeing as a result of that is prices going up and at unsustainable levels that are not consistent with 2% inflation. And so what our tools do is that as we raise interest rates, demand moderates and it moves down. Interest rates, businesses will invest a little bit less, consumers will spend a little bit less. That's how it works. But ultimately, getting supply and demand back in balance is what gives us 2% inflation, which is what gives the economy a footing where people can lead successful economic lives and not worry about inflation. I mean, so yes, there may be some pain associated with getting back to that, but the big pain is in not dealing over time, is in not dealing with inflation and allowing it to become entrenched.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could take a step back and talk about, in March,
I think most of the good ones are out the way, though.
Had, steady, looked like
So
steady
make sure you like the
quarter-point
video.
rate hikes.
Otherwise,
Get
you
the
don't
funds rate
support
up to
free
2%
stock
at the
market
end of the
info.
year.
You're an asshole.
Now,
but we love you.
it seems like you're much
God
more
bless you.
aggressive. So could you talk
But
about
there's still
the
gonna be like
thinking
30 more
that's
minutes of
behind
this.
that? Thank you.
So, look, I think what you've seen is really, I would say, last fall, in the middle of last fall, there was a time when our policy stance was still pretty much in sync with what the data were saying. If you remember, there were a couple of weak jobs reports, and inflation had actually come, month by month inflation had come down till September, a few months in a row, stayed low. And then around the end of October, we got three or four really strong readings that just said, no, this is a much stronger economy. And by the way, then with the restatement of the jobs
If we break here, we're going to
numbers,
427.
it looked like the job
If
market
not,
was
this
much
might
more
be the
even
top.
and stronger in
We'll
the second
see.
half of the year. But that hadn't happened yet. Anyway, we got an ECI reading, Employment Compensation Index reading, the Friday before the November meeting. Then we got a really strong jobs report. Then we got a really high CPI report. And so I think it became clear to the committee that we needed to adjust and adapt. And we have. Ever since then, really ever since then, we've been adapting. The committee moved by the time of the December meeting to a meeting of 3 rate increases, then to a meeting of 7 rate increases at the March meeting. And that process is going on. And it's clearly continuing. And that's why I say, and I actually mentioned this at the March meeting, that no one should look at any single SEP as sort of a real resting place for 90 days, because we're in a fast evolving situation, and that's what's happened. You can see, unanimous vote today, of course, and I told you the guidance that broad support on the committee to have 50 basis point hikes on the table at the next couple of meetings. So you're right. And by the way, other forecasters have been doing the same thing. And it's just us adapting to the data and to the situation and using our tools to deal with it.
Thanks. We'll go to Nancy for the last question.
For the last one?
Hi,
Damn, they
Nancy
are so much
Marshall-Genser with
faster.
Marketplace. Chair
Not
Powell,
on
I
Zoom?
want to ask how you're able to balance your dual mandate, stable prices, and maximum employment, especially when the unemployment rate for black workers is still roughly twice the rate for white workers.
So unemployment rates for all racial groups have come down a lot and are now much closer to where they were before the pandemic hit. So that's one thing I would say, and that's important.
I sold the daily 108,
point
made
is
like
this.
$30,
I do
$40
not
bucks.
at this time see
So that's up
the
like
two
500%, I
sides
think.
of the mandate
600%?
as intention. I don't, because you can see that the labor market is out of balance. You can see that there's a labor shortage. There aren't enough people to fill these job openings, and companies can't hire, and wages are moving up at levels that would not, over time, be consistent with 2% inflation over time. And of course, everyone loves to see wages go up, and it's a great thing, but you want them to go up at a sustainable level, because these wages are, to some extent, being eaten up by inflation. So what that really means is, to get the kind of labor market we really want to get, we really want to have a labor market that serves all Americans, especially the people in the lower income part of the distribution, especially them. To do that, you've got to have price stability. And we've got to get back to price stability so that we can have a labor market where people's wages aren't being eaten up by
Day traders
inflation,
complaining
and where
about people
we
not
can have a
wanting to
long
work.
expansion, too. That's the good thing, is you can have, as we have. We've had several of the longest expansions in U.S. history have been in the last 40 years, and that's because it's been a time of low inflation. And long expansions are good for people and good for the labor market. So That's the way I think about it. I think we, our tools work. We have to think in the medium and longer term. And I do think that the best thing for everyone is for us to get back to price stability to support really a sustained period of strong labor market conditions. Thanks very much.
You're welcome. There you go. Everybody clap it up. Everybody clap it up. Like the video. We love you. God bless you. But damn. So we sold out of that daily call. If you didn't see it, that was like 500%. That one was nice there. But overall, I hope you guys see it. Do you realize this rally started with the first question about 3/4 rate hikes? So Powell pretty much said it's not on the table. And even though the market started running off of that, I interrupted midway to let you guys know that a lot of people, they're already even talking. They're like, wait a minute, even if he doesn't do a 3/4 point hike, it would still lead to a higher rate at the neutral rate. And so they kept bringing that one up. But the first question sent us up. The second question with China, he said it's a big deal. I mean, I don't know if you guys caught the answer for what he said. Oh, man. What he said was absolutely wild. He was answering Jen Smilik, whatever her name was. But she asked the question about China, and he said that headline inflation is actually going to go up. If anything with China gets worse, he didn't really give any guidance towards what it was, but that's pretty much it. So I thought it was pretty interesting. We'll see how it plays out. But that was number 2. That was question number 2. And then the final question on balance sheet reduction, I just did not like it, actually. That one was weird because the market went up and maybe they liked his answer. I just didn't like it. But what he said about, what's it called? He pretty much said that they picked the June date. Remember, I thought June was bullish because I was like, okay, at least they're not going immediately. But he said, nah, it's actually, we just did it arbitrarily. He said it has no meaning. He said there was no magic behind why they selected June 1st. So he just said just because. That's it. Just because. That's why. You think we will bottom, Josh? Time to load up on the LT? Well, we'll see. Why does that bother me? Because initially, I thought if he just said that if he had more reason behind it, I would have thought it was very dovish. But to me, it's just like they're not really giving the answer as to why. But I'm assuming because they want to go slow and they're not in a rush. But that one's definitely, it's definitely something different out there, to say the absolute least. So we'll see how it plays out. It means they don't have a plan, but I'm more worried on the fact I thought they did have a plan when I first read it, and now you mean to tell me just because? I feel like there's just more going on there. You know what I'm saying? But like I'm expecting here for the market, I'm expecting a little bit more of a bullish reaction over the next couple of days, and then I think as people start to analyze all of this, we will react. But I mean, there was some good, there was some bad. I'm more worried about China now after all of it. But he didn't, Powell did. I think he did good, but I think we're only going to find out very, very soon. But he did say something at the end. Are you ready for this one? Oh, I got something good for you. I got something really good. Are you guys ready for this one? Are you ready for this? I don't know. Listen, everybody pay attention. I don't care even if you just got here. Don't leave. Do not leave until I tell you this, because if we hear about this in the next couple days, it's gonna go crazy. Okay, are you ready? Because he said something today. Today, Powell said we are a long way from the neutral rate. Do all of you remember him saying that? Chad? Do you all remember? He said that there a little bit towards the end, but even it was like 3/4 of the way. Does that sound familiar? Where Powell said, and I even commented on it. I said, oh, okay. He said we are a long way from neutral rate, right? Well, here's a fun fact. In 2018, October 2018, the last time Powell said we are a long way from neutral rate, it sent the stocks just flying down. I think it was like a 5 or 6% correction in a couple of days because he scared the shit out of the market. And then just that phrase right there, Powell in 2018 saying simply, we are a long way from neutral. And I'm not the only one pointing this out. A couple people are seeing this. So we'll find out in the next coming days here. But that's just a little fun fact, because if that one comes out, we'll see. But for the most part, I think this needs a little bit of digestion. I think there was, I want to just say it's kind of neutral with a hint of no big surprises. The Fed doesn't want to tighten rates, but today sends you a message. If the market starts pricing anything more aggressive, Powell is going to do it, and that's what he's putting his credibility on. So I think it's kind of important, but I'm still riding with my initial analysis where I said we could get like a false bullish reaction. It really depends on how people take this, and now that we got the earnings out of the way, or some of them, let's see really how they respond. But I think you're going to get a lot of digestion on this. There's a lot to unpack, and we don't know how this, because he put a lot on Russia, China, and other factors, but he said employment, he think that's going to balance it out. He's saying, price stability is very important. Those were another big thing. What else was there? The 3 questions we wanted, first one was answered bullish. Second one, it's kind of wait and see. And then the balance sheet reduction, I think he did good on it by just simply not answering a lot. So we'll see how it plays out. You got 40 minutes left, ladies and gentlemen. Make sure you're all subscribed. Oh, you got bets going on in the Twitch. Again, if you don't know, or if your stream lags, we have the Twitch live there too. Or maybe you're a degenerate gambler and like to gamble on there. Whatever it is. But now we're going to close it out. We still got a couple of earnings. If you're not familiar, Uber already reported. We're ripping from all of this. It was a pop and drop and then pop again. All 3 of our questions, they got answered fairly positively, or at the very least, the market reacted positively. And now we are going up to the high of last Thursday, or the close of last Thursday, which is around 427. So we had that little call play, only made $40, even though it was 500%. We kept it small, but you're kind of getting back to the stability here of the lows of like February and March, and where we were just at there towards the end of April. So very interesting. We'll see if it is. Right now, it seems like the market is taking it bullish. There could have been a lot more negative surprises, but it doesn't mean you won't see those in the next couple of days. So bring it home, Chad. We got 35 minutes left. That was exhausting. It was exciting. It wasn't too bad. I was like on the edge of my seat waiting for him to say something, but I think it's neutral. I think Powell towed the line, but I'm still feeling very neutral about this. I think just I don't know. It didn't have the same charm of Powell. Is that unfair to say? I don't know. I don't want to throw my bias on you or what I got for it. I don't want to influence what you think, but it's just like, I feel like the Powell charm just wasn't there this time. That's why I'm like, it's neutral, and you don't have the charm towards it where people like, we're up by a very big margin, but we did this last time, and I think last time we got, at least we had a month and a half to wait for, but now it's like, I think there's a lot on the table that, in the next 24 hours, I mean, people could digest it. Again, quite simply, the thing that started the rally was when Powell said, nah, we're not doing any 3/4 point hike. He said, nah, that's not on there. We're going to go with double hikes, but he really flat out rejected the 3/4 hikes. But that's the whole problem, is that people, this is what everyone's going to argue over the next couple days. You could get to a higher rate by the end of the year using double hikes than you can 3/4 hikes. Are you guys following? So even if he doesn't do a 3/4 hike, he could actually get the rates a lot higher. So we'll see, but I really think the next thing is going to boil down to EWG. Not EWG, I'm going to answer that, but boil down to how this plays out with everything else. But EWG, the next catalyst already happened today. You're now just going to get blinded a little bit by all of this. But like I said, this is why I've been waiting for EWG. There's a reason why we didn't average down when it was at the low there the other day, or not average down, but it was going down. And we said we want to wait for this moment. And then, he put a lot of pressure, even Powell today. He put a lot of pressure on Russia, China, Europe, all of that. So I still think that's going to be in the cards there. Airbnb. JP Morgan banks are already coming up pretty good. Airbnb's going back up. Is that 6%? That's at least a little better. Anything worth buying? I like Uber still down, but I want to give this 2 days. Let's let the market kind of stay in the hospital for 2 days off these lows. Let him recover. I'm going to put him on a 48-hour hold. And if he could do good after a 48-hour hold, I think we can release him to the buy the dips, the buy the dip crowd. I think everyone will feel a little bit better as long as you can hold this up and then let the earnings validate themselves, where the good ones are able to start catching a bid, let the bad ones sell off, or maybe they've bottomed out now, and then again, wait till the analyst comments and everybody else weighs in on it. But right now, there's a lot to unpack. But it was fairly neutral. There was good and bad. I mean, at the end of the day, you just witnessed your first double rate hike since 2020 or since year 2000, and it's there right now. Rates are higher, so that means, I mean, mortgage rates already ran with it. Interestingly enough, the bonds didn't do shit after all of this, so that will tell us we're probably going to get a delayed reaction, but just keep that in mind now. It's just like you have the double hike, the interest rate and tightening. We have moved towards that realm in that area. So at the very least, that is what is occurring. So ICE is still on the low. Remember, they had the buyout stuff, Apple, Airbnb. Let's see. I need to go pee.
Are they going to be able?
Let's see what CNBC has to
I think the
say.
chairman also admitted something that everyone knows. They can deal with the demand side with interest rates. They can't deal with the supply side. So to the extent that we continue to have an oil shock, and I said a month ago, I'm not worried as much oil as I am food.
Yeah.
I'm worried about food. I'm worried about grains. I'm worried about the agricultural products. The oil's out there. We can get it if we need to get it. The grain market is the one that scares me. And we're just now in crucial parts of the grain market. We're in certain harvesting seasons for winter wheat. We're in planting seasons. And they're not going as well as we'd like them to go for drought conditions, other weather conditions around the world, and war conditions. So
You can't plant crops in Ukraine in the middle of the war, and there's nothing the Fed can do about that.
That's absolutely true.
Yeah.
And look, I think the chair acknowledged that as well. If we're seeing some of these inflation numbers, and he went out of his way to quote the ex-food and energy inflation number, they realize they can't deal with the food and energy number. They're going to deal with the core numbers. What he can tamp down is some of the wage inflation. And look, yesterday we saw the JOLTS data. We saw 11.6 million job openings. We saw 4.6 million quits. Which is, the quits number to me is almost more interesting. It's a series high. People don't quit a job unless they're going to get another job at a higher price, at a higher wage, and they're confident they're going to get that other job.
So, meaning the Fed is it's going to be tricky for them to bring this.
Look,
are you saying that inflation is entrenched?
It's not easy. Look, this is not easy. No one should think what Chairman Powell is trying to do is easy. He's trying to soft land an economy. They are behind the curve. They're not out in front of it. It would have been a lot easier when we seen the beginnings of inflation, which, look, they thought it was supply chain issues. They thought it was pandemic related.
No more transitory talk.
We thought I didn't say the word transitory. I refuse to say that.
He's telling you the facts, man. Again, we were just talking about the food stuff earlier, but bam, 427. I should have kept the contract. What's it at? Oh, it's only up 10 cents from where I sold it. Actually, never mind. That's crazy. That in the money now. Now you're gonna get the decay. I guess there's only 30 minutes. Well, there you go, man. But it's been good. I mean, I think people are picking up on some things. We'll see how it is, but I think this is giving us our false bullish reaction. Let's give it the next 48 hours. Let's close it out Thursday, Friday. See the rest of the earnings. I think we're going to close pretty strong here for the rest of the day, unless the bonds or the dollars have anything to say about that. But it's good. It's good. Okay. How are we looking? And then banks are up. I mean, I don't know. This one, there's so much digestion. Even then, I want to see what the rates do. I know the dollar came down, and this is why I was saying it's important even if we rally, because a lot of people were expecting this. They're saying that everything was so bullish or so hawkish. That's why the dollar ran up into this. This may very well be a short-term top on the dollar, so that could be good. But let's see what happens, man. 427.50. So now those premiums have to be gaining a little bit more. I think we sold out pretty good, though. But this is it, bro. That's a 10-point rally from when we made there. And this is a big move. It's a very, very big move. The options are moving depending on what it is and depending on your time. In the money, out the money. But we've seen this. But if you get a follow-up tomorrow, they will definitely start moving. But it just depends. And again, the option chain, having difficulty believing this initially. You saw it with the premiums. But once they get in the money, it's there. But once you go from out the money to in the money, you will start moving percentages a lot slower. So keep that in mind. Friday SPY puts are cheap. Are they? Oh, you say? When's the Friday? Is that the 6th? You say they're cheap, huh? What's cheap to you, my brother? Tell me what's cheap. 20 cents for the 407s. I like it. I kind of like it. 428. Oh, but this is where they just get violent, though, man. This is where it gets violent. AMD new high. Because, again, it depends on where we're at. I mean, we paid 20 cents for 10 points away, but now you're 20 points away from that. Do you see the difference? It is cheap, but it's a different scale. That's all. So it's not the same scale we just paid for. So when I bought those at 20 and 40 cents right there, that's because they were $10 out the money. So now that same strike price, it's cheap, but it's 20 points away now by Friday. So that's the only difference, but you never know. We rip in throughout Friday. We might. If it doesn't, though, that could say something. Because, again, right once we get to 428, you got to deal with the rest of the family. You see, remember, we didn't get past 430, and we have to get past 430 to take us back to 436. So we'll see, but it's ripping now, bro. $1 in the money now? Oh, my goodness. Wow, so beautiful. Now they're at 184, so up another like $70. That one was good, though. That one was good. I don't think I'm muted. You should be able to hear me, bro. We definitely ripping. Well, you got Powell out the way. You got most earnings beat. However, growth rate was at 4% below inflation. So some people worried about that. You had some companies like Airbnb that absolutely did good. You have some companies that just did absolutely awful, like Netflix did. So, and then Apple kind of, they guided down. Amazon, kind of in the middle. So we're really going to find out here how it plays out. That's why I said the earnings need to really carry their weight in these next 2 days. So if the market, AMD did very good. I want to see that one go up. Like that's what you want to see. And Airbnb's doing it. There you go. Or at least AMD, excuse me. That means Airbnb's next. What happened? The Fed came in. The three most important topics were addressed mainly. It doesn't look like the Fed is going to get any more aggressive than double rate hikes. So people like that. Then China and Russia issues. It is a big concern, and that may develop over the next few days or weeks, but it wasn't enough to stop them. Powell didn't say, didn't really address it except for saying those could affect it, and that brings up supply side versus demand side issues. And then finally, balance sheet reduction. It seems like it wasn't too nailed down with their plan, even though they said they're releasing it in June. There was no reason for it, and market kind of like that, and then they're scaling into it, which is somewhat dovish, or better than at least doing it quickly and fast. So there it is. It's good. How do you guys feel? You feel good? How much time is left? 25 minutes. What Crocs is pricing in, I could check real quick for you. Feeling good. Crocs, $11, $13. That's about 20%. $7 would be 10%. So you're pricing about 20% for Crocs. A lot. I don't know. We are not out of the woods just yet. It was just very neutral, and again, it didn't have the Powell magic that made. It was a lot of reverse psychology. You got to think about it. You just reacted to getting a double hike and not a triple hike when everybody shit their pants over a double hike from here to here. Do you see what I'm saying? So from literally from here to here, here to here, you were shitting your pants about a double hike. And then right here, the fact that you didn't get a triple hike but got a double hike, you bounced. So that's the only thing. That's where I'm and then we got to deal with everything else that we covered with it. It was expectation for sure, but remember, we reacted a certain way into it. So I think that's the only thing, but it depends where the path and guidance. Like I said, we have some guidance coming into the next month, but Powell definitely left a lot of it out, and we're going to have to see how the market takes that in the next couple days. Was it good enough, or what questions does it leave it with? And if you have too many questions, it might turn the market down a little bit. Or this could be a little nice bottom, just like the last Fed meeting, which gave us about 2 weeks of rallying, if you recall. The Powell effect, baby. 12:37, 23 minutes. It's my setup look like with the Twitch? We got both of them. I just got both chats next to each other. Today's been a unique day because I've been reading a lot of Fed. We've been reading a lot and looking at a lot and keeping a lot of things up there. So it's been a little different. We got 10% rally. I mean, this is already big. You're already almost 10 points from the 13 points from the bottom. And then we're still another 8 points from the next like higher support level we were at. From TLT moving forward, I don't know yet. I think it might go up, but the balance sheet we may be aiming towards, this could play out like March 2000. That's what it's looking like now, but I still don't know yet. That's why I'm saying I need more digestion from all of it. But if anything, my outlook on SPY kind of coming up here and then maybe producing that false reaction, that's it. EWG's cheap. I know, and that's, again, this is what I told you guys, last week. Remember when I told you we are playing EWG defensive? Because EWG was dropping, and you guys were asking me, hey, should we buy more? They're the same price. And I said, no, let it have one of the pops. Let them bring that premium down, and now we know the Europe is being addressed, and even China is being addressed by Powell. We let that go up. They come back up. We're gonna get our double dip on EWG here. So hopefully it could be a good one. I don't think I'm gonna buy it right now, but maybe tomorrow, maybe coming into Friday, we'll see what happens. TLT could go up. I think it's still too early to tell. No, I'm still holding the Conocos. Again, I believe Conocos is on Friday, and we're gonna see what happens there. Friday or tomorrow morning, I'm not too sure. It's one or the other. But oil earnings here coming into the end of this week, they will get things popping. Bradley, pink tie, Fred. Bro, what were the odds on that one? It was wild. Horna. Let's go, baby. Amen, amen, amen. God bless you. Why didn't Airbnb rally as much as everything else? Haters. There's only like one upgrade and a bunch of downgrades, but they killed it. I mean, it's good. We'll see how it reacts with the market, and even the volume very high, just like last time. But I'm cool with it. UNG, we only have one play, but oil is up. Damn, UNG's dude. Conoco's killing it, and UNG's up a lot. I don't know. I think I might hold for one more day on there. Where are they at? The UNGs. That play's still up 566%. Because we're deep in the money on that one. But UNG's, did it break out? Yeah. The breakouts get interesting. Harv Lee. Thank you, my friend. God bless you. Pink is red. Yeah, y'all got robbed on that. Dude, he's never wore a pink tie. Y'all were saying it's purple. It looked pretty pink to me, man. It looked like a chrome pink. Like, honestly, I feel like Powell got a whip wrap that color. You know what I'm saying? It's like it was like a chrome pink, man. How do you forecast CPI? Oh, don't talk to me about CPI. I'm pissed off. I'm pissed off about CPI. You know why? Did you not hear what he said to Miss Smalek? Did y'all hear what he said to her when she asked him to China? I'm surprised the market didn't go down like that. He said the headline number he said people won't deal with it as much. It's not going to be that much of an issue, but the headline number is going to go higher. That means we have not seen the peak of CPI this year. I think it's probably by the end of the year we're still waiting for the peak. So that's the only thing I didn't like about it. That's why I'm like, CPI, I don't know, that gave me weird vibes, but maybe we'll see that in a couple of months, maybe not immediately. Oil is about to enter the second wave. I mean, obviously, China is the real big risk, but I said this at the beginning of this week. If you were watching the watch list and on stream, again, we started off a little bit slower, but I said, it's been about a month, 3 weeks of not going below those targets I gave you guys. It never broke the momentum, and now it's back above 110. I mean, it's game time. So it may stay trapped in here. Who knows? But point is, Oil is still a threat, and it's at a danger zone right now. So it could do anything. It is yet to peak, and I think it is yet to crash. And this move above 110 highlights it is yet to peak because this is still a very, very high price. I mean, you're back to 08 prices, 428.51. You're going high. I think it wants to test the 430, man. I don't know. This one's crazy. This one is getting crazy, Chad. As a day trade, just let the contracts expire, collect the desired profits. That would have got if selling the original. You can, but sometimes you'll make less because the dailies, there's going to be a stark difference between near the money and further out the money. It just depends on, if you're comfortable taking the out of the money profits more or less. Down 900 points to the upside, 2.7%. NASDAQ's up 3% right now. Bro, this just turned into a 3% day. That's it. You're right back to that high there from last, what? Was that like last Tuesday? I don't know if that was last Thursday. But 430 flat. We might top out there. I mean, it's still very low relative to the year, but this is, again, false bull reaction. You're getting the bull right now. If this holds, I will be wrong. If not, we'll find out. But I think, like I said, this is going to go into the rest of the week here. I mean, I think we're going to, 3% on today. We're going to have a very exciting close to the week. You're going to get a lot of movement. TLT plays. I assume they did nothing there. I've yet to even check. I figured I was going to look back. I might want to grab another one. Let's see. The TBTs, the literally same price on the puts, and then the calls drop 20%. That's the thing. The TBT calls dropped, and then the puts are holding. So odds of TLT going down, they have dropped because it's a TBT. So technically, the odds of it going down, those are lower, but now the going up is still kind of in the middle. Again, the bonds didn't give us anything. Bonds showed us. They did not show their hand right now. There needs to be one. We have 2 more cards tomorrow, but they're not showing us their cards yet. The bonds did nothing. Bullshit. But we're going to find, I think usually the following days we'll definitely get what we need. But in the meantime, it's able to let equities do their thing. Bonds are literally, they're one of the only things that didn't move. But that is what happened in 2019 in August when they first cut the rates, I believe. So a lot of stuff could easily get priced in there. Blinken? They got Blinken? At least I thought it was Kirby. What did Powell say? He said a lot, but they're raising rates 50 basis points. They announced the balance sheet runoff there to start in June 1st, and they're going to scale into it. Highly attentive to inflation risks. They say interest rate futures show traders anticipate a 0.5 point increase at June now. He ruled off a 3/4 hike, and that's pretty much it. And that China and Russia are a considerable risk to the economy, or very likely to impact inflation. Sounds like a beautiful day to me. You know what I'm saying? A beautiful day to me. $428.43. Good. I mean, we got 15 minutes to either hit 430 or we're just gonna cheat. We're just gonna chill here. We did not we priced in 75 basis points for July, but not for June. So that's where it's interesting. And now those odds are dropping, and it looks like we may very well just get. I think we may just get 0.5 basis point all across the board. How about in aliens? I don't know how aliens will affect inflation. Mars Attacks is one of my favorite movies, though. If you know, you know. Otherwise, it's weird. You know what I'm saying? It happens. The Mars. Don't you do Mars Attacks? Was such a good movie. I'm on his. Bro, it's literally like one of the classics. If you haven't seen that, you got to. That's it. It's a great movie, bro. Great movie. I was terrified of it as a kid, to be honest with you. And then I finally faced my fears. Would you average on cat? I have those one plays. I think they're coming back a little bit. But I would wait. It might be one of those slower moves, kind of. No, they're still pretty clapped. But let's see, though. I think the fertilizer stuff and all that stuff and all those ones are going up, and it's kind of related there. I mean, it could be very good, but I think we could probably wait a little bit and catch one that's lagging. It's decent. I'm like 50-50, but I mean, I don't need to force it, more or less. Google or Amazon. I think, ooh, that one's tough. That one's really tough to say because both of them had a really mixed bag there for earnings. You know, they both had specific changes, but then they both have the stock splits. So I don't know. Whichever your heart desires. Maybe flip a coin. Daily TWI reminder. Holy crap. Titan. At least remember, TWI is Titan. Mm. 522 VIX, 30 calls at 35. How does this affect China? No, nothing. No, it doesn't matter. This has nothing to do. Powell just said how what China does affects us. I mean, theoretically, if we're raising, this should allow them to cut more. And they did do a surprise emergency cut a couple weeks ago, right? So we'll have to see. But for the most, that's why I'm like, this is a weird one. Because whatever happens, it's like you got to break this down. China or Europe could really change a lot given what he said. I think they're going to rely a lot upon it. So we'll find out. But SPY coming into the highs, baby. Check the email. I got my land. Don't worry. We in there, baby. I didn't get a good one. I have some resources, but that's it. I got my land though. I think it's worth. I think the cheapest one with like one of my features was like going for some other things, but I didn't get like one of the crazy ones. Let me see it. It's chill though. 10-minute rigged, 429. Oh my gosh, are those contracts back at $2 now? Oh, that break even, bro. Oh, that's $2 in the money. That's a big, bro. That's 12 points. You're disgusting. Yeah, those are worth 220. Ooh. Homie's birthday. No worry. I figured it out. It was super easy. This is the one I got though. So it's kind of basic. You'll see. This is the one I got. Zach, I don't know if you could tell me if it's worth more. It has this. It has some resources. I just don't have any of it. And then one of the resources, it's like only like 0.09 have it or something. Like there's only 83 of them. So I was like, all right, maybe that's decent. But either way, we'll see. Yeah, no coda. No coda. Get some resources. I'll take it. Looks like a cinnamon roll. Well, God bless you. That was the most wholesome response you could have gave me considering what everybody else already says. Mm-hmm. Ba-da-ba-ba-ba. Tesla, monster. Caterpillar, everything's getting a monster bid right now, except for Airbnb. At least it's up 7%. Is AMD going? What about Quali World? Qualcomm, our plays are still up. They were up 100% earlier, like a day or two ago. But it's decent. I mean, a lot of things are getting picked up right now. Even those Facebook weeklies are actually kind of climbing back up here, interestingly enough. So if we do get a bigger rally, this one could be big. But 429, we're going for 430, man. 10-minute rig, there was a big one. April 28th high. It's crazy how much has even just changed since the end of April. But remember, I mean, even April, those last couple weeks of April were absolutely wicked. VIX clapped. What a day. PSX 6. Conoco's up. I mean, even Qualcomm's up. Conoco is up 5%. Even B&O. All of them. Facebook, another high. This is strong close. It's going to be a very, very strong close. Amazon recovered for like 2%. Apple's up 4%. Bro, Apple is higher than earnings right now. So Apple is moved into higher than earnings. That's a big deal because then if we start to see these kind of digest here, it could get a little bit crazy. closed. UG, God bless you. We have Facebook Maze up 90. Are they up 90? I don't know. I think we might have 2 sets. Yo, did you guys see that 217 call? Oh, that's crazy. That one came alive. The other one's the Facebook, bro, that May 217. Dude, y'all, I forgot about that one. That one's up 260%. Interesting. And then the other one is up. I'm up like 50% on the, I guess like 50, 60%. Yeah, it's worth $800. $200 and an 800 on that one. I thought that's the one he was talking about. And then the May 13th, that one is up as well too. Yeah, ghetto spread, because if we do get volatility here and it comes down, that's what you'd want. I'm up 230 on the 400 expiring Friday. Oof, that's, if it's a call, I don't know. We are going to be safe. You sold it to be safe. I want to sell it now. I either want to sell that one and then ride the small one. Well, let me see. I have a 217. Oh, wait, because we're in the money. That's why it just went crazy. I was like, why did it just go nuts? It's because we're in the money. That makes a lot of sense. Oh. I was like, dude, that makes no sense. So just $3 in the money. Or no, almost $10 in the money. $8. Fear missing out. Starbucks. Very, very strong close. Very, very strong close. Like the video. Love yourself. Y'all show some love, but get ready, man. These next 2 days are going to be crazy. The odds we rip depends a lot on digestion. Definitely, to say the least. Facebook. This is an interesting level for him. May 20th. Oh, that Facebook expires on Friday. Oh. The other one's the next. Man, I am tripping out. All right, I sold out of the Facebook. It's May 6th. So you could have kept one more day. I'll just keep the next week's. I got 700, 260%. That made more sense. I thought it was a May 20th. That's why I was like, I could ride it for a little bit. It's good. So yeah, we'll take advantage of that. Because it was in the money. I bought a 217 contract and the stock's at 223. So 17, 18, 19, 20, 21, 22, 23. That's $6 of intrinsic value. And then it expires on Friday. An extra $1.50 of extrinsic value. There's your $700 there. And we bought it for like $200. Check LT Amazon calls. I forgot about that. They're down 99%. No Robinhood either. Yeah, the Robinhood's already down. Yeah, down 99%. Ain't no love in the heart of the city. Oh my gosh, only 3 minutes left? Chad. Oh my gosh. All right, ladies and gentlemen, we're making our final approach. To make our final approach, if you guys are holding on to any bags, please throw them in the overhead bins above or firmly beneath your seats. You'll be coming through the aisle with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That's going to be your nightly Watchlist and main channel layover at the Trading Fraternity terminal. That's going to be around 5 p.m. Pacific time. Then we're going to be taking off promptly around 6 a.m., 6:10 out of sunny San Diego, California. California. As we make this final approach into San Diego International Airport, it's about 75 degrees and sunny. Looking like a beautiful day, especially if you bought the dip there before Powell. So congratulations to all of you in the long terms, but we are no longer under COVID guidelines, so please do know no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. If you guys will be attending Co-Real Estate call, it's going to be a 2-3 hour layover there. You could email your flight attendant at corealestate@gmail.com or get in touch with them after you have not boarded or deboarded. But as always, we appreciate your guys' business. If you're interested in your Co-Rapid Rewards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Let's go, baby. Bring it home. Bring it home. Are you ready? Landing expeditiously, baby. Oh, it's going to be an expeditious landing. You still got earnings, but I think the good ones already reported, so we can still stick around. Again, make sure you guys are on the Twitch if you're going to hang out with us a little bit after hours, but bring it home. 1 minute. Go, 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 go. Bring it home, ladies and gentlemen. You got 2 days left. Powell has saved the market for now. You got your double rate hike. You're living through the history. You got earnings. You got a couple more in oil by the end of the week. We're waiting to hear what happens in Europe. They banned the oil today. A lot was going on, but everybody was waiting for Powell, and tomorrow is about the digestion. You got less than 20 seconds to finalize your final moves for the day. What are you going to do? What are you going to do? Are you going to do it? This is your moment. Bring it home, baby. Less than 5 seconds. 4, 3, 2, 1. Ding, 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 ding. Oh, no. Oh, my gosh. Let's go, baby. Let's go, Chad. How do you feel? Chad, how do you feel? I need a GG in the chat, but oh my gosh, what a day. Chad, what a day, and we made it. Oh my gosh, I need the GG. We still got earnings. I don't think it's going to be as crazy. We going to hang around, but I need a GG. The GG is serious, baby. Everybody, I love you. God bless you. Thank you for being here. Thank you for liking that video. Oh, my God. We had fun today. We had fun today, baby. Let's go. My God, we had fun today. GG, we had fun today, baby. Let's go. GG, let's go. I need to get it. I don't care if you made money or lost money, because I know you learned something, baby. There was a lot to learn from today. There was a lot to take in. I don't care what it was, baby. You were in the game. If you were in the game, it don't matter if you said something positive or negative. You know why? Because the GG will cleanse your sins, bro. Oh, come on. Don't worry, Twitch. I got something for you, too. I got something for you, too. Everybody could get it. GG, bro. We were in the heat of the battle. You saw it today. We were going crazy. Shout out to you if that was you, baby. Good game. We still got a couple more months of the year. Let's go. Let's go. Oh, I don't care how you feel. Shake it off. Up or down. Bull or bear. Shake it again. 7 hours in the books. It was Powell day. Oh my gosh. Good game, Chad. Good game. Good game. For real. Good game. Y'all did good. We still got a lot more. We gonna see you here tomorrow, bro. I'll see you here tomorrow. Good game, bro. I need me to rock. You won't see me a lot. Monday through Friday, you need me. Let's talk. Oh, cut it. Chad. Oh, that Airbnb? Okay, hit it with it. Just...
My wrist.
Nah.
I don't want to rap that.
Okay, I'm sorry. I was getting too hyped, bro. Chad, I was getting too hyped. I know you. I hope you know I love you. But, Chad, that is the day. So, God bless you for real. Good game to all of you. Hopefully, you got enough sportsmanship where you could drop a GG. And hopefully, you don't hold on to anything too crazy. You know what I'm saying? Where I just hope you show love like that. You know, just drop the GG. Because if you really playing, otherwise some of you ain't playing. I know some of you ain't really in the game. I know you could be on a YouTube stream called The Stock Market and still never be in the game. You know what I'm saying? It's crazy how it works. But if y'all was, I need the GGs. I'm just saying, cleanse the sins, baby. Come on, Twitch. Y'all got a damn emoji for GG, bro. You got a damn GG emoji, bro. Hit him with it. Everybody, come on, baby. So God bless all of you. Shout out. I don't know if you are new and old, but we appreciate you being here for real. If you don't know, we're going to be live tomorrow, and we got something here tonight. Second link. Don't miss it, but for real, every single one of you, if you clicked on the video today, if you listened and you gave me an opportunity to leave my mic unmuted and tell you what I think, that is an honor to me, and I really do appreciate it. You gave me an opportunity, so hopefully, I hope you see the effort that we put in every day, 7 hours every single day, because I hope you see I don't want to waste your time. You know what I'm saying? That's it, and that's what today was. So I appreciate all of you who gave me the opportunity and listened to my Powell assessment, and something that we really, really love here. But I hope you genuinely learned something. I know it wasn't a waste of time. I know it's up to you to determine that, but I gave it 100, baby, and I know y'all did too, baby. Amen. Amen, bro. So I love it. God bless you for real, and just thank you for being here. Big shout out to my people. Hit the like button. Look at that. 2.7 thousand likes, baby. Oh my goodness. Look at the horn. What's up? What's up, Twitch? Y'all better like the video. That's good, bro. I better see some of y'all on the Twitch too, okay? But even then, Twitch, screw you, Twitch. You ain't liking the video. Nepal showing me love, though. I see you. You even got, who unlocked the new bits thingy? You got a new one. You got the golden eagle, bro. Hey, man, we better see you there. We're going to do a raid. If you guys want to see what it looks like when a cult goes into somebody's house randomly, you should join that Twitch link. It's pretty funny. But anyways, for real, though, God bless you and thank you. Big shout out to all the members. Again, you see people rocking the badge, and you should go scroll over the badge, and you should go highlight over the badge. I don't know if you ever done this. Like, you should see this. You see that? Hold on. Do I need to click it? Oh, it doesn't show it? How come it doesn't show it for y'all? How come it ain't show it? Wait. It usually shows me. Oh, it's not working, bro. Oh, because usually if you scroll over it, it tells you how long. It'll tell like 4 months, 3 months, 1 year, 2 year, 10 year. No, nobody's been here for 10 years. But come on, bro. For real. I don't think y'all realize it, man. We got a bunch of awesome members. They contribute to this chat every day. I vibe with them very, very well. I consider a lot of them my good friends. And, the amount of time that we've all put into it, but they have been here for a very long time. And just thank you guys, because we wouldn't be here without you. And it's not just your $4.99, man. It's literally your presence and how some of you have behaved over the years, the way y'all have held it down, contributed, and it's just so awesome. Honestly, I'm telling you that. And that's why I'm saying you should look at how long some people have been here, man, especially in a game of ups and downs. Just imagine the amount of market ups and downs in the last 3 years, 2 years. It's amazing to have some people through the ups and downs no matter what, man. I'm just saying, you really with some people in the game, baby. Amen. Amen. Do they feel me? I hope they feel me, bro. I hope they feel me. But for real, man, God bless you. We love you. Big shout out to all of the stream alerts as well. We ain't forget about you. And if you a member and you got stream alerts, you doing it all, man. You know what I'm saying? You doing it all. Thank you for supporting. You supporting a lot more too. It goes beyond you. But we love you. And last but definitely not least, man, for real, okay? It don't matter, man. Everything. Like I've been doing these fucking Powell things for like 3 or 4 years. I could have graduated college doing this once a month for 4 years. I'm telling you, bro, we do this every single day, and we never expect anything out of anybody except showing up with a good attitude and just ready, being as excited as we are about it, man, for real. That's what I'm saying. So if all of you, whoever you are, however you decided to show up, if you chose to be positive, respectful, you chose to hold it down, you chose to contribute, and you know what I'm saying? Like, you were just about that life, man, and you were a vibe, and you came in with that attitude that you're here to work on your craft, that you're here to learn, or that you're here to at least be able to put something good back into the world and community. That's all we're looking for, baby. So we don't expect anything. You don't got to buy anything, because even if you don't buy it, you're still going to get it, baby. It's all freemium, but that's why I always say, man, you got to salute those people who support the channel, man, and they've been here for a while, because they know what it is, man. We get into the mission, and God bless you, baby. I love it. So thank all of you, man. I hope you had as much fun as I did today. Today was fun. Wasn't it fun? Come on, wasn't it fun? It was fun, bro. It was fun, man. It was fun, bro. I'll tell you, it's crazy. So that's the day. Check out the links. Second link for the nightly watch list and main channel. Don't ever miss it, man. Again, if you miss it, thousands of people are just going to get all the info before you. And a lot of this stuff that I talk about throughout the day, most of the time, it is literally me just like reading, recapping the watch list. So for real, if you want it at your own pace, your own time, you got to do what it is. $49.99 stream alert equivalent. Yeah, that means you got the first TLT, baby. And thank you for supporting, my friend, for real. God bless you. That was when we had like 10 people. We have 50 people on the stream, maybe 100 people. Oh, God bless Chattadonia, baby. God bless Chattadonia. I love you, man. Nah, screw you. I love you. You don't love me. I love you, bro. Let's go. It's game time. Bro, we still got 5 or 6 more months. Let's get it, okay? Let's get it, baby. Oh, no step on neck. No step on snack. We got Jay Houston. We got Keezy. We got a bunch of, they're coming in on the YouTube, baby. Look at that. For real, man. God bless all of you. And like we say, man, I just hope you give a full commitment and a full effort to yourself in your future. You show up in whatever capacity you want, but make the most of your time, okay? You know what I'm saying? You got to make the most of your time. I'll show you. I'm doing a little project for you guys. You'll see it in a little bit, but it's just all about making the most of your time, okay? So I love you. For real, man, and just God bless you. Let's keep pushing. I hope you guys are ready for it, okay? I hope you guys are ready for it, but check out the links. Again, second link, nightly watch list and main channel. You can see my face, too. Like, a lot of people ask me about my face, so as you can see, my face is here. If you can't see it, you might need to change the dimensions. You see, like, I'm in half screen mode, but if you play with it enough, it should adjust to your TV monitor. But that comes out at 5 p.m. tonight on the Trading Fraternity channel, so hopefully we see you there. Second link. First link for that Scream Alerts Bootcamp and Real Estate course. You got free long-term alerts, and you got the Stream Alerts. It's up to you. Like we said, either way, it's free. Nothing goes on the Stream Alerts if it doesn't come here on stream, okay? Good. Perfect. You get it. That's why all you got to do is show up with the effort and some intensity, bro. They don't feel me. But check it out. Third link for that membership badge, baby. Shout out to all the member. Fourth link for that merch. If you guys are interested in really breathable merch. Oh, whoa. Is this lending tips? You guys get to see lending tips. Some of y'all think this is me, and I feel bad for him. You guys know that? And then this is me with the long term. Do you see? This is actually how I look with the long term. Do you guys notice the difference? I've cut my hair after the long term, and I look like I have gone to the gym. Do you notice the biceps in the veins? You see that? That's because I got a long term. And now I rock Colt merchandise. So these shirts were for free. We've already sold out. That's why, always stay in touch with what we got going on, But this is me after the long term. As you see, I'm swole as hell. Okay? And I'm smiling. You know why I'm smiling? Because I have a long term. I know the market was just down like 18,000% in the last 2 days or something, but I'm still smiling. And then, oh, wow, look at it. And that is a weird vandalism picture that we got. Is this considered vandalism? Don't vandalize, please, okay? We love you. God bless you. But check that out if you're interested, okay? We love you. God bless you. Thank you for doing what you got to do. Check out the other channels, Code Real Estate, Code Cars, Code PHILOs. Follow me on Instagram at The Trading Fraternity. I post the long-term plays there. And if you follow me, you will get followed by a fake Josh. Please report him. That's it. I'm never going to ask you about your crypto trading or anything like that. Honestly, you'll notice most of my interactions are a little too authentic for some people. Honestly, you know that? I feel like that's what happens when people encounter me. They're too used to people trying to sell them shit and then be like super nice to them. And then when they come up here and then they'll just get clapped sometimes and they're like, what the fuck? How about that? Hold up, turn the webcam on. Oh, you cute. You cute, baby. You cute. I love you. I already had the webcam on. I'm sorry. If you missed it, you missed it. You missed it. But I love you. I can't believe anyone got the QR. I tried for an hour. Oh, no, they got him. Bro, I'm telling you, the cult is crazy. Bro, I didn't mention it. I put it 7 minutes within the video. And these mother effers, bro, y'all just bounced on it, bro. I was like, that's my cult, baby. Let's go. It's a good, bro. That shirt is the only thing that was beating inflation. You know that? I'm telling you, bro. You got a nice shirt. It's a inflation adjusted shirt. It was literally free. Even whatever you pay for shipping, you ain't never gonna get a T-shirt at that price total. The net total, I'm telling you, that shit beat inflation, bro. I'm just saying. Let me run the Fed. Oh yeah. We are gonna raid today. We are gonna raid today. So if you're gonna be there, it's a deflation shirt, dog. Come on. But no, we're gonna try to get you stuff. We're gonna see if we could get you more, at least the stickers. Or we're going to get the, what's it called? We're going to get the, I'm going to just get like tank tops and then like super tight. I'm going to only sell like small sizes. So you guys are forced to like work out. And then you're going to be like, no, he only has tank tops. Oh no, now I have to do my push-ups. No, Josh. And that's it. I'm just going to make them just super tight too. So that's it. It's going to be just like, honestly, a little too revealing for a Colt shirt. You'd be like, what the hell, Josh? Why is this a crop top? This is weird, Josh. I don't need a crop top. Okay, maybe I'm getting too crazy. Maybe we'll save this for Twitch. Okay, I love you. God bless you. Anyways, check that out. How to find options that are 1,000%. Very good tutorial. If you want to learn options, start right there. It'll change your life, okay? Right there. How to set up the long term. Another life changer. And then finally, we call this the trifecta life changer. Options, long term, and some prayer. Oh my God. Honestly, it'll take you a long way. Maybe you throw the gym in there and then stop giving a fuck so much about things. Oh, yes, you could say fuck and still pray. A lot of people disagree with me about that, but it's okay. We accept you. Don't worry about it. Anyways, I love you. God bless you. This is what we got. I told you, we don't got the affiliate link. I don't know what I could give you on there, but I do got a prayer request wall link. Yes, we literally pray for people, okay? I said it. I mean, again, even today, man, a lot of y'all just different stages. It's wild, man. Some of y'all pray for good things. Some of y'all pray when things are going bad. Some of y'all are at various stages. Some of you getting into and leaving new jobs all the way down to college and just starting new lives for some people. It's pretty wild, but all I'm trying to say, man, we are rooting for you. That's it. That's what it's about, man. I am praying for you. You know what I believe. I think I got a personal relationship with God, man. And it's just like, I think all of you do too. It's not just me. Don't worry about it. But I'm just saying, man, it's just praying and we rooting for you. That's all it is. And we encourage you guys to do the same for everybody here, because we just want to have a environment or community that fosters this idea of supporting people doing it, man. Now y'all don't. Let me just say what I'm trying to say. If it can't flow through you, it won't flow to you. That's all. You know that, Chad? Okay? You pick Key-Rot. I am praying. Key-Rot, I could give you advice even to your situation. You are going to deal with difficult people on that. You know what I'm saying? And this is where it starts with. And this is part of it, literally. If it can't flow to you, through you, it won't flow to you. And that's something I'll tell you, man. I would say stop tripping about people who it's not flowing through. Oh, y'all don't feel me. Because it ain't flowing to them, man. You could tell by how they treat you, it's not flowing through them. You know what I'm saying? So don't even trip. Oh, don't. I'm just saying, though, man, for real. If it can't flow through you, it ain't going to flow to you, man. If you can't want people to be successful, if you can't look at success and be about it, and that's what I'm saying, Key-Rot, some people can't handle that. I hope you realize that. You know what I'm saying? But it's just like, think about that. If that's you, that's not life, man. And that's not how you get successful at business. I promise you. Yeah, very rarely. You ain't never gonna get talked down by people who are elevating at levels where they're like, you want to see that. You'll notice successful people have this attitude. So I encourage you all to be successful right now and wish the best for everybody you encounter, and at least want the best, and maybe control your attitude when you see people doing something, this and that, and realize, your job is to love and then control yourself. You know what I'm saying? That's it, baby. But I got you. Praying for all of you. I'm praying for you, Key-Rot, and every single one of you, man. And just keep your heads up. Keep the heads up high and pray for each other, man. It's very, very simple. So that's our only affiliate link if you would like to participate. But God bless you, okay? God bless you. Where am I on Twitch? It's in the It's getting hot in here, bro. I need to take the sweater off, bro. It's getting hot in here. How many people we got on the Twitch, bro? How many is the Twitch popping right now? Twitch, are you guys popping? Or is Twitch popping? Oh, Twitch is popping. We got like we had like 1,200 people here earlier. That was good, bro. Oh, it's good. We doing good. 750. That's a good Chad size right there. There's still 2,000 of you guys on. Well, God bless you, and we love you. But that's it, Chad. So that's today. And did y'all get the PHILO? Yo, I don't know if you guys got the PHILO. For real, I don't know if you guys got the PHILO. It's in your heritage. Okay? Oh, I don't think y'all feel me, man. I don't think y'all feel me. It is in your heritage to defeat defeat. And if you feel like it is not, I encourage you to go change everything, right? Go change the genetic makeup of your family. I know that sounds wild, but all I'm saying that defeat, being able to defeat defeat, oh, that's hereditary. That's part of the heritage, baby. Some of y'all say, you say my father, you know what I'm saying? You say, oh, my brother, my sister in Christ, right? That means family. That means you're part of a heritage. And I'm just saying, no weapon formed against you will prosper, my friend. Oh, they don't feel me. Defeat, defeat. Y'all don't feel me. Can they defeat, defeat? Oh, man. Oh, my gosh. Defeat, defeat, bro. Honestly, I'll be like, who is defeat, defeat? I know a guy named Defeat, defeat, actually. I swear I know an Arab dude. One of my dad's friends. I know his name is something defeat. Oh man, I didn't defeat. Yalla, defeat. He's a good guy. He's your ammu defeat. Your ammu a mid ferry and ammu defeat. Okay? Yalla. Defeat Lafitte. Oh, there go the light bulb. I win if I'm defeated. Damn. What's the plan without the work? What's a blessing without curse? Woo! They don't feel me, bro. So, Chad, I love you. God bless you. I hope you got the PHILO, man, for real. It's a heritage. I don't know. That hits different. I don't know. Heritage hits different to me. It's different knowing. I don't know. I'm just saying it's it's in you, man. I'm just saying, some of y'all, this is the family that you got to choose, and this is what you chose. Oh, I hope you feel me. Like, you know what I'm saying? This is what you chose. That's just part of the fit. There is none of it. Oh man. I hope they get me, man. But Chad, that is it. I hope you have enjoyed this very historic day. I hope you are ready for tomorrow and the next 2 days. It is going to be absolutely insane. It is going to be exciting. I hope I see you on the watch list, but either way, it's going to be a good one. So drop your thumbs up on the video. Make sure you're subscribed. And God bless you. And don't forget the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World, okay? Lead the Field, Earl Nightingale, if you're feeling really extra. Oh, yeah, Twilio's killing it. But ladies and gentlemen, as another reminder every single day, I think you already know, but why are we here? Why do we keep going? Why do we know no weapon formed against us will prosper and that defeating defeat is in our heritage? Why, baby? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Let's go, baby. God bless you, Chad. I had a lot of fun. I had a lot of fun, Chad. So I hope I see you on the watch list. We'll have fun there. It feels like Thursday, but it's only Wednesday, so it's going to be good. If you want to stick around for the raid and see a very interesting social experiment, then join the link in the chat. But that's it. I love you. Have a wonderful day, and I'll see you tonight on the watch list, and I'll see you tomorrow morning. Peace out. Oh, hey, wait, Josh! Okay, love you. Bye. Man, that one sounded so weird. You sounded like a weird Elmo. How do I turn off the YouTube? What is anybody who uses YouTube nowadays? You know what I said? We'll make it TruthTube. We could call it TruthTube. Ah, you know what I say? I say you're dumb. What was the last thing you did? Oh, okay, bye, YouTube. Bye, Elmo.